Hello everyone. So I hope your preparation for the RBWM paper is going well and you have revised the theory and you also need practice of MCQs. So here I have provided you with the most important MCQs for your RBWM paper covering all your 5 modules, module A, B, C, D and E. We'll be covering direct MCQs, case study questions, numerical questions, scenario based questions. These questions are based on your previous year paper following the same difficulty level and the high priority topics. You'll also get the correct answers along with the question. So watch the video till the end, practice these questions and join this Telegram channel. The link you can see on the screen. This is the JIB Telegram channel with Anshul and you're going to get important quizzes, polls, YouTube class updates, all the important updates and notifications. And if you come across any doubt or any query related to a question or a topic, that also you can ask me here. So watch this video completely, practice all the questions and prepare well for your RBWM paper. All the best.
Very basic question. Identify the correct statements regarding the evolution of retail banking. Retail banking begins with mass retail and evolves into the class retail banking. Private banking is a form of mass retail banking. Class retail banking involves standardized products for the general public. Mass retail banking helps build a stable funding base. So, which of the following statements are correct? A 1 and 4, B 2 and 3, C 1, 3 and 4, or D 1, 2 and 4 only. Everyone answer this question. Start answering. You have 10 seconds. Kamla is saying A 1 and 4 only. Okay. Anyone else? Anyone else wants to try? Yes, A is correct. A is the correct answer. Retail banking starts with mass retail banking. What happens in the mass retail banking? Standardized products are given to the large clientele base. We are trying to build a strong base so that we can get a stable income. These are the features of the mass retail banking. Then we move on to the class retail banking, which is focused on the high net worth individuals, the niche customer segment, and we provide them customized services. And banking, which is focused only on the high net worth individuals, is a form of, it is known as private banking, and it is a form of class retail banking, not mass retail banking. All right, no, not C. 3 is incorrect. Class retail banking involves customized products for the high net worth or the niche segment. All right. Okay, next question. Which of the following is not typically considered a para banking product? Now, this question was 1 mark. If you want, you can note down how much you are scoring. Okay, 1 mark question. If you answered it correctly, add 1. This is point 0.5. All right. Which of the following is not typically considered a para banking product offered under retail banking? Insurance product, capital market products, credit cards, treasury bills for institutional investors. A, B, C, or D? Quickly answer this question. This is point 0.5 mark. This is for point 0.5 mark. Which of the following is not considered? What are para banking products? Other products, third party products, other services apart from the deposit and asset? Yes, the correct answer is D. Treasury bills are typically offered to the institutional investors. They fall outside the scope of retail banking completely. Treasury bills are not offered by banks under retail banking. D, yes. Not B, D. Capital market products are offered. Okay, so this is point 0.5 mark. Add point 0.5 mark to your total score. Now here's a numerical question, a very simple 2 mark numerical question. A bank has net income of rupees 40 crore, bank capital of rupees 200 crores, and bank assets of rupees 2000 crores. What is its return on equity? You need to calculate the ROE. Very simple, extremely direct question. A, Manoj, which question are you answering? The numerical or the previous one? Solve this question. What is the formula for ROE? Quickly, you have, I will give you 30 seconds to answer this question. All right, 30 seconds to answer this question. B, 20%, great. How do you calculate the ROE? There are two formulae to calculate the ROE. One, you can divide the net income by the bank capital. Directly, it is given 40 crore divided by 400. Or you can use the ROA and leverage formula. Calculate the ROA first. How do you calculate the ROA? Divide the bank net income by the bank assets. So 40 crore divided by 2000 crores. Right? Yes, you will have 2% here. And then how do you calculate the leverage ratio? Leverage ratio, divide the bank assets. Bank assets are 2000 crores by the bank capital, which is 200 crores, right? So you will have 10, 10%. ROE is ROA multiplied by leverage ratio. 10 into 2, 20% is the ROE. Yes, correct, everyone. The correct answer is B, 20%. Add 2 marks to your total score. Great going. Everyone clear? Krishna, is the calculation clear? Or you can simply use the direct formula also. Net income divided by the bank capital. That will also give you the same answer. Yes? Okay, let's move on. A sudden loss of depositor confidence in a retail bank may lead to zero point 0.5 marks. Credit crunch, liquidity surplus, bank run, or interest rate hike. A sudden loss of depositor confidence in retail bank. What can be a result of a sudden loss of confidence? Credit crunch, liquidity surplus, bank run, or interest rate hike. What will be the correct answer? A, B, C, or D? Saurav, C. Yes, bank run. Bank run means all the customers at once will come to the bank. They will want to withdraw their money and leave. End the relationship. The correct answer will be C. Liquidity surplus. Liquidity surplus would happen if uh, the borrowers are not ready to take loan. That would create more liquidity, right? The bank is not able to create more assets, right? So the correct answer is C, zero point 0.5 marks, bank run. Now here's a case study question for you. A mid-sized bank launches a new retail product targeting salaried professionals. The product promises instant approval, flexible repayment, and bundled insurance. However, the fine print reveals high processing fees, mandatory cross-sell of third-party insurance, and steep penalties for delayed EMIs. Within 6 months, the bank faces backlash on social media, and the Consumer Rights NGO files a complaint with the financial regulator alleging unfair market conduct and opaque pricing. The bank's internal compliance team argues that all terms were disclosed in the loan agreement, while the marketing team insists that aggressive pricing was necessary to meet the quarterly targets. Meanwhile, the regulator has initiated a probe into the bank's retail practices. Which of the following statements best explain the regulatory and strategic risk involved that the regulator will have to consider? Multiple statement question. Multiple statements are correct. Fairness and transparency in pricing is critical to avoid consumer protection violation. Bundled products must be clearly positioned and not forced through cross-selling. Disclosure alone does not absolve banks from responsibility if pricing is exploitative. Short-term sales targets can justify aggressive pricing strategy in retail banking. Again, this is a 2-mark question. Completely conceptual based, but it will require deep thinking and understanding. These type of questions were there in your exam, right? Where some scenario is happening, some situation is happening, and the decision makers need to decide what needs to be done, or what was the issue with this particular action that was taken by the bank. Yes, try to answer this question. Which statements are correct? A, yes, correct. 1, 2, and 3. Krishna, add 2 marks to your total score. Great. Yes, short-term sales targets will not justify aggressive pricing strategies in retail banking. Why? Because in retail banking, the prices should be competitive according to the market rates, according to the restrictions imposed by the regulator. Other things are correct. The first, second, and third statements are correct, right? Fairness and transparency are critical. Bundle products should not be forced. Complete information should be there. It should not be opaque. And disclosure alone will not absolve the banks from responsibility. They need to make sure that their pricing is not exploitative. All right. So the correct answer is A, 1, 2, and 3. Okay. Meanwhile, everyone who is here, if you're liking the questions, if you're liking the session, please like the video and share the video. And try to be active. Try to comment down your answers. Even if you get it wrong, doesn't matter. We are discussing the correct answers. Okay. Which banks were pioneers in introducing the consumer banking models in India? Very simple point 5 mark question. State Bank of India and Bank of Baroda, Citibank and ICICI Bank, Standard Chartered Bank and Grindlays Bank, Indian Overseas Bank and Andhra Bank. Pioneers in introducing the consumer banking models in India. First banks to introduce. Yes, very simple. C. Hmm. Standard Chartered Bank and Grindlays Bank. If the question asks you about Indian banks, then you will go with State Bank of India and Bank of Baroda. But right now, the pioneers were the foreign banks, entry of the foreign banks, Standard Chartered Bank and Grindlays Bank. Yes, everyone correct. Add point 0.5 marks to your score. What role did Citibank play in shaping the retail banking in India? It introduced banking services focused on corporate clients. It pioneered the hybrid liability products for the small businesses, focused on institutional lending rather than personal banking, revolutionized the retail banking space with credit card products. Again, point 0.5 mark. What was the role of Citibank? What role did Citibank play? D, yes. It pioneered, it revolutionized, it introduced the credit card products. Hmm. Which public sector banks were the early players in the credit card business, in the credit card business in India? PNB and Canara Bank, BOB and Andhra Bank, ICICI Bank and HDFC Bank, Reserve Bank of India and NABARD. These are very simple questions, but they are factual. If the institute wants to increase the difficulty of your exam, even if they give, I don't know, let's say 40 tough questions or 50 tough questions, 50 will still be simple. 50 questions will be such that everyone can answer. Yes, the correct answer is B, Bank of Baroda and Andhra Bank. All right, SBI, BOB, Andhra Bank, they were the players in the retail banking, but credit card business, BOB and Andhra Bank. Okay, another case study. I want all of you to answer this case study. All of you. A private bank launches a new housing loan product with extended repayment terms up to 30 years. bundled with furniture financing and insurance. The product is aggressively marketed to the young professionals with minimum credit history. Within a year, the bank sees a surge in the loan disbursements, but also rising delinquencies among borrowers who underestimated the long-term obligations. The regulator flags concerns about over leverage and inadequate risk disclosures. Which of the following statements best explain the ethical and strategic implications of such retail banking practices? Longer repayment terms increase financial leverage but may obscure long-term affordability risk. Bundled retail loans must be transparently priced and clearly communicated to avoid consumer protection violation. Young borrowers with limited credit history are ideal targets for high value retail loans due to their future earning potential. Retail loan growth must be balanced with responsible lending and borrower education. Which of the following statements are correct regarding this situation? Another way to ask was what could be the reasons for the higher delinquencies? What could be the reason for the regulator raising the flag, raising concerns? So, what will be the correct answer? You are saying C, Prince. A is correct. Yes. 1, 2, and 4. You're saying 1, 3, and 4. How will limited credit history be beneficial? If someone has a limited credit history, it will lower their credit score, right? Someone who has a very short credit history, only including, let's say, credit cards, unsecured loans, it will hamper their score. And if the banks give them loans, there are more chances that those loans will become NPA. All right, so young borrowers with limited credit history are not ideal targets for high value retail loans. We don't know whether they will earn good in future or not. Past history is important, right? When we are talking about the credit history, the appraisal, past history is important. Rest 1, 2, and 4 is correct. Clear? Ramesh Krishna, clear? Everyone who's present here, confirm? Please give me a confirmation. If you have any doubts, any queries, then you can please ask me. What are the characteristics of the units created under the SBU approach? SBUs are autonomous divisions. They are small enough to be flexible. They are large enough to exercise control over most of the factors affecting its long-term performance. SBUs can be defined as profit centers with focus on specific product offering only. Which of these statements are correct? 1, 2, and 4, 2 and 4, 1, 2, and 3, or 1, 2, 3, and 4. About the SBU approach, this is also a 2 mark question. This is definitely a 2 mark question. Prince is saying A, why A 1, 2, and 4? Aren't SBU large enough to exercise control over most of the factors? SBU have their own chain of command, their own managers. They can decide their own price, product, process, promotion, everything. Each and every factor that would affect their long-term performance. So the correct answer should be D. All of the above statements are correct about SBU. They're independent, autonomous divisions. They are flexible. They are large enough to exercise control. They are profit centers with focus on one product, specific product offering only. All right, these are the features of SBU. Another question. Numerical. A company has a gross profit margin of 30% and sales of 1 crore 20 lakh. What is the cost of goods sold? What is the cost of goods sold? You need to calculate the COGS. 2 mark question. Easy 2 mark question. All you need to do is remember the formula for gross profit margin and gross profit as well. Yes. So what will be the correct answer? 36 lakhs, 72 lakhs, 84 lakhs, 1 crore, 8 lakhs. Take 15 or 20 seconds to answer this question and then we will discuss. How do you calculate gross profit margin? Gross profit divided by total sales. So 30% of total sales 1 crore 20 lakh, right? Sorry, this will be here. 30% is equal to gross profit divided by the total sales. Okay, so how can we write it as gross profit is equal to 30% of 1 crores 20 lakh rupees. Calculate 30%. Yes, the correct answer is C, Kamla. Great. So 30% of the total sales is 36 lakhs, but we need to calculate the cost of goods sold. Okay, how do we calculate gross profit? Gross profit is equal to sales minus cost of goods sold. Cost of goods sold would be equal to sales minus gross profit. Sales minus gross profit. So the correct answer will be 84 lakhs. Yes, correct. 30% of the total sales will give us the gross profit. Cost of goods sold is sales minus gross profit. Very simple calculations are there. Very simple. All right. Okay. Identify the correct statements regarding the adoption of SBU model in banks. 1 mark. Foreign banks universally follow the SBU model with defined business focus. Private sector banks adopted the SBU only after regulatory mandates. SBU demarcation allows modular strategy with knockdown provisions. Public sector banks have uniformly adopted the SBU model. Yes, how is the SBU model adopted by the banks? How is the SBU model adopted by the banks? That was quick. Yes, the correct answer is A, 1 and 3 only. 1 and 3 only. Foreign banks, they follow the SBU model and the SBU demarcation allows modular strategy. If any particular unit is not working according to the desired profit, it will be knocked down, it will be shut down. Private sector banks, since the very inception, have adopted the SBU approach, not after regulatory mandates. And public sector banks, they don't go with the SBU approach, they mostly go with the departmental approach. Yes, the correct answer is A, 1 and 3 only. Okay. A bank's ROE is 18% and its leverage ratio is 6. What is the return on assets? Again, 2 mark. 2 mark question. A bank's ROE, return on equity, is 18% and its leverage ratio is 6. What is its return on asset? 2.5%, 3%, 3.5%, or 4%? Even before I'm finishing the question, you're giving me the correct answer. Great. Yes, the correct answer is B. ROE is equal to ROA multiplied by leverage ratio. Take ROA here. So ROE divided by leverage ratio will be the ROA. Yes, so the correct answer will be B. Correct. 3%. Very good. 2 marks. Consider the following statements about the departmental approach in banking. It divides the organizations based on strategic business lines. It is commonly adopted by the public sector banks in India. Retail banking is treated as a focused business model. It involves functional segregation into departments like finance and marketing. 1 mark question. 1 mark question. Yes. Which of the following statements about the departmental approach are correct? About the departmental approach. What is the departmental approach? You are answering, I'm getting A, D, A. The correct answer is C. How is C? No, wait. C is not the correct answer. It does not divide the organization based on strategic business line. No, incorrect. It is commonly adopted by the public sector banks in India. Correct. It does not have retail banking as a focus business model. It involves functional segregation. Okay. C is the incorrect statement. C 1 and 3 are incorrect. The correct answer will be A 2 and 4. It is A 2 and 4. Okay, 1 and 3 are incorrect, 2 and 4 are correct. No, not B. Dividing organization strategic business line is the SBU approach. It is commonly adopted by the public sector banks. Retail banking is not treated as a focused business line. It is one of the general models adopted for banking, one of the general business model adopted for banking, and it divides the departments like finance, marketing, accounting, management, like this. Okay, so A is the correct answer. In the context, in the context of retail banking models, departmental approaches best characterized by point 0.5 mark. Modular profit centers with independent strategic control, functional segregation without standalone business focus, unified socio-economic integration across the business line, autonomous divisions aligned with management by objectives. Quickly answer this question, very easy. Very easy question. What is the correct answer? Which of the following statement best describes the departmental approach? Yes, it is functional segregation without standalone business focus. Modular profit centers are a feature of SBU. Unified socio-economic integration is a feature of the integrated model. Autonomous divisions management by objectives again is a feature of the SBU. So the correct answer is B. No, not A. Not A. All right. The correct answer is B. Case study. Simple 2 mark questions. Definitely. A nationalized bank is reviewing its retail banking strategy after a decade of aggressive expansion. The bank had capitalized on India's demographic dividend, rising middle class purchasing power, and declining interest rates to push the retail credit. However, recent internal reports show a slowdown in the treasury income, rising operational costs, and uneven credit quality across geographies. The board is now debating whether retail banking remains a sustainable growth engine or whether the bank should recalibrate towards wholesale lending and fee based income. Which of the following statements best reflect the strategic trade offs and sustainability concern? Retail banking offers volume driven growth and income diversification, especially when treasury income declines. Declining interest rates and cost of incremental deposits have historically supported retail credit expansion. Retail credit carries higher provisioning burden than corporate lending, making it less attractive in downturns. Demographic and technological factors continue to support long term retail banking growth, but operational efficiency is critical. Which statements are correct? 2 and 3, 1, 3 and 4, all 4, or 1, 2 and 4? Yes, what will be the correct answer? You are saying B, 1, 3 and 4. 1, 3. and 4. D 1, 2, and 4. Yes, the correct answer will be D 1, 2, and 4. Third statement is incorrect. Retail credit does not carry higher provisioning burden than corporate lending. It is not less attractive in downturns. Okay? Yes, D is correct. 1, 2, and 4. It offers volume driven growth, income diversification. It is profitable when treasury income declines. As compared to corporate wholesale banking, retail banking is considered profitable. It is considered stable even if the treasury income is declining. Declining interest rate and cost of incremental deposits have supported the credit expansion in retail banking side. Okay, corporate lending is less attractive in downturns because it can lead to more NPAs. The business people, business inclined individuals will apply for loans only when there is a boom in the market, right? There's expansion in the market. So in the downturn, it will be less attractive. So the correct answer is D. 1, 2, and 4 are correct. The integrated model is typically adopted by the smaller business because it enables functional specialization across departments. It allows for autonomous control over each business line. It aligns with the SBU model used by the foreign banks. It reduces the risk and enhances profitability through unified scale. Very simple. Very simple point 5 mark question. Very simple. Quickly answer. No, the correct answer is D. It reduces risk and enhances profitability. Autonomous control over each business line is the SBU approach, right, Krishna? Autonomous control over each business line is the SBU. Functional specialization is the departmental approach, right? And it reduces the risk, enhances profitability through unified scale. It believes that having a integrated business would reduce risk, so it is mostly adopted by the smaller businesses. Consider the following statements about the positioning platforms in retail banking. Again, 2 mark. Old generation private banks base their positioning on overall business plans aligned with their scale. New generation private banks aim to dominate across all banking categories. Foreign banks prioritize brand positioning over profitability. Positioning strategies vary depending on the importance attached to the business model. Yes. About positioning platform. Which statements are correct about the positioning platform? About the positioning platform. One, you are saying AAC. Old generation banks, based on their scale, new generation banks, they're aggressive, they want to be in the top slot. Positioning depends upon the importance attached. However, foreign banks, they do not have a positioning platform. They simply go by profitability. If one segment is profitable, they will enter the segment, and if it is not profitable, they will shut it down. They will exit. Okay, so third statement is incorrect. 1, 2, and 4 are correct. A is correct. Add 2 marks to your total score if you answered A. Okay. In the context of implementation models, which bank type is most likely to outsource both front end and back end operations? 1 mark. Both front end and back end operations. Public sector banks, old generation private sector banks, new generation private sector banks, or foreign banks. What is outsourcing? Not owning the technology or the resources, taking it on hire or any other mode from the providers, from the service providers. So which type of banks they outsource? both front end and back end operations. You're saying A. Public sector banks. No, public sector banks, they use their in-house resources. Then you're saying C. New generation private banks, they have a mix of in-house and outsourcing. They have a mix. They are more skewed towards outsourcing. Yes, the correct answer is D. Foreign banks, they go with a completely outsourced model. They are most likely to outsource both front end and back end operations. D is correct. Okay. Old generation private banks also have a balanced mix. They also mostly go with in-house or they will have a balanced mix. New generation private banks, they also have a mix, but they're skewed towards outsourcing, but they do not outsource all the operation. Foreign banks outsource all the operations. All right, the correct answer is D. What is a key determinant influencing the outsourcing decisions in the public sector banks? Brand positioning strategy, regulatory prescriptions, customer segmentation, asset liability management. Understand what the question is asking you. The question is not asking you the basic criteria for outsourcing decision. They're asking you the criteria for public sector banks. Why can't they outsource all of their operations? Why can't they outsource all of their operations? See, the positioning platform is determined by the different categories of banks because of their brand positioning. Yes. But the public sector banks, they use the in-house sourcing, not outsourcing because of regulatory prescription. Specifically, the question is asking you the determinant influencing the outsourcing decisions in the public sector banks. Okay, so it is a regulatory prescription, RBI. RBI has put some restrictions on the outsourcing. Even when the DSAs are appointed, the DSA should qualify an examination. They should be of a certain grade. They should have a good past history, no defaults, no customer complaints and grievances. Okay, so the correct answer is B. Regulatory prescriptions influence the outsourcing decisions by the public sector bank. Numerical question, 2 marks. A bank has bank assets of rupees 1800 crores and ROE of 9%. If its net income is 27 crores, what is its bank capital? Net income is given, ROE is given, and the bank assets are given. You need to calculate the bank capital. Calculate and let me know what is the correct answer. D 600 crores. You need to redo your calculations, I think. A 300 crores. Okay. Others? Others also? What is the formula to calculate ROE? Net income divided by the bank capital. Right? Net income divided by the bank capital. Net income is 27 crores. Okay, divided by the bank capital, which is not given, would be 9%. Okay, so 27 crores divided by 9%, you can do it to calculate the bank capital. 27 divided by 0.09 will give you the bank capital. Yes, 27 divided by 0.09, what is it? Where's the calculator? Yes, 27 divided by 0.09. 300. 300 crore will be the correct answer. 300 crore will be the bank capital. Why are you getting 500? Someone is also saying 600 crores. Why? ROE is net income divided by the bank capital and it is given 9%. right? So 27 crores divided by the bank capital is 9%. 27 crores divided by 9% will give us 300 crores. Clear? Divide 9% into absolute terms, 0.09. Yes, the correct answer is A. 300 crores rupees. Sorry, rupees 300 crores. Clear? Yes, the correct answer is A. Okay. Which of the following best describes the horizontally organized model in retail banking? 1 mark. Centralized customer database used across all products. Unified customer interface across asset and liability products. Modular product-wise structure with separate process models. Common customer information available for most products. So out of these four statements, three are about the vertically organized model and only one defines the horizontal model. Yes, the correct answer is C. It is a modular product-wise structure with separate process model. Centralized customer database across asset and liability products with common customer information. These are the features of the vertically organized model. When we have end-to-end processing, modular product-wise structure for each of the product, then it is the horizontal model. All right, then it is the horizontal model. The correct answer is C. Okay. Identify the correct statements regarding the bank-wise adoption of the process model. Again, 1 mark. Most PSBs follow the horizontally organized model. Foreign banks generally adopt a predominantly vertically organized model. Old private sector banks uniformly follow the vertically organized model. New private sector banks prefer vertically organized models with centralized customer database. Those who haven't yet liked the video, please like the video. If possible, share the video. All right, like and share everyone, and then answer this question. The adoption of the model. Which type of banks adopt which type of model? Horizontal, vertical, predominantly vertical. We are almost halfway through. By 9, I will let you free. All right. Just you need to be a bit quick. C, D, C. Okay, let us see. Public sector for banks follow the horizontally organized model. Yes, most public sector banks. Some they also follow the predominantly horizontal. So it is written most. Correct. Foreign banks generally adopt a predominantly vertically organized model. This is also true. Old private sector banks uniformly follow the vertically organized model? No, they follow the horizontal model. Old private sector banks follow the horizontal model. New private sector banks, they prefer the vertically organized model with centralized customer database. Old private sector banks, they will have a balanced mix. All right, balanced mix of horizontal and vertical. Even the new private sector banks, they prefer vertically organized model or predominantly vertically organized model. The correct answer is A, 1, 2, and 4. I did not get any correct answers. Why? Why are you saying C? 1, 3, and 4. No, I have provided you the table. Did you download the PDF? Right? In the table, it is clearly written that old private sector banks, they have a balanced mix of vertical and horizontal. Foreign banks, they go with the predominantly vertically organized model. Clear? Do you have any doubts here? Or is it clear? Is it clear? Yes, you will get the PDF of the session. I will upload it after the class. Definitely. You'll get the PDF. All the PDFs you are going to get on the platform free. This PDF will be free. Just go to the Oliveboard platform. Under the courses, you'll get the PDFs. You can download the PDF, keep it for your reference. Okay, all right. A bank has ROA of 1.5%, bank capital of 500 crore rupees. If ROE is 12%, what are its bank asset? Two mark question. What are its bank assets? ROA and bank capital and ROE is given. You need to calculate the bank asset. You need to use the leverage ratio formula here. The leverage ratio. I'm giving you 15, 20 seconds. I'm giving you 20 seconds and then we will discuss. So what is the formula for ROE? It is ROA multiplied by the leverage ratio. ROE is 12% is equal to 15% multiplied by the leverage ratio. How do you calculate the leverage ratio? Or you can take it on the other side. So leverage ratio will be is equal to 12 divided by not 15, 1.5. 12 divided by 1.5 will be the leverage ratio. So this is 8, right? This is 8. Then how do you calculate the leverage ratio? Bank asset divided by the bank capital is equal to 8. Bank asset divided by bank capital 500 is equal to 8. So the bank asset is equal to 500 crores multiplied by 8. So this will be 4,000 crores. Yes, the correct answer is B. Is everyone getting the calculation? Are you understanding the steps? The same formula we are using, we're not using anything new. The same concepts that we have studied yesterday. All right, the same concepts. We are just taking one concept to the other side, other concept to this side, like this we are doing it. All right, so it is B, 4,000 crores. What strategic implication arises from a predominantly vertically organized model in a public sector bank in Western India? In a public sector bank in Western India, it is adopting the predominantly vertically organized model. What is the strategic implication? Limited scope for product bundling, enhanced cross-selling and upselling potential, fragmented customer data across the departments, conservative retail banking positioning. Very simple question. Implication of the predominantly vertically organized model. What is the implication? The benefit of using the vertically organized model is that it enhances the cross-selling and upselling potential. All right, so if a bank is using the predominantly vertically organized model, it will enhance their potential of cross-selling and upselling. Conservative retail banking would mean they're taking the horizontal model. If you remember, we had discussed this, right? The new generation banks, they are using the vertically organized model to increase their efficiency, increase their profit. Okay, so the correct answer is B. Case study. A private bank launches a new housing loan product with extended repayment period. This we have done. Yes, this we have already done. Okay. Which bank type typically adopts a hybrid of segmented and classification based model to capture the retail potential? Which type of bank adopts a hybrid of segmented and classification based model? Regional rural banks, old generation private sector banks, new generation private sector banks, or cooperative banks. So this classification of models also we had seen. This classification also we had seen. The segmented segmentation based approach, classification based approach, and the geography approach. So a hybrid of segmentation and classification. No, it is the new generation private sector banks. This question is not that probable. It is very simple, just a fact. All right. Hybrid of segmented and classification based model to capture the retail potential is adopted by the new generation private banks. What is a key reason retail bank is considered a good avenue for fund deployment? High value corporate lending with long tenors, low operational costs due to centralized processing, exclusive focus on third party product distribution, broad customer base with diversified credit risk. What is the advantage of retail banking? Why is it considered advantageous for fund deployment? Yes, what should be the correct answer? What should be the correct answer? The correct answer is D. Yes, correct. Broad customer base with diversified credit risk. Consider the following statements about the term deposit innovations taken by the banks. Monthly, quarterly, cumulative interest options are standard across the banks. Unitized fixed deposits allow partial withdrawal without loss of interest. Fixed deposits with overdraft facilities function as the cash credit accounts. Group life and health cover are routinely bundled with the term deposits. Which of the above statements are correct? About the term deposit innovations that are implemented by the banks. Term deposit innovations. Yes, what should be the correct answer? You are saying C, 1, 3, and 4. Okay. Others also please answer. A, 1, 2, and 3. All right. Prabhakar, Kamla, everyone. So the correct answer is A, 1, 2, and 3. Group life and health cover are not routinely bundled. They are provided to the customer only on demand. If the customer wants to avail this product, then the bundled product will be provided. Otherwise, not. It is not compulsory. It is not mandatory for the customer to avail a group life and health cover along with the term deposit. It is not routinely bundled. All right. However, all the banks are offering overdraft facility, partial withdrawal without loss of interest, and the interest options are also being offered. So the correct answer is A, not C. Okay, not C. Third statement is not correct, and second statement is correct. Sorry, fourth statement is not correct, and second statement is correct. All right. A bank reports a net interest income of rupees 60 crores and average total assets of rupees 1200 crores. If its net interest margin is 5%, what is the interest paid on liabilities, assuming that the interest received on assets is 120 crore rupees? A bit lengthy. This question is a bit lengthy, but it is not tough. You need to remember the formula for the net interest margin and the net interest income. All right. So I'm giving you 30 seconds to solve. 30 seconds. This is a 2 mark question. 30 seconds to solve this question. quickly answer so that we can finish the session by 9. So how do we calculate the net interest margin? It is the net interest income divided by the average total assets, ATA, right? So this will be 60 crores divided by 1200 crores, 60 crore. Okay? No, we need to calculate the percentage, right? 5%, sorry, not 60 crores. It is 5%. Hmm. It is 5%. We have the net interest margin. Now, how do you calculate the net interest income? Net interest income, the interest which is received by the banks, earned by the banks, minus the interest which is paid on the various liabilities, borrowings, and deposit, right? Interest paid. So we have net interest income is given to us already 60 crores. 60 crores is equal to earned income is 120 crore minus paid income. You need to calculate the interest paid, right? So the interest paid will be 120 crores minus 60 crores. The correct answer should be A, 60 crores, right? Yes, A. Is everyone following through? Some of you are also answering 40 crores. Why? You had to calculate the interest paid on, what is the interest paid on liabilities? So it is what? It is 60 crores. All right? 60 crores. Everyone. Clear? If it is clear, then give me a yes, a thumbs up, a confirmation so that we can move ahead to the next question. Is it clear or not? Okay. Next. Consider the following statements about the retail banking process models. Centralized processing centers handle all retail loans sourced from branches. Regional hubs process loans for specific geographic clusters. Standalone branch level processing is used by the foreign banks. Blended models combined centralized and regional processing for the different products. How is the process model adopted by the banks? This was also given in the table in yesterday's class. The table included this information. The process model. Yes. Quickly answer this question, everyone. What happens in the centralized processing model? In the CRPC model, there is a centralized processing center which handles all the retail loans sourced from all the branches. True. Regional hubs are for specific geographic clusters. This is also true. Standalone branch model, however, is not used by foreign banks. Foreign banks, they typically go with the CRPCs because they do not have enough resources at each and every branch. So the third statement will be incorrect. Blended models combine centralized and regional processing for different products. For some products, the regional model will be used. For other products, the centralized will be used. So the correct answer should be B, 1, 2, and 4. Foreign banks, they go with the centralized retail processing, not with the standalone model. Public sector banks, they go with the standalone model. All right. Are you all tired? I'm not getting answers. Why? Try to answer the questions. Which pricing strategy is least adopted by the PSBs compared to the private and foreign banks? Standalone pricing, concessional pricing based on volume, price bundling across the products, rebates on the repayment completion. 1 mark. Which model is least preferred by the public sector banks as compared to the private sector and foreign banks? Standalone pricing obviously is taken by the public sector banks. When someone is availing the products on volume, the banks also provide concessional pricing. They also give rebates on repayment completion under various government policies, interest subvention. For example, the SSGs, they get rebate if they make a prompt payment. Even the women entrepreneurs, they get rebate. However, price bundling across product is a model used by the private and foreign banks, but usually not by the public sector banks. So not D. The correct answer will be C. It is adopted, but it is least adopted. Least adopted. Other three methods are more popular with the public sector banks. Okay. Regarding the horizontal and vertical database organization, horizontal organization implies product-wise standalone data. Vertical organization implies customer-wise integrated data. Vertical models support better cross-product marketing. Horizontal models are preferred for centralized processing. Which statements are correct? 1, 2, and 3, 2, 3, and 4, 1, 3, and 4, or all of the above? Yes. What should be the correct answer? D. Are you sure? Look at the fourth statement. Horizontal model is preferred for centralized processing. What happens in centralized processing? Their data should be shared. In centralized processing, data should be shared across the product, across the vertical, across the processes. Yes, the correct answer will be A. The correct answer is A, 1, 2, and 3. Horizontal models are preferred for stand-alone processing, not for centralized. You want me to start the morning class a little early? Okay, I will do that. I will inform you about the time. Okay? Yes, the correct answer is A. Which of the following statements correctly distinguishes the liability side of retail versus corporate banking? Retail deposits are high cost due to frequent withdrawals. Corporate deposits are low cost due to bulk inflows. Corporate deposits are exempt from interest rate negotiations. Retail deposits follow card rates and are low cost. Which of the following statements are correct? Which of the following statements are correct? About the difference between the liability side of retail versus corporate banking. The liability side. D. Correct. Great. Yes. Retail deposits follow the card rates and are low cost. Corporate deposits, the volume of deposits is more, the quantum of deposits is more, so the cost incurred to maintain those deposits will also be more as compared to retail banking. All right. So the correct answer will be D. Retail deposits follow card rates and are low cost. Okay. Regarding the risk and returns in retail versus corporate banking, NPAs in retail banking are more damaging due to volume. Retail banking offers higher returns due to wider spreads. Corporate banking has lower returns due to rate negotiations. NPAs in corporate banking are more impactful due to the ticket size. Which statements are correct about the risk and returns? 1, 2, and 4, 2, 3, and 4, 1, 3, and 4, or all of the above? Yes, which statements are correct? Which statements are correct? About the risks and returns. B, 2, 3, and 4. No, not D. The correct answer is B, 2, 3, and 4. NPAs are not more damaging. The ticket size of retail loans are low. NPAs are more damaging in the corporate side. Right? Yes, the correct answer is B. The retail banking offers higher returns due to wider spread. Okay, the customers are not able to bargain. There is no bargaining power given to the customers. Corporate banking has lower returns because the customers can negotiate for a lower rate of return. NPAs in corporate banking are more impactful due to the higher ticket size. So the correct answer is B. When was the Banking Regulation Act 1949 initially enacted under what name? The Banking Act 1934, Banking Companies Act 1949, Reserve Bank Governance Act of 1945, the Public Banking Supervision Act of 1951. Very simple. Yes, it was the Banking Companies Act of 1949. Then in 1966, the name was changed to Banking Regulation Act 1949. Why? Because now the cooperative banks were also under the purview. Okay, so the correct answer is B. The three presidential banks of India were located in. The three presidential banks that were merged to form the Imperial Bank that was later on nationalized into SBI. They were located in Delhi, Mumbai, Hyderabad, Kolkata, Mumbai, Chennai, Ahmedabad, Kolkata, Bangalore, Mumbai, Pune, Chennai. Yes. Calcutta, Bombay, Madras, or Calcutta, Bombay, Chennai. The three presidential banks were located, they were merged to form the Imperial Bank, later on nationalized to form the SBI. Okay. A firm reports operating profit of 25 lakh rupees and operating expenses of 15 lakh rupees. What was the gross profit? Very simple question, but it will give you 2 marks. Easy 2 marks. Operating profit is given, operating expenses are given. How do you calculate the gross profit? How do you calculate the gross profit? Is it 35 lakh, 40 lakh, 45 lakhs, or 50 lakh rupees? So, we know the formula for operating profit. It is gross profit minus the operating expenses, right? So, how do we calculate it? Gross profit will be equal to operating profit plus the operating expenses. So, 25 lakhs plus 15 lakhs will be 40 lakh. Yes, the correct answer will be B, 40 lakh rupees. It is B. Alright, 40 lakh rupees will be the gross profit. Very simple question. Which type of profit reflects earnings before taxes and other non-operating expenses? Before taxes and non-operating expenses. Net profits, gross profit, operating profit, or EBITDA. Which of the following is correct? Which type of profit reflects earnings before taxes and other non-operating expenses? Why gross profit? Gross profit is the total sales minus cost of goods sold. Operating profit is the gross profit minus, sorry, minus the operating expenses. Yes, the correct answer should be C, operating profit. Operating profit, right? Before taxes and non-operating expenses. Non-operating expenses are what? Interest. Before you deduct the taxes and non-operating expenses, you have the operating profit, not the gross profit. C will be correct. Hmm. C. Okay. Consider the following statements. Profitability compares profit with revenue and costs. Profitability helps assess business efficiency and success. Profit is the money earned before accounting for expenses. Profitability can be used to compare the performance across time periods and competitors. What is the correct answer? Which of the following statements are correct about profit and profitability? 1, 2, and 4, 2, 3, and 4, 1, 3, and 4, or all of the above? Yes, what should be the correct answer? A, A, 1, 2, and 4, yes, correct. Profit is the money earned after accounting for expenses. Total revenue minus total expenditure is the profit, right? So A is correct. No, not all of the above. Third statement is incorrect. All right, third statement is incorrect. 1, 2, and 4. Profitability is a relative measure. We compare the profits with revenue and cost. It helps us assess the efficiency and success, and it can be used to compare the performance. Okay. This financial metric evaluates a company's efficiency in generating profit relative to its expenses rather than just measuring the total revenue minus costs. It provides a broader assessment of a company's financial health. Which concept does this describe? Profitability, revenue growth, net profit, or cash flow management? Very simple question. Very simple. This metric evaluates a company's efficiency in generating profit. Which metric are we talking about? We are talking about the profitability. All right. Yes, the correct answer is A. Numerical. A bank earns rupees 150 crores in interest on assets and pays rupees 90 crores on liabilities. What is the interest rate spread? Is if the average interest rate on assets is 7.5%. You need to calculate the interest rate spread. Interest rate spread. Yes, solve this question. How do you calculate the interest spread? The formula, it is average interest earned on asset minus the average interest paid on liabilities. This is the interest rate spread, right? Can you use this formula and calculate? Then how do you calculate the net interest income? Earnings and liabilities are given. So the net interest income is equal to 150 crores minus 90 crores. So that will be 60 crores. All right. If we assume, because we are already given the average interest on assets 7.5%, let us assume the average interest on liabilities as X. So 7.5% minus X will be what? It will be the spread. Okay? Yes? So actually we can also use the trial and error method here. Okay? 7.5% minus X is equal to spread. Is the question missing some information? Actually, the question is incomplete. Let us skip this question for right now. We will discuss it tomorrow. We will discuss it tomorrow. This profitability metric measures how efficiently a company utilizes its assets to generate earnings. Which metric is it? The return on assets, return on equity, net profit margin, or operating profit ratio. Which profitability metric measures how efficiently a company is utilizing its assets? Which metric are we talking about? Which metric are we talking about? Yes, it is the return on assets. Very simple, right? Return on assets measures the how efficiently a company is utilizing its asset. A is correct. A bank's return on equity measures the efficiency of asset utilization in generating revenue, the percentage return earned by shareholders on their investment, the ability of a bank to maintain liquidity reserves, the overall revenue generated from the lending activities. What does the return on equity indicate? What does the return on equity indicate? No, the efficiency of asset utilization, we saw it as ROA. You need to answer about ROE, return on equity. Equity is what? It is a shareholder's investment. So the percentage return earned on the shareholder's investment. The correct answer will be B. No, not the overall revenue generated from lending activities. No. The percentage return earned by the shareholders on their investment. All right. The loan loss reserves are critical for maintaining financial stability in banks. Which factors impact the adequacy of these loan loss reserves? Expected default rates on outstanding loans, regulatory requirements on capital allocation, the bank's profitability metrics such as ROA and ROE, market fluctuations affecting the valuation of loan assets. Banks, they need to maintain the loan loss reserves. Which factors are going to impact the loan loss reserves? Which factors are going to impact? 1 and 2, 2 and 4, 1, 2 and 4, or 3 and 4? Expected default rates on outstanding loans is true. Regulatory requirements on capital allocation that are imposed by RBI are also true. But the bank profitability metrics are not going to impact the loan loss reserves, right? So that will not be correct. So the correct answer should be 1, 2, and 4. The third statement is incorrect. C, option C, 1, 2, and 4 are correct. Clear, everyone? 1, 2, and 4 is correct. 1, 2, and 4. Okay. A bank's ROA is 2.5%. The average total assets are rupees 2000 crores. If fee income is rupees 30 crore and the operating costs are rupees 80 crore, what is the net interest income? You need to calculate the net interest income. Net interest income. Which formula can be used here? ROA is given, so obviously you will be using ROA, right? ROA is the net income divided by the average total assets, right? Both of these things are given to you. So 2.5% is equal to ROA is given 2.5% is equal to, no wait, your net income is not given here. No? Net interest income you need to calculate. So 2.5% of 2000 crores will be your net income because 50 crores is given. Okay. The average total assets is given 2000 crores. So 2.5% of 2000 crores will be what? It will be 50 crores, right? Net income will be 50 crores. Now net income How do you calculate the net income? It is the fee income which is given 30 crores plus the net income that you need to calculate. Let's say it is X minus the operating cost. Operating cost is also given to you 80 crores. All right. So it will be 50 crores which we calculated plus the fee income and minus the operating cost. So the correct answer should be A, 100 crore rupees, 100 crores. ROA is equal to net income divided by the average total assets. Net income will be 2.5% of rupees 2000 crores. It will be rupees 50 crores. So net income is equal to fee income plus net interest income minus operating cost, right? Net income we have already calculated 50 crores is equal to fee income plus the net interest income minus the operating cost. Take the net interest income on this side. 50 crores plus 80 crores minus 30 crores, it will be rupees 100 crores. All right, this is what we had to calculate. The net interest income is rupees 100 crores. Clear? Does anyone have any doubt? Any doubt? Any doubts here or is it clear? Clear, right? Okay. The capital adequacy ratio ensures banks maintain enough capital reserves relative to their risk-weighted assets. Which regulatory ratio in India is directly related to the CAR compliance? Is it the statutory liquidity ratio, cash reserve ratio, loan to deposit ratio? Option D, Tier 1 and Tier 2 capital ratios. Which ratio is directly related to the CAR compliance? On which ratio the CAR compliance is based? Basically, this is what the question is asking us. So it is not based on SLR, CRR or the loan to deposit ratio. It is based on the Tier 1 and Tier 2 capital ratios, right? Tier 1 and Tier 2 capital ratios, the buffer that has to be maintained. All right? The buffer that has to be maintained, right? To absorb the losses, Tier 1, highest quality. Core capital absorb losses without the bank ceasing operations. Tier 2 is the supplementary capital, the reserves, subordinated debt, and it absorbs the winding up or the liquidation scenario. Okay? So the correct answer will be D. Hmm. The financial metric measures how efficiently a bank earns income on its total assets, including fee income and the net interest income. This we have already done, right? How well the bank is earning income on its asset. Is it ROE, ROA, net interest margin, or liquidity ratio? So it is the ROA, the return on assets. Okay. When bank seeks to expand profitability without increasing their own capital, they rely on external funding sources only. External funding sources means debt. Which financial strategy does this describe? Very important question. I want all of you to answer this. The bank wants to increase and expand their profitability, but they do not want to increase their own capital. Then they rely on the funding sources. This financial strategy is known as liquidity management, cost to income ratio optimization, financial leverage, or asset securitization. Yes. Which metric, financial metric, are we talking about? We have just 4 5 questions more and then we will end the session. Quickly answer this question. So here we are talking about the leverage ratio, right? The leverage ratio. The bank is increasing its profitability by increasing the liabilities. They're using liabilities to fund their assets, right? So it is financial asset securitization. Why? Asset securitization is the mortgage concept. Asset securitization is the mortgage, surfacey concept, not related to profitability. Okay, so the correct answer is leverage. We are talking about the leverage ratio. A bank has net interest income of rupees 80 crores, fee income of rupees 20 crores, operating costs of rupees 60 crores. If the average total assets is 1000 crore rupees, what is the return on asset? Very simple question. All you need to do is calculate the net income divided by the average total assets. You will have the ROA, right? So how do you calculate the net income? 80 crores plus 20 crores minus 60 crores, right? Net interest income plus fee income minus operating costs. So this is 40 crore rupees. Divide 40 crores by 1000 crores, which is the average total asset. So this will be what? This will be 4%. Okay? ROA will be 4%. I'm answering it quickly because we do not have much time left. I know you all would have to leave for office. So, clear? See, if you have any doubt, any query, if you don't understand the explanation, the calculation, then please let me know. Okay? So, this is the formula for net income and ROA. The average total asset is already given. Given the complex interplay between asset yields and funding cost, which of the following best defines the interest rate spread in the banking operations? The variance between weighted average interest rate earned on income generating asset and the weighted average cost of funding those assets. The total net interest income expressed as a percentage of the total liabilities reflecting the cost efficiency. The proportion of mandatory reserves maintained with the central bank compared to the net bank capital, the differential between the total volume of deposits mobilized and the loan disbursement ratio indicating liquidity management. Everyone answer this question. The interplay between asset yields and funding cost. Asset yields and funding cost. So it is the variance between the weighted average interest rate earned on the income generating asset and the weighted average cost of funding those assets. Okay, so the asset returns over cost. This is what we are talking about since the very beginning about ROA and ROE, right? So the weighted average interest rate earned on the income generating assets and the cost for funding those assets. A bank's capital structure impacts its stability and profitability. Which of the following factors influence the leverage decision? Whether the bank will increase or decrease its leverage? Yes, Krishna, correct. The answer was A. Now answer this question. Capital adequacy requirements imposed by regulators will impact the leverage decision. The expected risk exposure from the loan defaults, the ability to generate higher returns on assets, reduction in the overall liabilities to enhance the liquidity. When we are talking about leverage, increasing leverage, the meaning of increasing leverage is using more liabilities to fund for the assets rather than using the bank capital, right? Using liabilities to fund the assets than using the own capital. So the correct answer should be A. Reduction in overall liability to enhance liquidity? No. right? The banks, if they're using leverage, it means they are using more liabilities to enhance their liquidity. So the correct answer will be A. A bank's leverage ratio is a financial measure of, very simple, the proportion of a bank's liabilities to its total assets, the ratio of the bank capital to the total assets, the percentage of reserves held by the bank compared to its deposits, the differential between the interest paid on liabilities and the interest earned on assets. What is the measure of leverage ratio? The financial measure. If you remember the formula of leverage ratio, it is the bank capital divided by the total assets, the bank asset divided by the bank capital, the ratio of bank capital to total assets, whatever. So the correct answer will be B. Okay, the ratio of the bank capital to the total assets. All right. Yes. Two more numerical questions are left for this session. A company reports 1 crores 50 lakhs in sales, rupees 90 lakhs as the cost of goods sold. Operating expenses are given, interest is given, taxes is given. What is the net profit margin? So this is a very simple, direct question. First, you need to calculate the gross profit, then you need to calculate the operating profit, then you need to calculate the net profit, and finally, you need to calculate the net profit margin. So, gross profit is total sales minus cost of goods sold. Operating profit is gross profit minus operating expenses. Net profit is operating expenses minus taxes plus interest. And net profit margin is net profit divided by the total sales. All right. So 1 crores 50 lakhs minus 90 lakhs, we have 60, right? We will just write it down for easier calculation. 60. Operating profit is 60 minus operating expenses are 30. So 30. All right. Net profit will be 5 lakh and 10 lakhs is given, right? Right. So 15. 30 minus 15. 15 is left with us. Okay. And simply how to calculate the net profit margin. Divide the net profit by the total sales. Yes, the correct answer will be 10%. Step by step, easy, basic calculation. The correct answer is A, 10%. Absolutely. Last question for today. A company has a net profit margin of 12%. If interest and taxes together amount to 10 lakh rupees, what is the operating profit? Again, very simple. First, from the net profit margin, you can calculate the net profit, right? 2 crores is given the sales. Net profit margin is equal to net profit divided by the total sales. So net profit will be 12% of the total sales which is given. 12% of 2 crore rupees you can calculate. From that, you can calculate the operating profit. Operating profit will be net profit plus the interest and taxes. Okay, because net profit is what? The formula for net profit is operating profit minus taxes plus interest. So operating profit will be net profit plus taxes plus interest. Yes, following through? Huh. So the correct answer is C, 34 lakh rupees. Okay, net profit 12% of rupees 2 crores. Operating profit is net profit plus interest plus taxes 24 lakhs plus 10 lakh rupees. So the correct answer is 34 lakh rupees. A scenario is given to you. A bank develops a senior citizen wellness FD offering high interest and bundled checkups. Business analysis shows strong profitability and cross-sell potential. However, During test marketing, customers express confusion about the redemption rules and health partner tie-ups. The product sees low uptake despite financial viability. Which of the following statements best capture the disconnect between business analysis and market readiness? This is from the product development process, right? The constraints in product development process. Business analysis must include customer comprehension and perceived value, not just profitability. Test marketing revealed that the product concept lacked clarity despite strong financials. Market analysis should have preceded business analysis to avoid the wasted effort. A product can be financially viable but fail commercially if customer communication is weak. So, which of the following statements are correct according to this scenario? Again, this is a 2 mark question. All your case studies, all the scenarios, everything, these are 2 mark questions, easy 2 mark questions. So, which statements are correct here? 1, 2, and 4, 2 and 3, 1, 3, and 4, or all 4? You are saying B, 2 and 3. Okay. Anyone else? Others also, please answer. What will be the correct answer according to you? What should be the correct answer? Okay, let us go through the statements one by one. The first statement is correct. Business analysis, if done only on the basis of profitability, without taking into account whether the customer is understanding the product, they're understanding the value, it won't be viable, right? So the business analysis should also include the customer's perceivedness. So the first statement is correct. Second statement, test marketing revealed that the product lacked clarity. Yes, even though it had strong financials, but the customers did not understand what are the redemption rules. How can the health partner, how can they get benefits if they avail the FD in a partnership? So this statement is also true. However, first we do business analysis whether the product is financially viable for us, and then we do the market analysis. All right, so this statement will be incorrect and the fourth will be correct, although it is financially viable. But if the customer does not understand the product, if the customer does not have the clarity, if promotion is not there, if communication is not there, customer won't avail the product. All right, so sometimes the ideation stage in the product development would be attractive, but it would be difficult to convert the idea as a product, right? This is the reason. So the correct answer should be A, 1, 2, and 4. Only one correct answer. Sharmila, welcome back. Good to see you here in the live class. I hope your preparation is going well. Okay, so the correct answer here will be A. The third statement is incorrect. 1, 2, and 4 is correct. Which of the following combinations represents products aligned with the social needs? So we have studied the Maslow's hierarchy of needs, right? The Maslow's hierarchy. Here on the second stage, we have the physiological needs, social needs, the love and no, it is health and safety. Then we had the social needs in the third stage, self-esteem and self-actualization. So which products are there in the social needs? Core savings account, personal accident cover, consumer loans, health policies for family, pension plans, senior citizen deposits, fixed deposits, tax planning instruments. B, yes, great. The correct answer is B. So when we are talking about the Maslow's hierarchy, the 5 stages, Abraham Maslow gave the theory of motivation. According to the theory, people they're motivated to achieve certain needs in the different stages of their life. They start with the basic physiological needs, food, water, right? Then once they have the basic needs, they move towards the safety needs, health, a good living condition. Then they have the social needs, right? Social needs, love and belongingness. Then self-esteem, about self-worth. Now, when we are talking about the social needs in case of banking, they would be consumer loans, personal loans, home loans, car loans, loans for professional development, then health policies for self and family, ULIPs, SIPs, all of these are the social needs. All right, so the correct answer is B. Identify the correct statement about Maslow's theory and its application in the financial services. The longer a need is denied, the stronger motivation to fulfill it becomes. Banks can use Maslow's hierarchy to align products with the customer's life stages. Self actualization needs are typically addressed early in the customer's financial journey. Mutual fund SIPs, ULIPs cater to the esteem needs. Which statements are correct about the Maslow's hierarchy? 1 and 2 only, 1, 2 and 4, 2 and 3, or all of the above? This will also be a 2 mark question actually. The previous could be 1 mark, this is 2 mark. So keep adding your score. B, 1, 2, and 4. 1, 2, and 4. D, all of the above. Okay. Anyone else? B, 1, 2, and 4. Okay. First statement is true. Longer a need is denied, stronger the motivation. If someone stops you from achieving your goal, you will be frustrated. Your drive would be high to achieve it, to check why am I not able to achieve my goal even though I'm putting so much effort, right? Second, banks can definitely use Maslow's hierarchy to align the products. Yes, however, the statement 3 is incorrect. Self actualization are the highest needs, achieving one's full potential, fully satisfied, including the creative needs. And statement 4 is also incorrect because mutual fund SIPs, ULIPs, they come under the social needs, right? They come under the social needs. Esteem needs are what? Esteem needs are special term deposit products, term insurance products, second housing loan, home improvement loan, home decor loan. All right, so these are the esteem needs. Yesterday, yesterday in the evening, we did half of the module B. Remaining module B we'll be doing today or tomorrow at 7 p.m. on the paid platform, on the Oliveboard platform. All right, we have already started with our module B. So the correct answer is A. Yes, the correct answer is A. Kamla Sharmala, great. Okay, A is the correct answer. 1 and 2 only, 3 and 4 are incorrect. Okay, yes. Which of the following statements are true about the strategic use of PLC in banking? Banks should design the product life cycle, PLC's product life cycle. Banks should design products to remain in the growth stage indefinitely. Maturity stage is ideal for maximizing the profits and the customer base. Product death can be delayed through value addition, and the PLC model helps bank align product development with the market dynamics. So if you remember, this was the product life cycle on the x-axis and on the y-axis, time and sales. So we had 4 stages. Stage 1 introduction, stage 2 growth, stage 3 maturity, and stage 4 decline, right? Introduction stage, growth stage, maturity stage, decline. Decline can lead to the final stage, which is death, that we need to avoid. In the introduction stage, when the product is newly introduced, the sales is low. It will take time for the product to occupy the minds of the customer. So the profits will be less. The total revenue will be less than the total expenditure. You keep answering. I'm just explaining the concept to you. You keep answering. Comment down your answers. In the growth stage, we will have the break even point where the product starts generating profit, right? In this stage, the profit could be more than the expenditure in the growth stage. Okay. In the maturity stage, the sales is maximum. This is the stability stage. This is the stability stage. Maximum sales is there in the maturity. Okay. And then we enter the decline stage. In the decline stage, there is saturation. Because of saturation, there is staleness. And if we do not attend to the decline stage properly, it can lead to product death. How can we attend to the decline stage properly? By giving some add-ons, revamping our product, revitalizing our product. Okay, so the first statement will be incorrect. Why? Because the banks, they will try to keep their product for the longest in the maturity stage, in the third stage. First statement will be incorrect. Second, maturity stage is ideal for maximizing profit, product that can be delayed through value addition, and the model helps bank align their product development with market dynamics. So C should be correct. 2, 3, and 4. Yes, great, everyone. C is correct. Okay, we will try to keep our product longest in the maturity stage. We will try to avoid it slipping into the decline or the death stage. All right. I hope you remember all the features of the product life cycle. It is not necessary that every product goes through all the cycles in a sequence. Some products might have a early death, other products might have a early boom. Okay, depends upon the implementation strategy, right? Okay. Consider the following statements regarding the basic saving bank deposit account. It is available to all customers as a normal banking service. Banks may charge ATM withdrawals with beyond 4 per month. It requires a minimum balance of rupees 500. Non-operation attracts penalty charges. The basic savings bank deposit account. Which of the following statements are correct? Which of the following statements are correct? Yes, what will be the correct answer, everyone? What should be the correct answer? Meanwhile, everyone who's present here, please like the video, share the video to the maximum. Just like and share the video. D, one only. Yes, the correct answer is D. Great. The correct answer is D. It is available to all the customers as a normal banking service. However, they allow only 4 withdrawals during a month, including ATM withdrawals. It requires zero minimum balance. It is a revamped no frills account, zero minimum balance. And non-operation does not attract any penalty charge. The customer can get the account operative again by simple formalities by giving a reason why they did not operate it for the time period. Okay, so it is a normal banking service. There's no requirement of minimum balance. The service is available, deposit, withdrawal, ATMs, credit of money, electronic payment, everything. There's no limit on the number of deposits that can be made in a month. However, a maximum of 4 withdrawals in a month, including ATM withdrawals, are allowed. Beyond 4, even with any charge, ATM withdrawals are not allowed. All right. The facilities are provided without any charges. No charge will be levied on the non-operation or activation of the inoperative accounts. All right. The KYC, AML will be done. Holders will be eligible to open. However, a very important point. If you have a BSBDA account, you cannot open any other saving bank deposit account in the bank. And if you have already have a savings bank account and you get the basic savings account, within 30 days you need to close down your savings account. All right. So these are the features of the BSBDA. Okay. Identify the correct statements about the small accounts. Foreign remittances are allowed only after full KYC compliance. Small accounts can be opened at any bank branch. Withdrawals and transfers in a month must not exceed rupees 10,000. Small accounts are valid for 24 months without any documentation. Which statements are correct about the small account? So we studied the BSBDA account. If the basic account is opened on the basis of simplified KYC norms, then the account would be treated as a small account. Okay, so a basic savings account opened with simplified KYC norm is a small account. So if any low risk individual customer, they do not possess the OVD notified by the government, or they do not have the documents applicable for the simplified procedure, then the small accounts may be opened for that individual. Always for a low risk individual. So how do we take the identification? Simply on the basis of a self-attested photograph, and a fixation of thumb print or signature will be taken. Okay. Now, what are the features of the savings small account? Aggregate credit in the financial year. Remember these points. When we talk about the credit, it will be financial year, will not exceed rupees 1 lakh. When we are talking about the aggregate of all withdrawals and transfers in a month, withdrawals are done monthly. They will not exceed rupees 10,000. So this statement, third statement is true. Okay. Balance at any point of time. Balance at any point of time will not exceed rupees 50,000. All right, will not exceed rupees 50,000. Then the foreign remittances cannot be credited without completing the normal KYC formalities. Small accounts are initially valid for a 12-month period, right? And it can be extended for further 12 months if the proof is there that the person has applied for the OVD. Maximum 24 months, 12 month plus 12 month, and after 12 months, if the OVD is not received, after the complete 24 months, the transactions will be blocked. These are the features of the small account. So yes, the correct answer will be A. 1 and 3. 1 and 3. I did not get the correct answer from anyone. Why? 1 and 3. Foreign remittances will be allowed only after full compliance. True. Small accounts cannot be opened at any bank branch. It will be opened only at the CBS linked bank, core banking solution linked bank branches of the banks, where it is possible to manually monitor the fulfillment of the conditions. All right. So the first statement is correct, second statement is incorrect. Withdrawals and transfers must not exceed rupees 10k in a month. Small accounts are not valid for 24 months without any documentation. Without any documentation, only for 12 months it is allowed. Further 12 months is given if they provide a proof that they have applied for the OVD. All right. So remember these points. I did not get the correct answer from anyone. Now clear? The small account is clear now. All the features are here. Clear? Give me a confirmation. Both the topics, the basic savings account and the small account, both are important. All right? Okay. What happens to a matured term deposit whose proceeds remain unpaid? It earns no interest. It earns interest at the original term deposit rate. It earns interest at the savings deposit rate. It is automatically reinvested. Yes, what will happen to a matured term deposit and the proceeds remain unpaid, unclaimed with the bank? Right. So it will earn interest at the savings deposit rate. Correct. Correct, correct, correct. Everyone, great. So I don't think this needs any explanation. Identify the correct statements about the combination deposit products. They combine features of term and savings deposit. Interest is paid only on the remaining balance after the partial withdrawal. Each remittance is treated as a special separate term deposit. Term deposit receipts are transferable by endorsement. Which statements are correct about the combination deposit products? Quickly, 10 seconds to answer this question. 10 seconds. So, as the name suggests, the banks offers a combination of the two types of deposits in a single term deposit. So, the customer will have the option of putting separate amounts at their will. A passbook will be issued for this particular feature. Remittances will be treated as a separate term deposit and interest will be given on a cumulative basis. This could be a combination deposit, right? However, a time deposit is not a negotiable instrument. It cannot be transferred by endorsement. Okay, it cannot be transferred by endorsement. So the correct answer should be 1 and 3. Interest is not paid on the remaining balance after partial withdrawal. No, it is paid on the cumulative balance. The interest is paid. All right. The interest is paid on the cumulative balance. And the fourth statement is also incorrect. Okay, the fourth statement is incorrect because the term deposits are not negotiable instrument. It cannot be endorsed. All right. Okay. A bank launches a tech-driven investment product combining a savings account with a robo-advisory and AI-based portfolio tracking. The product gains rapid traction among the digitally savvy users. However, within 18 months, newer fintech platforms offer superior analytics and real-time trading features. Customer migration begins. Customer migration means the customers from the bank are shifting to the fintech, and the bank's product team realizes that offering is becoming obsolete despite initial success. The leadership team must now decide whether to sunset the product or revamp it with the new features, whether to shut down the product, take it out of the market, or revitalize it by adding new features. Which of the following statements best explain the life cycle risk and strategic option? Fast changing technology can shorten the product life cycle, especially in digital banking. Product obsolescence may occur even with strong initial market research and uptake. Revitalization through value addition can delay the decline and reposition the product. Core banking products are equally vulnerable to obsolescence and require frequent upgrades. Which of the following statements are correct? Read it very carefully. It is a very simple question. Yes, what should be the correct answer? D 1, 2, and 3. Correct. 1, 2, and 3 is correct. Core banking products are the generic products, undifferentiated products. They do not require updates like a savings bank account. What update can be made in a savings bank account? So, core banking does not require any frequent updates. It is not vulnerable to obsolescence. Obsolescence means it is not vulnerable to technology changes. However, the augmented product, the expected products, they might go out of the market due to other competitors offering better products. No, you answered correctly. D was the correct answer. Okay, D was the correct answer. 1, 2, and 3. Right? So 1, 2, and 3 are correct, and the fourth statement is incorrect. The core banking products are not vulnerable to obsolescence and they do not require frequent updates. So we have studied about the four categories of products, right? We have the core product, which is the generic product, the basic product, right? Like a savings bank account, current account, term deposit. Okay, expected product is the minimal purchase condition. The customer expects the bank to provide it along with the core product, right? For example, a checkbook, a passbook, a debit card, and in today's time, even ATM facility and mobile banking. Augmented product is the add-on benefit that would enrich and improve the core banking product, like facility of collecting the checks of the customer at their doorstep. Those are the augmented product. Potential product is the future product, something that will have demand in the future. For example, cardless cash withdrawal from the ATM. All right, so the correct answer is D. Consider the following statements about the letters of credit. Letters of credit is a fund-based product involving immediate cash outlay. LC obligates the banks to pay upon the presentation of the compliant documents. LC is used to facilitate trade between the buyer and the seller. LC liability arises only if the customer defaults on the payment. So the banks provide other facilities as well, other than the asset and liability side, right? Like letter of credit, bank guarantee, other products and services. They also provide co-acceptance of the bills. So the letter of credit, there is no fund outlay immediately. It is a non-fund based activity. Immediately, there's no fund outlay, only in the future. If the customer defaults, if the customer defaults in the payment, then the bank is going to enter the scenario as a surety and make the payment on behalf of the customer to the beneficiary. Bank guarantee is also the same, a guarantee given by the bank on behalf of the customer. All right. So if the documents are presented for non-compliance, this means the customer, the bank's customer, has not paid the money that they obligated, then the banks will be obligated to pay. So the correct answer will be yes. The correct answer will be 2, 3, and 4. Great. First statement is incorrect. It is a non-fund based activity. Facilitating trade, the liability arises only if the customer defaults. So if you remember the letter of credit, the bank guarantee, there is a buyer, right? There's a seller, okay? And then there's the bank who is acting as the surety. That is the guarantee, the contract of guarantee you have already studied, right? So if the buyer defaults in this situation, then the surety is going to pay on their behalf. Okay. Which product feature is most aligned with the expected product layer? Access to the account from any branch, cardless cash withdrawal, doorstep check collection, passbook for balance clearing. These type of questions will be zero point 0.5 marks. They will give you easy zero point 0.5 marks in the exam. Which of the following is an expected product? Expected product. Cardless ATM withdrawal is a potential product that will have demand in the future. Access to account from any branch. Do yes. Expected product is the minimal purchase, right? This is what the customer expects that they are going to get along with the core product. So if I'm taking a savings bank account, this is my expectation, minimum expectation, that the bank will give me a passbook, a checkbook, and a debit card, right? Doorstep check collection is the augmented product. Augmented product. Similarly, access to account from any branch will also be an augmented product. Okay, but passbook for balance trading is the expected product. All right, remember from the examples. Remember these concepts from the example. The most basic products are the core products. Something that would have demand in the future are potential. Something that adds value is augmented. Minimal purchase is the expected product. If the bank is saying we will not give you passbook until you pay rupees 500 for it, why would the customer go for this bank? Other banks are offering it free of cost, right? So the correct answer is D. As per RBI's directive effective from January 1, 2017, which facility must the credit information companies offer? Free credit score calculation every month, free full credit report once a calendar year, free CIR access for the banks only, free credit counseling for the defaulters. Now we are talking about the credit scoring. Credit scoring. So this, yes, this directive was given in RBI from 1st January 2017. The credit scores will be generated by the CICs and it is mandatory for them to give a FFCR, a free full credit report without any charge on request once a calendar year to the individuals whose credit history is available. Everyone, yes, the correct answer is B. Okay, what is a credit score? It is the credit report of the customer, a three-digit number from 300 to 900, representing the amount of risk the customer brings to the transaction. It is based on their past dealings, their current portfolio of credit, their previous searches, inquiries, all of these factors are taken into consideration. Okay. Which of the following statements are true about the credit bureaus? They collect and maintain credit data from banks and NBFCs. They provide CIRs to the loan issuing members. They track borrowers' income tax returns. They help lenders avoid credit risk through the CIR analysis. Which of the following statements are correct about the bureaus? How do they help the institutions, the financial institutions? Yes, what should be the correct answer? A, 1, 2, and 4. A, yes. Correct. Easy question. They do not track the income borrower's income tax return. No. Right? A is correct. A is correct. Yes. Consider the following statements about credit scoring. Credit scores are subjective and they vary across the banks. The score above 700 is generally considered good in India. Credit scores are calculated using the demographic data like the age and income. Credit scores help banks reduce the defaults and improve the operational efficiency. Yes, which statements are correct? 2 and 3, 1 and 3, 1, 2, and 4, or all of the above. Which statements are correct? Yes, what is the correct answer? C, 1, 2, and 4. Yes, C is correct. Right? Very simple questions. Very simple. Which CICs are there in India? There are four CICs that are given registration by RBI, the Certificate of Registration, TransUnion, Equifax, Experian, and the CRIF Highmark. Right? What do? They collect the historical data. The credit institutions, they will become members of all the CIC. They will provide them the information on a monthly basis or whatever interval is mutually agreed, right? Then the information will be used by the CICs, payment defaults, trade attributes, inquiries, and then finally the score will be provided. It will help the bank decide whether or not to extend credit, how much credit should be given, right? A bank receives three simultaneous retail loan applications from the same individual: a housing loan, a vehicle loan, and an education loan for their child. The applicant provides consolidated income documents and a single PAN. The housing loan is backed by a property in a registered society. The vehicle invoice is from an authorized dealer. The education loan includes admission and fee details from a foreign university. The bank's verification team is debating whether to streamline the process or conduct separate due diligence for each loan. Which of the following statements best reflect the operational and risk management approach? Each retail loan type requires distinct verification protocols. Consolidated income documents can be used across applicants, but the collateral and purpose specific checks must be done independently. Telephonic and residential verification may be skipped if one loan is already approved. Legal vetting and title investigation are mandatory for the housing loans, even if the society is registered. Yes, what should be the correct answer? Definitely expect these type of questions in your exam. Lengthy questions will be there. All right? Which statements are correct? Yes, A is true. 1, 2, and 4 is correct. 1, 2, and 4 is correct. Third statement: telephonic residential verification may not be skipped. All the three loans, separately, the verification has to be done, right? The verification will not be done on in a laid back attitude. Okay. Independently, collateral purpose specific check should be done. Distinct verification protocols will be taken. All right, so the correct answer is A. As per RBI, which of the following entities are mandated to become members of all the CICs? Only the scheduled commercial banks, all NBFCs with asset size above 500 crores, only the public sector banks, all the credit institutions. Which of the following entities are mandated by RBI to become the members of the CICs? What should be the correct answer? This is also a point 0.5 mark question. All right. DDS. All the credit information, all the credit institutions, banks, financial institutions, everyone. Every institute that is giving loan, that is extending credit, has to become a member of all the CICs, and they're required to provide monthly or whatever is decided. They need to provide the information of all the loans created, applications received, any default is there, charges created. All right, so the correct answer will be D. What is RBI stance on the non-lending banks opening current accounts for borrowers with the credit facility? Permitted with prior approval, permitted if the exposure is below rupees 5 crores, not permitted under any circumstance, permitted for dormant accounts only. So yesterday we had covered this point, right? To open a current account for borrowers that have availed the cash credit or OD facility from the bank, right? There was the feature of rupees 5 crore if the exposure is less than 5 crore, or if the exposure is more than 5 crore. Which type of banks will be allowed to open an account, a current account for them? Permitted for dormant accounts only. No, D is incorrect. Anyone else wants to try? No. See, if the borrower has an exposure less than 5 crore, then any bank can open a current account for them. Any bank. All right, any bank can open a current account for them. And if the exposure goes beyond 5 crore, then it should be informed. However, if it is more than 5 crore, then the bank who has minimum 10% of the exposure, bank who has given minimum 10% of the exposure, only that bank can open the account for the customer. However, the non-lending banks are not permitted under any circumstance. Those banks who are non-lending banks to the customer, they are not allowed in any circumstance to open an account for the customer. All right. So the correct answer is C. Also, in the second scenario, less than 5 crore, more than 5 crore, all the other banks may also open an account for the customer, even if they do not have this 10% criteria, but those accounts will only be collection accounts. Collection account. They will take the funds, whatever funds are deposited, it will be remitted within 2 working days to the CCOD account maintained by the bank, right? That has minimum 10% of the exposure. Okay, clear? Non-lending banks are not permitted to open current account at all. So the correct answer is C. Identify the correct statements regarding RBI's October 2021 circular on current accounts. Borrowers with exposure less than 5 crore face no restriction on the current account opening. Borrowers must inform the bank when their exposure crosses rupees 5 crore. Collection accounts must remit funds to the CC or OD account within 2 working days. Any bank with exposure can open a current account regardless of the exposure percentage. We have discussed these points right now, so you can answer it correctly. Yes, what will be the correct answer? What will be the correct answer? A, 1, 2, and 3. Yes, these are the points that we discussed. When the exposure is more than 5 crore, then the bank that has minimum 10% of the exposure will be allowed. If no bank has 10% exposure, then the bank having the highest exposure will be allowed to open the account. No, fourth statement is incorrect, right? Sashi, fourth statement is incorrect. Any bank with exposure can open the current account. No, 10% requirement is there. The bank who has 10% of the total exposure can open the current account. If no bank has minimum 10%, then the bank having the highest exposure will be allowed to open the current account for the borrower. What is the correct signing style for checks issued from a sole proprietorship account? Firm's name, signature director, firm's name, signature partner, for and on behalf of the firm's name, signature and the name of the sole proprietor, for and on behalf of the company's name, signature of the authorized signatory. This is the operative instructions, operational instructions in the current account. Operational instructions in the current account. So if it is a individual account, the column for operational instructions will be crossed, right? If it is a joint account, then the instructions will be given either or survivor, anyone or survivor, former or survivor, whatever. If it is a sole proprietorship firm, then it will be in the format. The account will be operated upon the person's name as the sole proprietor in the name of the behalf of the firm or on behalf of the firm, and the checks will be signed in the format. It will be for and on behalf of firm's name, right? Name of the proprietorship concern, and below it will be the signature of the sole proprietor. Why? Because the sole proprietorship firm is run by only one person. Plus, they can give a name of the nominee. This also you have already studied. Yes, so the correct answer is C. For and on behalf. Now, when we are talking about the firm's name and signature of the director. This could be of a company, director or the authorized signatory. Partner, it is a partnership firm. For and on behalf of the company's name, signature, authorized signatory can also be for a company, for a limited company. All right. Identify the incorrect statements regarding the account number, portability, and transfer procedures. Customers can retain the same account number when shifting to another branch. A letter must be submitted to the transferee branch for the account transfer. The For companies' accounts, a board resolution is required for the transfer. Account number portability is limited to the savings account only. You need to answer the incorrect statement. You need to select the incorrect statement, not the correct. So if you remember the the Damodaran committee for the transfer of accounts. So which statement or which statements are incorrect? D, one only. Only the first statement is incorrect. Yes. Only the first sorry, not the first, fourth statement, right? Only the fourth statement is incorrect. Yes, C is the correct answer. Hmm. Account number portability is not limited to savings account. Even current account can be availed here. Simply, the customer will approach the bank where they are maintaining the account. They will submit an application. Let's say they are moving to another city or they're shifting their account to another branch in the same city. Okay, the branch will obtain a letter addressed to the transferor branch that the customer wants to transfer it to another branch, and it will be signed and sent over to the transferee branch. If it is a company, then the board resolution is also required. So if it is the account of the individual, so just the letter will suffice. If it is a company, then board resolution will be required for the transfer of account. Okay. For the company account, board resolution is required for transfer. So only fourth statement is incorrect. Consider the following statements about the saving bank accounts for minors. A minor below 10 years can have an account opened by a natural guardian. Checkbook facility may be extended to literate minors above 10 years. PAN or Form 60 or 61 must be obtained from the minor in all cases. On attaining majority, the account must be reconstituted with fresh instructions. So, as per the Indian Contract Act, minor is not eligible to open a to enter into a contract, but the banks they allow to open an account for the minor, right? There are certain separate conditions for those above the age of 10 years, those below the age of 10 years. Sole account can be opened in the sole name. So the correct answer, what should be the correct answer? The correct answer should be A. Yes, 1, 2, and 4. Let us go through all the points once for the minor. So a minor who has not attained the age of 18 is capable of getting a account in this sole name. So the savings bank account of in the sole name of the minor will be opened, but if they are below the age of 10 years it will be operated by their guardian, right? If they're above the age of 10 years they can operate it themselves. Below the age of 10 years it will be operated by the guardian, right? Or when we are talking about checkbook facility, the minor should be able to read and write any of the language. Checkbook will be provided if they're literate on request, only if they are literate, right? Account opening form will be signed by the minor in the presence of an official. Then the maximum balance to the credit of the account should not exceed 1 lakh rupees. Those minors who are above the age of 10 years, there's no limit of this maximum balance. When we are talking about the PAN card, in case of the account of minors, if their income is not chargeable to income tax, Then the PAN number of the father or of the mother or guardian will be taken. Otherwise, the declaration form number 6061, otherwise not. Okay? In respect of the minors below the age of 10 years, sole account, their name can be open, in their name can be opened, but it will be operated by the natural guardian. Also another point, no overdraft facility should be given in the minor account. Doesn't matter if it is held singly or jointly with guardians, no overdraft will be given. A senior citizen walks into a bank branch to inquire about a fixed deposit maturity. The staff is busy and does not greet the customer. After waiting 20 minutes, the customer is told to check the app. The customer expresses discomfort with digital tools and asks for help. The officer responds curtly, saying, "We are short staffed, please come later." The customer leaves feeling disrespectful and unheard. The branch manager receives a complaint and assess whether the staff behavior aligns with the service quality expectations or not. So this is related to the customer requirements. Which of the following statements best reflect the service quality gap and cultural misalignment? The staff failed to value the customer's time and business, violating the basic service etiquette. Empathy was lacking as the customer's digital discomfort was not understood or accommodated. Providing solutions rather than excuses is essential, especially for the vulnerable customer segments. Responsiveness was adequate since the customer was eventually attended to. Which statements are correct in this scenario? 1, 2, and 3, 2 and 4, 1, 3, and 4, or all 4 are correct? Uh, no. Responsiveness was not adequate, right? Fourth statement is incorrect. Responsiveness was not adequate. Why? Because they responded after 20 minutes. That too, they did not give the solution. They did not give the solution to the customer. They said, Go check the app." Although the senior citizen was not comfortable with technology, with the digital tools. That is why they visited the branch personally. Otherwise, they could have checked their app at their home also. Okay, so fourth statement was incorrect. Responsiveness was inadequate. The customer was not provided any solution. So, what are the requirements of the customer from the service quality of the bank? Right? First, regarding tangibles, the appearance of the physical facilities. Is my credit card statement easy to understand or not? Reliability, is the bank able to perform the promised service dependably or not? If the officer says that some amount will be sanctioned in 2 days, is it actually happening? Or is my credit card statement accurate? Responsiveness. When there's a problem with the customer, does the bank resolve the issue quickly? Assurance means competence, courtesy, credibility, security. Empathy should be there, valuing the customer, their business, and time, providing solutions. Excuse was given here, saying that we are short staffed, but it is an excuse. Solution was not given. We should understand the customer's query and concern. If the customer is saying that they are not comfortable with digital tools, the officer should respond to them that, okay, we will help you. Alright, so the correct answer will be A. Consider the following statements regarding the operational safeguards for the illiterate account holders. Checkbook facilities allowed if the account is jointly held with a literate relative. The account holder must affix thumb impression in the presence of a bank officer during the withdrawals. A photograph must be attested and carry account details on its reverse. A certificate confirming thumb impression and vernacular explanation must be obtained at the account opening. So, illiterate, opening and a savings account for illiterate customer. For illiterate customer, what should be kept in mind? The illiterate person who is unable to write, they must attend in person, And rather than signing the form, they will affix their thumb impression in the presence of a witness who is known to the bank and the applicant, right? Recent photograph duly attested should be there, and only in the account opening time the witness is necessary. After that, for making the withdrawal, they need not require the witness, just the thumb impression is enough. The name of the account holder, nature of account must be written in the bold letters and at the back of the photographs. For the withdrawal, the illiterate person should come to the branch personally. No checkbook facility should be extended to the illiterate person. When we are talking about joint account of an illiterate with a literate close relative, it can be opened. Obviously, all the implications will be explained to them. Photographs of all the account holders should be taken. Formalities will be completed. So the correct answer will be B. 2, 3, and 4. Checkbook facility, however, will not be permitted even if it is a joint account with a literate relative. Why? Because the literate relative can take advantage. They might not tell what is written on the check and get the thumb impression of the illiterate person. So the checkbook facility is not provided. Which of the following statements are true regarding the withdrawal procedures for the incapacitated customers? Thumb impression must be witnessed by two independent persons, one being a bank official. If thumb impression is not possible, toe or other body part impression may be used. A doctor's certificate is mandatory if alternative body part impression is used. Withdrawal must be done only through the checkbook. Which of the following statements are true regarding the incapacitated individuals? Incapacitated. Handicapped, old person, sick person who are unable to visit the branch for making withdrawals or any other transaction. So what will happen? The bank will obtain the photograph of the handicapped person. Instead of their thumb impression, they can put the toe impression on the relevant form. It should be done before the branch manager. The person may also give suitable power of attorney to another person. Then the attorney may sign the form. Also, it would be advised to get a joint account with a near relative. If, let's say, they are incapacitated due to illness, they cannot sign the check or withdrawal, they are unable to come in person to withdraw money, they can put their thumb impression or any other impression witnessed by the witnesses. All right. So the correct answer will be A, 1, 2, and 3. Withdrawals are not necessarily done only by the checkbook. Other options are also available. Alright, so 1, 2, and 3. Which of the following entities is not permitted to open a current account as per RBI guidelines? So, yesterday also we had discussed the list. The non-individual entities for whom the savings account can be opened, and the non-individual entities for whom the current account cannot be opened. So the second list: Khadi and Village Industries Board, Municipal Corporation, Self-Help Group, Primary Cooperative Credit Society. For which of the following entities it is not permitted to open a current account? To open a current account. So government departments, bodies depending upon budgetary allocation, municipal corporation or committees, panchayat samitis, state housing board, water, sewerage, drainage board, any political party, any trading or professional concern, right? So for them, the current account cannot be opened. So the correct answer will be B. For the KVIB SHG Primary Cooperative Credit Society, these were included in the list of the savings bank deposit. Those non-individual entities for whom the savings account can be opened. These are two separate lists. Do not get confused. Okay, the non-individual entities for whom the savings account can be opened. The KVIBs, primary cooperatives, APMCs, SHGs, farmers clubs. All right, for these entities, a savings bank can be opened, but for municipal corporation or committee, current account cannot be opened even though it is a non-individual entity. All right, okay. Which of the following statements are true regarding the account opening for the non-individual entities? Government departments receiving grants for any scheme may open savings account with proper authorization. Political parties are permitted to open the current accounts if registered with the Election Commission. Farmers Club under the Vikas Volunteer Vahini are eligible for the savings account. State housing boards are permitted to open the current account for the housing projects. Which of the following statements are correct? Same topic. Same topic. Which statements are correct? All of the above are correct. Political parties are permitted to open current accounts. Are you sure? Yes, the correct answer will be C, 1 and 3 only. Government departments who are receiving grants will be allowed to open a savings account with proper authorization. And the farmers clubs are also allowed to open a savings account. However, political parties, state housing boards, they cannot open a current account. I think you need to revise the list. What I will do before uploading the PDF, I will in a single slide include the list of the of both the categories. Non-individual entities for whom the savings bank account can be opened, and individual entities for whom the current account, non-individual entities for whom the current account cannot be opened. Okay, I will include the list. You just remember it. Okay. What is the standard method used by the banks to calculate the interest on savings bank deposit? Monthly average balance method, weekly rest method, annual compounding, or the daily product basis? Very simple question. The method used by banks to calculate their interest on savings bank deposit. What is the method used by the banks? Yes, yes, it is the daily product basis. Daily product basis. What do? We multiply the daily closing balance by the interest rate and the number of days. Right? You have done this, right? The daily closing balance multiplied by the number of days multiplied by the rate of interest. Okay, so this is to determine the total interest earned over a specific period, and mostly it is in quarterly. All right. So the correct answer will be D. Phone number, I cannot give my phone number on the YouTube platform, sorry. But you have my number, right? You were there in the group. Connect with me, you have my phone number. Sharmila, you have my number. Okay. Identify the correct statements regarding the term deposit accounts of minors. Minors can open the term deposit account in their sole name. Guardian operated accounts follow the same rules as regular term deposits. Interest is paid only on maturity for all the minor accounts. Term deposits for minors cannot exceed 5 years. Regarding the term deposit account of minors. Term deposit account of minors. Yes, what should be the correct answer? So, a minor can have a term deposit solely operated in their own name, true, right? Or it can be operated by their guardian. All the other terms and conditions, they remain the same. Nothing else is different. So the correct answer will be A, 1 and 2 only. Minors can open their account in their sole name. Guardian can also follow the same rules as the regular term deposits. Interest is paid only on maturity, no. It can be a simple deposit, it can be a cumulative one. The term deposit cannot exceed 5 years. Again, this is false. Everything else remains the same. The minimum period 7 days, 15 days, maximum period 120 months, or it can, for minors, it can also be increased to 20 years. In the special cases where the interest of the minor is involved, 20 years can also be the time period. Okay, what is the minimum tenor of a term deposit of 15 lakh and above? So if the individual wants to get a term deposit of more than 15 lakh, what is the minimum number of days? 15 days, 7 days, 30 days, or 10 days? 15 days, 7 days, 30 days, or 10 days? It is B, 7 days, right? So if the minimum period for the deposit of 10 lakh and above is 7 days, and the deposit minimum days for the deposit of less than 15 lakh is 15 days. All right. More than 15 lakh, minimum number of days, 7 days are allowed. More than and less than 15 lakh, 15 days are allowed. True. Okay, maximum if we are talking about, then it will be 120 months or 10 years. In special circumstances, it can also be 20 years. So remember these 2 points. More than 15 lakh rupees, 7 days, right? Less than 15 lakh rupees, 15 days. Okay. A salaried professional who is earning 18 lakh per annum applies for a personal loan of rupees 6 lakh, an auto loan of rupees 12 lakh, and a housing loan of 60 lakh within a span of 12 months. The bank's credit officer calculates the fixed obligation to income ratio and finds that the post loan EMI obligation, the applicant's net take home pay would fall below the bank's internal threshold. The applicant argues that their bonus income and rental income should be considered and that the housing loan has a 25-year tenor, reducing monthly EMI burden. The credit team is now debating whether to proceed with all three loans or restructure the exposure. Which of the following statements will best guide the bank's decision? The fixed obligation to income ratio ensures that the borrowers retain minimum disposable income post EMI to avoid lifestyle stress and over leverage. Longer tenors reduce EMI burden but increase the total interest outgo and the long term repayment risk. Bonus and rental income may be considered if documented and recurring, but the FOIR must still meet the internal threshold. The FOIR is applicable only for housing loan and it is not relevant for personal or auto loans. Yes. Which statements are correct? Which statements are correct? 1, 2, and 3, only 2 and 4, 1, 3, and 4, or all 4 are correct. The first statement is right. The main purpose of the fixed obligation to income ratio is to make sure that a minimum disposable income net take home pay is remaining with the customer. Second statement, however, will be incorrect. Longer tenures, they do not necessarily reduce the EMI burden, increasing the total interest outgo, long-term repayment risk. No. Third and fourth statement is correct. The FOIR is applicable only for housing loans, not relevant for personal or auto loans. Yes, what will be the correct answer? No, actually, the fourth statement is incorrect, right? The fourth statement is incorrect. It is applicable to the housing loan, personal and auto loan. It will make sure that the borrowers have minimum net take home pay after the deductions, including the loan repayments that are made. Excessive borrowing should not be there. All right? Excessive borrowing should not be there. So, fourth statement is incorrect. 1, 2, and 3 only should be correct. A, 1, 2, and 3, right? A should be the correct answer. Okay, A should be the correct answer. Hmm. Okay. In an either or survivor term deposit, when both account holders are alive, who can request the premature withdrawal? In either or survivor. Now, when we are talking about term deposit, the operational instructions that are given by the customers in a joint account, either or survivor, and both the account holders are alive, who can request for a premature withdrawal? Any one account holder, only the first named account holder, both account holders jointly, or legal hires of both account holders? What will be the correct answer? What will be the correct answer? So there are two situations that can be here when the either or survivors condition is given. When all the account holders are alive on maturity of the time deposit, any of the account holder can take the payment. In case of premature payment, the consent of all the account holders is essential. In the situation when the either or survivor instructions are given, but any one of the account holder has expired, on maturity, any of the surviving account holder can take payment. But in case of premature payment, the consent of the legal hire of the deceased and all other surviving account holders is essential. Okay. So in this situation, the correct answer will be when both account holders are alive, both account holders jointly. Consent of all the joint holders is important. Okay, in case of maturity, in case of the account maturing, anyone can take the payment. But in case of premature withdrawal, consent of all the account holders is important. So C is the correct answer. All right, C. Clear everyone? Remember the 2 points. If all the account holders are surviving, then any account holder can take the maturity and consent of all in case of premature withdrawal. If one of the account holder has died on maturity, any of the surviving account holder can take the payment. In case of premature withdrawal, however, consent of all the surviving account holders and the legal hire of the deceased person is also required. Identify the correct statements regarding the interest and repayment of the time deposit. Interest on reinvestment deposits maturing on holidays is paid on the maturity value. Repayment of deposits more than 20,000 must be made via the account pay instrument or account credit. Interest is paid at the savings rate if maturity falls on a Sunday. Deposits maturing on holidays earn no interest for the intervening day. Yes, what is the correct answer? We have two types of term deposit, right? Where we can accept the interest. In a simple, the interest is sent to the savings account, and in a cumulative, it is reinvested. Okay. If the maturity date falls on a holiday, then on the next working day, the payment will be given to the customer. And for the intervening days, interest is paid. For the simple deposit, on the principal amount, the savings, whatever was agreed upon in the beginning, that interest rate is paid. In a cumulative, reinvested, the matured sum plus whatever is the interest rate is paid. Right? When the maturity date falls on the holiday. So the correct answer will be A, 1 and 2. 1 and 2. A, yes, correct. Interest is not paid at savings rate if the maturity falls on a Sunday. No, it is paid at the rate agreed upon, the originally agreed upon, on the principal amount. Deposits maturing on holidays, they do earn interest. All right, so the correct answer will be A, 1 and 2. All right, how the repayment of deposits is made? Mode of repayment of deposit is made if the aggregate amount of all deposits held by the person together with interest is 20,000 rupees or more. Then the repayment will be made in the account payee or the banker's check draft or crediting the account of the depositor. All right, 20,000 rupees. What is the interest rate applicable on the unclaimed matured FD as per RBI 2021 directive? Contracted FD rate, savings account rate, higher of FD or savings rate, lower of FD or savings rate. So when the account has matured but it remains unclaimed with the bank. It remains unclaimed with the bank. What is the interest rate applicable? Is it the FD rate, savings account rate, higher of the two, lower of the two? Savings account rate, no. The correct answer will be either the savings rate or the FD rate, whichever is lower. Whichever is lower, right? Whichever is lower. Do you remember this point? When the account matures and it is not claimed, with it remains with the bank, then the interest which will be payable will be either the savings deposit rate or the agreed upon date between the customer and the bank, whichever is lower. Both the options are there. All right, is this clear? Okay. Hmm. What is the deadline for the banks to deposit the TDS deducted in a month of March? 7th April, 15th April, 30th April, or 7th May. So, if you remember, you have studied about this in your AFM paper as well. 1 month extra is provided if you remember that clause. So, the deadline for the banks to deposit TDS deducted in the month of March is what? 30 days time period is given. 30th April. 30th April. Not 7th, 30th April. Basic fact based question. If you remember it, you will answer it correctly. If you could not remember it in the exam, then make a calculated guess. 1 month period. Okay. What is the mechanism used to break the FDs during the reverse sweep when we are talking about the two in one account? Auto sweep and reverse sweep. What mechanism is used to break the FD during the reverse sweep? First in, first out, random selection, highest value first or last in first out. So auto sweep and reverse sweep are very important concept. Auto sweep means when there is excess in our savings deposit, this excess amount in the multiple of 1000 will be swept to the FD and higher rate of interest will be earned. Reverse sweep means when there is shortfall in the FD account, then from the FD, the shortfall will be transferred to the savings deposit, right? And what is followed? Last in, first out. Correct. Everyone, correct. Identify the correct statements regarding the auto sweep and reverse sweep facility. Auto sweep transfers the excess balance to the FD automatically. Reverse sweep breaks the FD only after the manual approval. FDs formed through the auto sweep carry the prevailing FD interest rate. Reverse sweep breaks the most recent created FD first. What is the correct answer? Which statements are correct about the two-in-one account? Answer this question. First statement is correct. Yes. Auto sweep transfers excess the balance to the FD automatically. True. FDs are formed through auto sweep. The same FD interest rate as applicable. Reverse sweep, we already discussed, last and first out. However, everything is done automatically. Automatically. Right? Manual approval is not required for the auto sweep or reverse sweep facility. Right? So the customer will just give the instruction that, let's say, 5,000 rupees, whenever there is extra, 5,000 rupees will be sent to FD, or wherever there's a shortfall, this will be sent from the FD to the savings bank. Automatically it will be done. Right? Yes. A couple applies to open a joint account. One applicant provides a passport containing both identity and address proof. The other provides a voter ID and a utility bill. The branch officer asks for an additional OVD from the first applicant and seeks an introducer for the second. The applicant questions the need of an extra documentation and introduction. Which of the following statements best clarify the procedural correctness? Banks may seek an introducer while opening account to verify the customer background. The CDD must be completed independently for each joint account holder. Customer due diligence. Introduction is not required as per the RBI KYC norms. If an OVD contains both identity address, no additional document is required. So which statements are correct? Which statements are correct? 1, 2 and 4, 2, 3 and 4, 1 and 3 or all 4? What should be the correct answer, everyone? So introduction is not required. Introduction is not required. Also, if the OVD contains both identity and address, no additional document will be required. If the OVD does not have the identity or address proof separately, then we will take a utility bill, electricity bill, or any other document. Introduction is not required. So the correct answer will be no, the correct answer will be A. 1, 2, and 4. Okay? 1, 2, and 4 is correct. A. What happens if a depositor fails to maintain sufficient balance for standing instructions in a recurring deposit account? What happens in a recurring deposit? I am a salaried person. If I want, I can give instructions to the bank that every month from the salary that I'm receiving, this amount should be deducted and credited to my fixed deposit. What if sufficient balance, let's say the amount that I've told is 5,000. What if 5,000 rupees are not there in my account? The account is closed immediately. The installment is treated in arrears, the bank waives the installment, or the depositor earns bonus interest. Yes, the correct answer will be B. The installment is treated in arrears. If at any point the advance the credit is done, there will be no extra benefit for it. No extra benefit for advanced installments. Consider the following statements about the RD account operations. Installments can be paid in advance, but no extra benefit is given. Standing instructions are subject to the service charges. Penal interest is calculated automatically by the system. Installments paid within the calendar month are considered timely. Yes. What should be the correct answer? What should be the correct answer? 1, 2, and 3, 2, 3, and 4, 1, 3, and 4, or all of the above. First statement is correct. I already told you, right? If installments are paid in advance, no extra benefits are given. Standing instructions are subject to the service charges. If the customer wants to give a standing instruction, service charges will be there. Penal interest will be calculated automatically, and installments paid within the calendar month are timely. All of the above statements are correct. All of the above statements are correct about the recurring deposit, right? The recurring deposit, every other feature remains the same as was there in the fixed deposit. It can be by a person in their own name, more than one person in their joint name. Minor of the age of 10 years and above can also be eligible for opening an RD. They can also get an account with their father or mother, right? Operational instructions that whichever are given, right, it will be as per the service charges. Monthly installment should be paid on or before the last working day. At the time of receiving the installments, penal interest rate on arrears may not be recovered. However, each time the installment falls in arrears, penal interest rate is calculated by the system itself. All right. Penalty to be levied on delayed installments will also be there. Standing instructions are subject to the service charge. If the customer wants to give a standing instruction, certain service charges are there related to it, right? It is there. Like if the customer wants the transfer installments from the current account or the savings bank account from time to time against the payment of the service charges, only it will be allowed, right? Whatever charges are there for making the transfer, those service charges will be collected by the bank. It is not free of any charges. All right, from your savings or current account you are transferring the amount to your FD in the RD, right? So in that scenario, for the transfers, the service charges will be applicable. Okay, it will be applicable. All right. Which of the following statements are true about the flexible or variable RD accounts? Depositors can vary the installment amount. Minimum deposit amount and its multiples are prescribed. Interest rate is lower than the standard RD account. Terms and conditions, they vary by the bank. This is also a very simple question. Which statements are correct? 1, 2, and 4, 2 and 3, 1 and 3, or all of the above? We still have 10 more questions to go. Around 15 minutes more, we will continue the session. Okay, around 15 more minutes. So, which statements are correct regarding the flexible or variable RD account? In the RD account, normally the transfers that are to be done are stipulated. In a flexible, the depositors can vary the installment amount. Minimum deposit amount will be told that minimum 1000 rupees, maximum if I have something extra that can also be transferred. However, the interest rate is not lower than the standard RD. The RD or flexible RD, also the fixed or term deposit, the interest rate is offered by the is same. By the bank is the same. Okay? And the terms and conditions, they also vary from bank to bank. So the correct answer will be A. Only third statement is incorrect. Only third statement is incorrect. Interest rate is not lower than the standard RD account when we are talking about the flexible or variable RD. All right? Okay. Hmm. Here's a scenario. Mr. Rajan, who is a salaried employee, aged 58 years, applies for a home loan of 85 lakh rupees to purchase a ready to move flat. His net take home income after deductions, including proposed EMI, is 35,000 rupees, which is 18% of his gross salary. The bank policy allows 15% take home for the high income applicants. What should the bank do? Reject the loan due to insufficient take home income, approve the loan with a tenure of 30 years, approve the loan with a tenure restricted to 7 years, approve the loan with a tenure restricted to retirement age. So the net take home pay should be more than whatever is stipulated by the internal policy. So it is 15%, but here it is 18%. So obviously bank will not reject the loan on this ground. Second, banks, they calculate the repayment period mostly on the basis of the customer's retirement. Normally, it has to be repaid before the date of retirement in case of salaried persons, before attaining the age of 65 years in case of others. So it is a salaried, Mr. Rajan is a salaried employee. No, if they approve it for 30 years, it will be beyond their retirement age, way beyond their retirement age. The loan will be approved and the tenor will be restricted to the retirement age. Whatever is the age of retirement before that, the loan should be repaid by Mr. Rajan. Yes, D is the correct answer. Okay, D is the correct answer. If others was there, other than salaried individual, then the loan would be restricted to 7 years till they attain the age of 65 years. But they are a salaried employee, so the retirement age is also flexible. Before their retirement age, the loan should be repaid. A customer with a floating rate home loan wants to prepay 10 lakh rupees from a bonus. What charges should the bank apply? 2% prepayment penalty, no prepayment penalty, 1% prepayment penalty if the loan tenor is below 5 years, charges applicable only on the fixed rate loan. It is a floating rate home loan. They want to prepay 10 lakh rupees from a bonus. Yes, no prepayment charges will be there. Easy question, right? There is no prepayment charges. There is no prepayment charges. Okay. On floating rate loan, there is no prepayment charges. Mr. and Mrs. Mehta, a married couple with a combined annual income of rupees 10.5 lakh, applied jointly for a home loan of 18 lakh rupees to purchase a flat with a carpet area of 135 square meter. They do not own any pakka house. What is the correct credit linked subsidy scheme classification and the subsidy treatment? So now we are talking about the housing loan under the Pradhan Mantri Awas Yojana, the PM Awas Yojana. So a married couple who do not own a pakka house, their income is 10.5 lakh and they want to get a house of 135 square meter. Under which category will they fall? In the MIG 1, interest subsidy on 9 lakh rupees, MIG 2, interest subsidy on 12 lakh rupees, Not eligible due to the carpet area exceeding MIG 1 limit. Eligible under the MIG 2, no subsidy due to the income exceeding 12 lakh rupees. Yes, what will be the correct answer? What will be the correct answer? If you remember the categories, yes, they will fall under the MIG 1 category and interest subsidy on 9 lakh rupees. What is the criteria for MIG 1? If the income is 9 lakh rupees, no, the maximum loan amount eligible for subsidy is 9 lakh rupees. Okay, their income should be between 6 lakh to 125 lakh. All right, 6 lakh to 125 lakh. Here, their income is 125 lakh. Sorry, 6 lakh to 12 lakh. Okay, 6 lakh to 12 lakh. Interest subsidy will be 4%. Maximum loan amount will be 9 lakh. Okay, so the correct answer will be A. They are eligible under the MIG 1 category. Okay, a student secures admission to a diploma course in shipping in Singapore, recognized by the Indian Directorate General of Shipping. He applies for a rupees 15 lakh loan. What is the correct eligibility and margin treatment? Not eligible as the course is abroad, eligible with 5% margin, eligible with 15% margin, eligible with no margin due to the regulatory recognition. Yes. Education loan, first most important point for education studies in India as well as abroad, just that the student should be Indian, right? So the first statement will be incorrect for the eligibility criteria. Okay, student should be an Indian national. Admission could be for courses in India as well as abroad. Now, this course is recognized by the Directorate General, so it is also eligible, right? If we talk about the margin, up to 4 lakh rupees, no margin is there. Above 4 lakh rupees for studies in India, 5%, and for studies abroad, it is eligible with 15% margin. Yes. Above 4 lakh, margin is taken. In India, the course is in India 5%, course is abroad 15%. Okay. A student from a family with the annual income of 4.2 lakh applies for a loan of 7 lakh for a BTech course in India. What subsidy is applicable under the CSIS? Full interest subsidy during moratorium, 50% of the interest subsidy for the first year, no subsidy due to income exceeding 4 lakh rupees, subsidy only if the course is abroad. Yes, what will be the correct answer? What will be the correct answer? The CSIS scheme, Central Sector Interest Subsidy, provides, it is a Government of India scheme, and what does it provide? It provides full interest subsidy during the period of moratorium. What is the period of moratorium? It is a period of the course plus 1 year. Period of the course plus 1 year on education loan which is taken from the scheduled banks. All right. Students belonging to the economically weaker section, and the annual gross parental income, the upper limit is 4.5 lakh rupees. All right, so it is not exceeding 4 lakh. No, not C. The limit here is 4.5 lakh, and the annual income of the family of the student is 4.2 lakh. So, full interest subsidy during the moratorium will be given. Okay, remember the category. The weaker section, annual gross parental income upper limit should be 4.5 lakh per year from all their sources, right? Avi, who is a 17-year-old student, secures admission to a BTech program and applies for a 6 lakh education loan. His father executes the loan documents. What must the bank do upon Ravi turning 18? Re-execute the loan document, obtain a fresh KYC from Ravi, obtain a letter of ratification from Ravi, or no further action is required. So when the student becomes of the majority age and they still need to repay, what will be done? What should be done in the education loan? What will be done? See, there is no specific restriction regarding to the age of the student for the eligibility of education loan. However, if the student is a minor while the parent executes the documents, at the time of the student attaining majority, the bank will obtain a letter of ratification. Why I'm not getting any answers? The bank will obtain a letter of ratification from Ravi once they get to the age of 18. Letter of ratification means that they have availed the loan and they want to continue it. Okay, so the correct answer is C. All right. Mr. Khan, who is earning 2.8 lakh rupees annually, applies for a six, no, not obtain a letter from ratification is important. Okay. Mr. Khan, who is earning 2.8 lakh rupees annually, applies for a 6 lakh loan to purchase a flat with carpet area of 32 square meter. He is single and does not own a pakka house. What is the correct classification and the subsidy treatment? Eligible under the lower income group, subsidy of 6 lakh rupees. Under EWS, subsidy on 6 lakh rupees. Not eligible due to the carpet area exceeding the EWS limit. Eligible under the MIG 1, subsidy on 9 lakh rupees. What will be the correct answer? Income is what? Income is 2.8 lakh rupees and carpet area of 32 square meters. See, here the carpet area although is exceeding 32 square meter, but the states are allowed to have flexibility in the amount, right? They are allowed to have flexibility. Their income is 2.8 lakh annually. This is less than 3 lakh, which is under the EWS category, right? So they are eligible as the EWS and subsidy will be given on 6 lakh rupees. Just because the carpet area is exceeding the EWS limit by just 2 square meter, they will not become ineligible. All right, the states are allowed to set their own carpet area. Okay, they're allowed to set their own carpet area. So this person, Mr. Khan, will not become ineligible. All right, and their income is less than 3 lakh rupees. So yes, they will be under the EWS category. Okay. Miss Kapoor, who applies for a personal loan, her credit card shows 5 recent inquiries for unsecured loans and 2 new credit card opened in the last quarter. What should the bank infer? She is financially disciplined. She is diversifying her credit portfolio. She is consolidating her debt. She is over leveraged and credit hungry. Now, this is from the credit scoring part, right? She has availed recently, she has applied for 5 unsecured loans, 2 credit cards. How do we classify the behavior of Miss Kapoor? She is over leveraged and credit hungry. Your loan portfolio should include not only unsecured loans but also secured loans. Not only credit cards. If it includes only credit cards, it will again be a negative point. All right. Also, the utilization of credit is important. You should be a safe customer. If you are overutilizing your limit, again, this will negatively impact the score. Which of the following statements are true about the TDS compliance by the banks? The banks must issue Form 16A for the TDS deducted. The TDS must be deposited by 7th of the following month except for March. TDS rate is 10% with PAN and 20% without PAN. TDS is not applicable on the cumulative FD. Yes, what should be the correct answer? What should be the correct answer regarding the TDS by the banks? What should be the correct answer? A. Statement 4 is incorrect. TDS is not applicable on the cumulative FD. Yes, TDS is not applicable on the cumulative FD. The cumulative FD, all the terms and conditions, TDS, interest rate, maturity, withdrawal, everything is correct. Okay, everything is same. TDS is also applicable. All right. For all other months except March, for March it will be on 30th of April. Form 16A for TDS deducted. Yes. Last question for today. What is the prescribed mode of repayment for the time deposits exceeding 20,000 rupees at a single branch? Cash only, demand draft without endorsement, NEFT only, account pay banker's check or credit to the account. The accepted mode of repayment for the time deposit exceeding 20,000 rupees at a single branch. Oops, A. Yes, A was the correct answer. Right. Answer this one. The prescribed mode of repayment for the time deposit exceeding 20,000 rupees at a single branch, it is account pay banker's check or credit to the account. Correct. The correct answer is D. Here's a scenario for you. Let us read it carefully. A legacy fast moving consumer good brand decides to reposition its flagship detergent to appeal to the eco conscious millennials. The team performs a detailed SWOT analysis, identifying the opportunities and threats. A new offering is drafted, including the revised SBU's positioning and a green themed marketing mix. The implementation team suggests struggles with aligning internal culture and decision systems to the new sustainability narrative. 6 months post launch, the brand conducts a reactive audit after noticing declining sales in urban markets and takes corrective actions by adjusting its messaging and distribution strategy. Which of the following statements are valid? The revised marketing mix and positioning strategy are part of the marketing planning. The struggle with internal culture alignment reflects challenges in the marketing control. Reactive audit and corrective action are part of marketing control. The SWOT analysis, identifying sustainability trends, is a part of marketing analysis. So we have studied about the 4 stages of marketing in retail banking, right? The 4 stages: marketing analysis, marketing planning, marketing implementation, and marketing control. Accordingly, you need to answer which statements are correct about this scenario, about this particular scenario. Yes, what should be correct? What should be the correct answer? Good morning, Krishna. Yes, what will be the correct answer, everyone? Mark the correct answer. 2 mark question. So, the first stage, which is marketing planning, in that stage, we do the SWOT analysis, right? Strength, weakness, opportunity, and threats for gaining insight into the market environment, analyzing the market in which we are planning to introduce our product. So the first statement will be correct. The revised marketing mix and positioning strategy are a part of marketing planning. No, it's revising the marketing mix and positioning strategy. But actually, it would come under planning, right? It would come under planning. All right. Then yes, the revised marketing strategy is a part of marketing planning. What do we do in marketing planning? We define the strategic business unit, we chalk out the issues that we are facing, the product draft is created, the brand draft is created, offering is created, action plans, budgeting, positioning, marketing mix, marketing expenditure for each business. All of these things come under the marketing planning stage, so this is correct. Second statement says the internal culture alignment reflects challenges in the marketing control. No, when we have created a plan, now we try to implement it. Who, where, when, and how. Blending people, culture, structure, decisions, reward system. This comes under the marketing control, this comes under the marketing implementation stage, right? This comes under the marketing implementation stage. So the second statement is incorrect. Third, reactive audit and corrective action plan in the marketing control. Yes, in the marketing control, we audit, measure, evaluate. Reactive or proactive methodologies used. Basically, corrective action plan is taken, right, in the control stage. So the third statement is correct, and the SWOT analysis is a part of the planning. So the correct answer should be C. B, not B. Yes, sir. The correct answer will be C. Okay. The blending of culture, alignment of culture reflects the challenges in marketing implementation stage. Implementation stage. All right. In the marketing control stage, we do the corrective action plan. We take the corrective action, reactive or proactive. So that is why C will be the correct answer. Okay. Consider the following statements regarding the bank business facilitators. The business facilitators are permitted to execute transactions on third option proactive, both reactive and proactive, both can be done in marketing control, right? Both option. Either we can react to something or we can continuously monitor something and take the action before anything bad happens. So our control can be both, either reactive or it can be proactive. All right. Here they took a reactive action, right? In the question, yes, the brand conducts a reactive audit. It is given in the scenario. Clearly, it is given in the scenario. The brand conducts a reactive audit. Okay. Hmm. Consider the following statements regarding the bank business facilitators. Business facilitators are permitted to execute transactions on behalf of the bank. The business facilitators can refer clients and facilitate the banking proposals. Business facilitators are required to undergo a mandatory certification like the business correspondents. Which statements are correct? 1 and 3, only 2, 2 and 3, or 1, 2 and 3. B, C, B. B is correct. B. Only B. Yes, only the second statement. The business correspondents are allowed, permitted to execute transactions on behalf of the bank, and the business facilitators, they help the bank, they facilitate, they refer the client, and the business correspondents only have to undergo a mandatory certification like the business correspondents, not the business facilitators. So only the second statement is correct. Regarding the failed ATM transactions, which of the following statements are true? Banks must recredit the amount within T plus 5 days from the date of transaction. Compensation of rupees 100 per day is payable for delays beyond T plus 5 days. Compensation is credited automatically without the customer claim. The complaints must be lodged within 30 days to be eligible for the compensation. So when there's a failed transaction, account of the customer was debited, but the amount was not dispensed. then within how many days the shadow reversal or the recrediting of the account should be done by the bank? Within how many days? ADA. Read the first statement very carefully. Banks must recredit the amount within T plus 5 days from the date of transaction or the date of complaint. From the date of transaction or the date from which the customer raises the complaint. Yes. What should be the correct answer? What should be the correct answer? Yes. When we are talking about the timeline for reversal of failed ATM transactions, you need to keep this thing in mind. It is to be done by the bank within T plus 5 days from the date of complaint. All right. For failed ATM transaction, it is the date of complaint. So the correct answer is 2, 3, and 4. Yes. After that, if there's a delay, then compensation of rupees 100 per day for the delays in recrediting the amount from the beyond T plus 5 days from the receipt of complaint, and it has to be credited to the account of the customer without any claim being made. Okay, the customer need not make a claim for the compensation separately. However, they will not get the compensation for delay if they do not lodge the complaint within 30 days of the transaction. Okay, the complaint must be lodged within 30 days to be eligible for compensation. So remember, it is not from the date of transaction, it is from the date when the customer makes the complaint to the bank. Okay. As per the RBI guidelines, what is the minimum number of free ATM transactions in a savings account holder is entitled to at the bank's own ATM, regardless of the location? 3 per month, 5 per month, unlimited, or 2 per month? Very simple question. How many free ATM transactions are allowed at the bank's own ATM? It is, yes, it is 5 per month. Correct. Beyond, other than this, if let's say the transaction is at bank's any own ATM at any location, 5 per month, irrespective of the location. Transaction at other bank's ATM at metro location. How many free transactions do we get? 3 free transaction minimum. And beyond that, rupees 21 extra, right? Own bank at metro location also we have 5, right? Okay. Then what else? That is all from this topic. Which of the following statements correctly reflect RBI's security and legal framework for electronic banking? Banks must submit a security policy and auditor certificate before launching the internet banking. RBI mandates bilateral contracts defining rights and obligations of parties involved in the e-transaction. Banks must disclose the customer liabilities and publish the financial results online. What will be the correct answer regarding the electronic banking? What should be the correct answer? Internet banking, electronic banking. Yes. C1 and 3D. All of the statements are correct, right? When we are talking about the internet banking services, electronic banking services, basically there are three levels, right? We have the basic level, which is basically just getting information on the website about the different products and services. Second, we have the simple transactional website, which provide the non-fund based transaction, checking my balance in the account, application for different services. And third are the fully transactional, where I can make fund-based transaction. I can transfer funds, receive funds. Okay, so now the RBI policy regarding this security of internet banking transaction is one of the most important things, right? So the procedure for availing the service, the RBI guidelines, prior approval of RBI for undertaking internet banking is mandatory. Submission of the security policy with a certificate from the independent auditor is also important. Banks will report to RBI about every breach or failure of the security system. Risks and controls in computers and telecommunication guidelines have been issued, right? Outsourcing guidelines. Only institutions who are members of the check clearing system will be permitted in the interbank payment gateways. All of these guidelines are there. Bilateral contracts between the payee and the payee's bank, the participating bank, and the service bank should be put in place, right? And obviously, mandatory disclosures of risks, responsibilities, liabilities, it should be published by the bank. Okay. What was the earlier RBI mandated daily transaction limit per customer for mobile banking via the IMPS before it was removed? 2 hours. This class will be till 9 a.m. maximum. Before removing, what was the limit on the daily transactions? It was 50,000 rupees. Correct. Sashi, great. All right. So now this limit has been removed. Earlier it was 50,000 rupees. Okay. Scenario. A mid-sized private bank launches a digital-only savings account targeting the tech-savvy millennials. The product offers competitive interest rates and zero balance requirements. The bank invests heavily in digital ads and influencer campaigns but receives lukewarm response, not a very good response. On investigation, it is found that the onboarding process is cumbersome, requiring multiple physical verification. Additionally, the customer service agent lack clarity on the product features, leading to inconsistent communication. The bank also failed to provide tangible elements. Evaluate the following statement. The lack of branded debit card and welcome kits reflect a gap in the physical evidence component. The cumbersome onboarding process indicates a failure in the process element. Inconsistent communication highlights weaknesses in the people component. The heavy investment in digital ads, influencer campaigns was misaligned with the price element. So we are talking about the 7 ingredients of marketing mix, right? 7 ingredients of marketing mix. We start with the product, then we have price, we have process, people, physical evidence, place, and promotion, the 7 P's. So, which of the following statements are correct here? The whole scenario is given to you, you need to answer. B. B is 2, 3, and 4. Okay. Why statement 1 incorrect? The lack of branded debit cards, welcome kits reflect a gap in the physical evidence component, providing tangibility to the intangible services. It is a digital only savings account. It is completely intangible. Providing debit card would be physical evidence, right? So the first statement is correct. Second statement, onboarding process indicates even the question itself has the term. It is a failure in the process element. Inconsistent communication has is reflecting issues in the people component. Yes, people includes the customers on one side and the staff on the other side. If they are unable to express or communicate with the customer clearly, it will be a weakness in their understanding and skills. This is also correct. However, the heavy investment in digital ads and influencer campaigns, this is promotion, right? Not the price element. The issue here with heavy investment in digital ads and influencer campaigns is the issue with the promotion aspect. So the correct answer will be A, 1, 2, and 3. I'm not getting responses. Why? Is this clear? The 7 P's, how we are using it here, are clear. Product is the starting point, whatever service the bank is offering. Then price, if it is a deposit product, so the interest rate offered by the bank. If it is an asset product, then the interest rate which the bank is earning. Promotion means efforts of the banks to reach the customer. Sales promotion, advertisement, publicity. Place means where the bank is offering its product. People means the customers as well as the staff who are doing the marketing strategies, dealing with the customers. Process means product development, product structuring, delivery stage, and physical evidence would be debit ATM card, personalized checkbook, passbook, bringing tangibility. Clear, everyone? Is this topic clear? Please confirm. Everyone who's here, please like the video, like and share the video. Okay. Consider the following statements about the MMID in the IMPS. MMID. MMID is a 7-digit code linked to a mobile number. A single mobile number can be linked to multiple MMIDs. MMID is mandatory for Aadhaar based IMPS transaction. Which of the above statements is or are correct? 1 and 2, 2 and 3, 1 and 3, or 1, 2 and 3. So IMPS, when we are talking about the delivery channels in IMPS, under the electronic channel internet banking, we have the IMPS, right? Three options are there for doing transactions in IMPS, if you remember. One is through the MMID, the mobile money ID. Second is IFSC and account number, and third is using the Aadhaar number. C, D, no, I'm not getting the correct answer yet. MMID is mandatory for Aadhaar based IMPS transactions. Is MMID, the name of the transaction clearly says it is the Aadhaar number. The Aadhaar number. Yes, the correct answer should be 1 and 2 only. 1 and 2 only. What is MMID? MMID. Sender and the receiver, if both of them are registered for mobile banking, they should get a unique ID which is called the MMID, a 7-digit code for both. Each MMID is linked to a unique mobile number, but to a same mobile number, different MMIDs can be linked. Let's say the customer has a bank account in more than one banks, or in the same bank they have more than one accounts. They can link to their same mobile number more than one MMIDs. So in the MMID and mobile number, both of them should be registered using IFSC code. Let's say the beneficiary mobile number is not registered with any bank account. Then the IMPS transferor, the remitter, they will just put the IFSC code and the account number of the beneficiary. Third option is the Aadhaar based remittance service, the ABRS. Herein, the beneficiary's Aadhaar number will be used. Okay? Yes. So the correct answer will be A, 1 and 2. A leading bank launches a premium credit card for the high net worth individuals, and it has exclusive travel benefits and concierge services. Okay. The product is well designed, priced with a high annual fee, promoted via luxury events and curated email campaigns. However, the card fails to gain traction. Customers complained about the poor service at the partner lounges, delays in the card issuance, lack of clarity on the reward redemption. The bank's internal audit reveals that the delivery channels were not streamlined and staff was inadequately trained on the product's value proposition. Which of the following statements are valid? Now, again, this is related to the 7 Ps. The luxury events and curated campaigns are examples of the play strategy. The poor service at the partner launches and delays in the card issuance reflect weakness in both process and people. The high annual fee and exclusive benefits are part of the product and price elements. Lack of clarity on reward redemption indicates a failure in promotion. Which of these statements are correct? 1, 2, and 3, 2, 3, and 4, 1, 3, and 4, or all of the above? These type of questions will be asked in the exam. Okay, rather than simple, direct, fact-based questions, these scenarios are asked. Yes, the correct answer is B. Correct. 2, 3, and 4. The luxury events and curated campaigns, they are a part of promotion, not the place. Okay, poor service are the partner launch process and people, high annual fee, exclusive benefits, product and price, lack of clarity, again promotion. Okay, so here you need to use your thought process. Do not be quick to answer, read very carefully and then answer the scenario based questions, otherwise you will lose easy 2 marks. Okay. Consider the following statements about UPI and BHIM interoperability. Interoperability, yes. BHIM supports scheduled transactions and bill sharing among peers. BHIM is a UPI-based app that enables real-time bank-to-bank payments. BHIM users can save beneficiary details for future transactions. Which of the following above statements are correct? 1 and 2, 2 and 3, 1 and 3, or 1, 2 and 3? Simple question. UPI and BHIM. Which of these statements are correct? Which of these statements are correct? D. All of the above are correct. B. Yes. Bill sharing and saving the beneficiary, sorry, scheduled transaction and bill sharing is a feature of the UPI, not BHIM. Okay, it is a feature of UPI, not BHIM. All right. In BHIM, what all features are available? Stable internet connection is essential. It is interconnected with every bank through the UPI ecosystem. The users can send money using the VPA mobile number or Aadhaar number. And the payment using the Aadhaar number, it should be linked to the beneficiary's account. Right. In the BHIM, there's the option of save for future. For repeated remittances to the same party sending money, we can click on the option of save for future details. We can also collect transaction. But the bill sharing option and scheduling transaction is there in UPI, not in BHIM. Okay. Which of the following is not a technology alternative used by UPI 123 Pay for feature phone transactions? IVR based calling, missed call approach, QR scanning, or proximity sound based payment? Very simple question. Very simple. The UPI 123 Pay. Which of the following is not a technology used? It is for the smartphones, for the feature phone users, right? And we have 4 technologies that are available. The IVR is there, interactive voice response, missed call is there, OEM is there, the mobile phone manufacturers. They give a special app which will be used on the feature phone, and voice-based payments are also there. However, QR code scanning is not there. Okay. Yes, C is the correct answer. QR code scanning is not an option of UPI 123 Pay. Consider the following statements about the star 99 hash service. It uses USSD channel and works on all GSM handsets. It requires the mobile internet connectivity to function. It supports financial, non-financial, and value-added services. Which of these statements are correct about the star 99 hash? 1 and 2, 1 and 3, 2 and 3, or 1, 2 and 3. So this service is also for the feature phone users. USSD is the unstructured supplementary service data channel. So mobile banking transactions for those who are using the feature mobile phone. There's no need to have mobile internet data facility. Simply we will dial this star 99 hash across all the GSM holders. This is a common number which is provided by all the telecom service providers. And then a menu will be displayed on the mobile screen. Services which are offered: sending money using mobile number, UPI ID, Aadhaar number, account number, and IFSC, checking the account balance, setting UPI PIN, change the UPI PIN, check the last 5 transactions. Value added services are also there. I can check my Aadhaar linking status, the overdraft status in the Pradhan Mantri Jan Dhan Yojana account. Okay. So the correct answer will be B. Yes, 1 and 3. Very simple, right? It does not require mobile internet connectivity. Even if I am using the UPI ID, then also I do not require mobile internet connectivity. Okay. Consider the following statements about RBI's co-lending model. The co-lending model allows banks to co-lend with NBFCs and HFCs based on a prior agreement. Banks must retain 20% of direct exposure in the co-lending arrangement. CLM is applicable only to the loans which are disbursed in the urban Tier 1 cities. Which statements are correct? 1 and 2, 2 and 3, 1 and 3, or 1, 2 and 3? Again, very simple. Very simple question. What should be the correct answer in the co-lending model between the bank and the NBFC? What should be correct? C, 1 and 3. It is applicable to loans and disbursed only in the urban Tier 1 cities. What are the urban Tier 1 cities? It is a metropolitan hub that already has infrastructure, high economic activity, significant job opportunities. Delhi, Bombay, Bangalore, Chennai, Kolkata, all of these, right? The correct answer should be A, 1 and 2 only. Okay. Eligible counterparties, all registered NBFCs, housing finance companies are also allowed. Both are allowed. All the loans qualifying for the priority sector advances, they qualify for co-lending model. They qualify for the co-lending model. Okay. But third statement is incorrect. Now, banks, the ratio should be 20 is to 80. Maximum 80% can be done by the banks and 20% should be by NBFCs. All right. Minimum 20% of the direct exposure will be retained by the NBFCs. Oh no, wait. Banks must retain a minimum 20% direct exposure. No, this will be NBFCs. Right? So only first statement should be correct. Only the first statement should be correct, right? Banks can have a direct exposure up to 80% maximum, and minimum 20% will be by NBFC. So only the First statement will be correct. Clear, everyone, about the co-lending model, right? Only the first statement. Second and third are incorrect. Okay. Consider the following statements about the BCSBI. The BCSBI was created to set voluntary codes for fair treatment of the bank customers. The BCSBI functioned as a grievance redressal forum for individual complaints. The BCSBI's code influenced customer service policies of most banks. About the BCSBI, the most important unit of the module C. The Banking Codes and Standards Board of India, which of the following statements are correct? Which of the following statements are correct? D, C. C is correct. Why? It did not function as a grievance redressal forum for individual complaints. BCSBI was not a forum for individual grievance redressal complaint. No. The BCSBI was set up under the chairmanship of Shri S.S. Tarpore. The committee was constituted. The procedure and performance audit of public service. The main objective was to address the issues related to the availability of adequate banking services to the common people. Right? So the quality of these banking services should be improved. The benchmarking should be done. Thus, the BCSBI was set up in 2006. Right? It is not mandatory, it is a voluntary code. When the banks they become members, they have to follow these code, providing services to the customers and the MSME. This code will not replace or supersede RBI directions, and it is not a forum for redressal of the individual grievances. Not individual, no sort of grievances. The grievance redressal was under CEPD, now it is under Ombudsman, right? So the correct answer will be C, 1 and 3 only. Okay. A private bank aims to boost fee-based income through direct party distribution. It uses CRM analytics to identify the customers with high saving balances and low product penetration. The bank launches a campaign to cross-sell mutual funds and sovereign gold bonds. However, uptake is low in the Tier 2 cities. Feedback reveals that customers were unaware of the product benefits and perceived them as risky. The bank's marketing team blames CRM for the poor targeting. Assess the following statements. CRM's role in identifying the low penetration customers supports the fee based income strategy. Low uptake in the Tier 2 cities suggests CRM failed to factor in regional risk perception. The campaign's failure is due to poor promotion, not CRM analytics. CRM is ineffective in cross selling unless integrated with customer education and channel strategy. Which statements are correct here? Which statements will be correct? Customer relationship management. Customer relationship management. We try to build a strong relationship with the customer, retaining the profitable customer, acquiring new customers, providing them the best services, increasing their the pocket share, right? BD. Okay. CRM roles in identifying the low penetration customers supports a fee-based income strategy. What is the fee-based income strategy? The CRM analytics to identify customers with high saving balances and low income penetration. This means that these customers, they already have high balances in their savings account, but they're not using it to avail more products. So the first statement will be true, right? Second statement low uptake in these cities failed to factor in the regional risk perception. No, this might be because here it is written that customers were unaware of the product benefit. They are unaware of the product benefit. Regional risk perception is not there. The customer has not been informed about the product. The benefits of the products, they have not been informed to the customer. So the second statement will be incorrect. Okay. The campaign's failure is due to poor promotion and not CRM analytics. Yes, the analysis was good. The CRM was good, but the promotion failed. The bank was not able to make the customer aware of the new product and its benefits, right? So the correct answer should be 1, 3, and 4. CRM is not ineffective in cross selling unless integrated with the customer education. No. All right. So CRM, if we want to cross sell the product, the main objective of this scenario was that banks want to boost their fee based income through third party distribution. They want to sell the already customers who are there, they want to sell them the fee based product penetration. But it won't be possible if they do not promote the product, if they do not promote their fee based products. All right, so here the problem was with the promotion, poor promotion, not with CRM analytics. All right, so the correct answer will be C. Which of the following statements correctly describes the nature of the BCSBI's code? It is mandatory and overrides the RBI regulations. It is voluntary and complements the RBI's regulatory directions. It is enforceable through the consumer courts. It is applicable only to the cooperative banks. Very simple question. Yes, it is. It is voluntary and it complements the RBI's regulatory direction. There are two options. Either the banks can go with the codes which are set up by the BCSBI or the IBA codes, right? In both the scenarios, RBI's directions will not be superseded. If the bank become a member of BCSBI, they no longer follow the IBA. If they choose to not become a member of BCSBI, they will continue to follow the three codes which are set up by IBA. Okay. Which of the following statements correctly reflect the rating categories used by BCSBI? So, apart from releasing the two codes for customers and MSME, the BCSBI also acted as a watchdog, supervising whether the members are following the code. For that, they created a benchmark on based on 5 parameters, and they gave a scoring out of 100 in public domain. So, which of the following are correct? A score of 85 and above is called high, below 60 is below average, between 60 and 70 is average. Yes, all the three statements are correct. So, let me just see, do we have another question regarding it? No, okay. So, what are the 5 parameters? The 5 parameters which are used by BCSBI, we start with information dissemination. Information dissemination, weightage of 20 is given. Then transparency, complete information to the customer, a weightage of 22 is given. Customer centric bank policies, weightage of 30 is given. Then grievance redressal, weightage is given 15. And finally, lowest weightage is given to the customer feedback, which is 13. This totals to 100. Okay. Now, out of this, if the customer has a score more than 85, 85 out of 100, then they are a high rating, right? The rating category is high. 70 to 85 is above average. 60 to 70 is average. And below 60, it is below average. All right. So yes, 85 and above is high, Scoring below 60 is below average. 60 to 70 it is considered average. 70 to 85 it is considered above average. So 1, 2 and 3. Remember these scores, the criteria and the scores. Okay. Which rating agency provided technical assistance to BCSBI for the code compliance scoring? ICRA, CARE, CRISIL or Fitch? The BCSBI took help of one of these rating agencies for technical assistance. The BCSBI conducted the survey of sample banks in semi-urban, rural, metro-urban category. Feedback from a few customers was taken. Using this qualitative data, yes, with the technical assistance of CRISIL, BCSBI formed the benchmarking. Okay. Regarding the final response, timeliness and escalation in the ombudsman scheme. Banks must respond within 30 days of receiving a complaint or explain the delay. If dissatisfied, the customer must be informed of the further escalation options, including the ombudsman. The 30-day timeline begins from the date of complaint resolution non-receipt. So what happens whenever a customer faces a deficiency in service? A deficiency in service. First, they will make a complaint to the bank. Okay. The bank should give a response to the customer within 30 days. True. Either they will resolve the issue or they will give the reason. If the customer is not satisfied or if the bank does not give a response, then they can take the complaint further to the ombudsman. Right? They can make the complaint further to the ombudsman, and the bank must tell the customer where the complaint can be made, to whom to approach for redressal, what to do if you're not satisfied with the outcome. When the ombudsman receives a complaint, they will give a notice to the bank to furnish the necessary documents and information, right? And then the ombudsman will give the decision after hearing both the parties, the bank and the customer. If, however, the customer is not satisfied or the bank is not satisfied with the ombudsman decision, they can take it to the appellate authority. The bank can take it to the appellate authority only if they had provided the documents and information. In the situation of not furnishing the information or wrong information, this is known as ex parte decision taken by ombudsman, and in this scenario ex parte, the bank cannot make an appeal to the appellate authority. All right. So here the 30-day timeline begins from the date of complaint resolution, not receipt is incorrect. The correct answer is A, 1 and 2. A, yes, everyone is answering correctly. Okay. Consider the following implications of adopting the code of banks commitment to the customers by the BCSBI member banks. The code supersedes RBI's regulatory instructions. Member banks are exempt from following the IBA's voluntary code, such as the Bankers Fair Practice Code. Non-banker, non-member banks must continue to follow the IBA's voluntary codes. So IBA has also given three voluntary codes. First is the Bankers Fair Practice Code, which was released in 2004. Then we have the Fair Practice Code for the credit card operations. And the third code is the Model Code for the collection of dues and repossession of security. Okay? Yes, the correct answer is B. It is a voluntary code. If the banks choose not to become a member, they will continue following these three codes of IBA, and the BCSBI code does not supersede RBI's regulatory instruction. Now, BCSBI has been dissolved by RBI in 2020, and the CEPD is working as the nodal department. Okay. Miss Ritu, a credit card holder with 4 lakh rupees 4 lakh limit, shares her OTP with a caller impersonating a bank staff. A transaction of 30,000 rupees is executed immediately. She realizes the fraud and reports it to the bank within 2 hours. The bank blocks the card and investigates. Assess the following statements. Miss Ritu bears the full liability of rupees 30,000 due to her negligence. Any further loss after reporting will be borne by the bank. Her liability is capped at 25,000 rupees as per the RBI norms for credit cards. The incident qualifies for limited liability under a third party breach. Which statements are correct? 1 and 2, 3 and 4, 1, 3 and 4, or 2, 3 and 4? Which statements are correct? D. D. Anyone else? Anyone else wants to try? Okay. Um, when there's a third party breach, the fault lies neither with the bank nor with the customer elsewhere in the system. The customer notifies the bank within 3 working hours, within 3 working days, so the customer will bear zero liability. However, this is not a third party breach, right? Here the fault is of the customer. Ritu herself shared her OTP with the bank staff, right? It was the fault of the customer. Okay. In cases where the loss is due to the negligence by the customer, when they have shared their payment credentials, the customer will bear the entire loss until they report the unauthorized transaction to the bank, right? So here she had herself shared the payment credentials, her OTP. So she will bear the full liability for the 30,000 transaction. Any further loss after reporting will be borne by the bank. The limited liability is with the unauthorized transaction. The fault is neither with the bank nor with the customer. Lies anywhere else in the system, right? If it is a third party breach, then the bank is going to bear the responsibility if the customer reports within 3 working days. But it is not a third party breach. The 25,000 criteria would arise if there's a delay on the part of the customer. More than 3 days, between 4 to 7 days, they respond to the bank, they complain to the bank, then the third and fourth statement will be correct. The correct answer should be A, 1 and 2 only. Is this clear, everyone? Is this clear? When there's a delay on the part of the customer in notifying the bank of a transaction because of a third party breach, then the limited liability will be there. If it is a BSBDA account, 5,000 rupees, saving bank, cash credit account, 10,000 rupees, credit card, less than 5 lakh rupees, 10,000 rupees will be the maximum limit of the customer. Yes, do not get confused. Okay. Mr. Sharma holds a regular savings account and receives an SMS alert about a suspicious transaction of rupees 18,000. He ignores it initially, assuming it is a system error. He reports the transaction to the bank on the sixth working day after receiving the alert. Sixth working day. The bank confirms that the breach was due to a third party compromise in the payment gateway. The fault was with the third party, with the payment gateway. No fault attributable to either the bank or Mr. Sharma. Right, so here clearly it is saying that it was a third party breach, payment gateway's fault. Now evaluate. Mr. Sharma will not be will is not eligible for zero liability due to the delay in reporting. Was there a delay? Yes. Sixth working day. His liability will be limited to 10,000 rupees as per the prescribed cap for the savings account. Had he reported within 3 working days, he would have been eligible for zero liability. The bank is liable for the remaining rupees 8,000 loss. What will be the correct answer? What will be the liability of Mr. Sharma? What will be the liability of Mr. Sharma? C. 1, 3, and 4. Why? You are saying that he's eligible for the limited, he's not eligible for zero liability too. Zero liability would be there if had he reported the bank within 3 working days. So zero liability is not eligible, but he is eligible for the limited liability or not. He is eligible for the limited liability. He won't be bearing the full liability, he'll be bearing the limited liability. And for the savings account, the limited liability cap is 10,000 rupees. So the first statement is also true, second statement is also true. Had he reported within 3 working days, he would have been eligible for zero liability. Third statement is also true. The bank will be liable for the remaining 8,000 rupees loss. So all the statements are correct. I think you need to revise this topic again, right? You're answering C. His liability is limited to 10,000 rupees. In the previous question, Miss Ritu had to face the full liability because she herself shared the OTP. She herself shared the payment credentials. Here, the Mr. Sharma had not shared their details. It was a third party breach. Yes, Harsh. D is correct. 1, 2, 3, and 4. Clear, everyone? I have provided you the table, each and every point in the notes in yesterday's class. Make sure that you revise it. Very important topic. You will definitely get these type of questions in your exam about the liability of the customer. Clear? Is it clear? Remember, zero liability of the customer when it is the fault of the bank or a third party breach and they responded to the bank within 3 working days. Full liability of the customer if it is the fault of the customer. They share their credentials, payment details. Limited liability of the customer, third party breach, and they make a delay in responding. Beyond 3 working days, between 4 to 7 days, limited liability will be there. All right? Clear, everyone? Okay. A large Indian bank with diverse needs, retail, MSME, agri-finance, rolls out a CRM solution across its network. The vendor deploys a uniform CRM template without evaluating the bank's existing business process. Within months, the retail division reports mismatches in the product mapping, while the MSME teams complain that the customer segmentation logic doesn't reflect their credit cycle. Agri-finance team find the CRM unable to track the seasonal loan disbursement. So, which evaluate the incorrect statement from the following statements. The CRM failure stems from inadequate evaluation of the business process prior to customization. Uniform CRM deployment across verticals violate the principle of process orientation. Segmentation mismatch in MSME and agri-finance. Poor integration of information process. The CRM system should have replaced the existing product logic to ensure standardization. Which of the following statements are is incorrect? One of these four statements are incorrect. Which statement is incorrect? Yes, statement D is incorrect. CRM does not replace the project logic. All right, the issue was that we used the same CRM for all the verticals. Although the verticals are completely different, retail, MSME, agri-finance. We could not evaluate the existing business process. There was a mismatch in the information. right? Integration of information was incorrect. So the correct answer is D. The bank's strategic planning team is preparing a report on emerging consumer trends in digital payments. They source data from RBI bulletins, the NCAER reports, and the trade journals. They also consult brokers and fintech partners for the anecdotal insights. The team uses this information to forecast demand for UPI linked savings account and to benchmark the competitor offering. Assess the following statements. Forecasting the demand for UPI linked accounts requires marketing research system inputs. Benchmarking competitors' offering is a part of internal marketing information. The use of RBI bulletins and the NCAER reports falls under the marketing intelligence system. Consulting brokers and fintech partners is a part of the marketing intelligence system. Which of these statements are correct? Now, when we are talking about the marketing information system, there are four components, right? There are four components: the marketing, the internal record system or the internal marketing information, the market intelligence system, the marketing research system, and the marketing management and science system. So, which of these statements are correct? 1, 2, and 3, 3 and 4. You are saying C, 1, 3, and 4. UPI linked accounts, forecasting demand for UPI linked account requires marketing research system input. The purpose of marketing research is getting information about specific marketing problem, right? So they will conduct surveys, consumer interview, dealer survey, etc. Already we have the UPI data, so it would be internal, the internal record system. Okay, the internal record system first statement is not correct. Benchmarking the competitors offering is not internal marketing. This will be the work of the research team, right? RBI bulletins, marketing intelligence system, correct. Consulting the brokers is also a part of the marketing intelligence. So 3 and 4 should be true. 3 and 4. 3 and 4 should be true. Let us recall what we have studied. In the internal marketing information, data on the sales turnovers, cost, cash flows, account receivables, all of these are checked. Then marketing intelligence means getting information from the the annual reports of the Central Statistical Organization, the National Council of Applied Economics and Research, many other things, marketing agencies, ORG, MARG, all of these are there. Marketing research system, obtaining information about the specific marketing problem, consumer behavior, likes and wants, channels of distribution, the field surveys, consumer interview will be conducted, dealer survey will be conducted, marketing management and science system, using the information to cover the communication gap. Okay, so the correct answer will be B. So now we are done with our module C. We have questions from module E now. Fourth module, additional reading material on home loans. I know we have not completed the theoretical revision, but let us see how many questions we are able to solve. Okay, so that you can revise later on. Miss Khan applies for a housing loan to purchase a resale flat in a 12-year-old building. The branch obtains the valuation report, which confirms the age and estimates a future life of 25 years. The property tax receipts are up to date, but the building lacks RERA registration. The municipal authority had approved the original construction plan. Evaluate the following statements. RERA approval is mandatory for all housing loan cases. The valuation report must record both age and estimated future life of the building, up to date tax payment, and municipal approval are essential for loan appraisal. Absence of RERA registration may not be a disqualifier in the resale cases. This is a case of a resale flat. Is RERA approval required or not? 2 and 3 are correct. All right, 2 and 3, obviously, they are correct. Out of 1 and 4, which of the following statement is correct? Yes, the correct answer is D. Absence of RERA registration may not be a disqualifier in the resale cases. In the first time, RERA approval is mandatory. Okay, in the first time, RERA approval is mandatory, but it is a resale flat. And the municipal authority had approved the original construction plan. Okay, so the correct answer will be D. Regarding the operational flexibility of the check-off arrangement, consider the following. If salary is credited to a bank account, the bank can execute the arrangement via irrevocable standing instructions. The mechanism is invalid if salary is disbursed in cash or through manual vouchers. The lender must monitor the changes in the borrower's employment or banking relationship to safeguard the repayment. The check-off facility. Which of the following statements are correct about the check-off facility? What is check-off facility? In case of a salaried person, basically salary deductions and making the remittance to the lender should be taken. This is the check-off facility. The employer will be asked to record this authority. So here there will be an irrevocable letter from of authority from the borrowers for deducting the specific amount. Payment of dues to the lender. Undertaking from the employer should be obtained that if there's a change in if there's a transfer, resignation, or retirement, they will inform the lender. Right? The check-off facility can work through a bank account if salary is paid through a bank. Right? So here the correct answer should be C. You're saying A, C, D, and D. C. If salary is credited to the bank account, the bank can execute the arrangement via a irrevocable standing through. The mechanism is invalid if the salary is disbursed in cash or through manual vouchers. No, the lender must monitor the changes in the borrower's employment. Correct. In case, let's say government officers, they are drawing and disbursing authorities and they're taking the loans, undertaking from them will be sufficient. In case we are talking about the salary is paid through any other mode, then that any other mode will be used for the check off facility. All right, that other mode will be used for check off facility. Only if the salary is credited to the bank account, then the bank will execute the management and the arrangement. All right, so 1 and 3 is correct. Okay. Consider the following statements about the legal and operational implications of equitable mortgage. You have studied about the simple registered mortgage, equitable mortgage, conditional mortgages as well. Equitable mortgage does not require registration or stamp duty, making it cost effective. Rights of the mortgagee under the equitable mortgage are inferior to those under the registered mortgage. Equitable mortgage has priority over the subsequent registered mortgage. Temporary custody transfer of title deeds does not extinguish the mortgage. If the mortgagee permanently parts with the possession of the title deeds, then the mortgage stands execute, extinguished. What happens in a equitable mortgage, which is also known as equitable by the mortgage by the transfer of title deeds? In the notified districts, right? In the notified districts of the state, the title deeds are transferred to the creditor to take a loan. Original title deeds. Property can be located anywhere in India, right? Property can be located anywhere in India. You are saying all the statements are true. Statement 4, however, says this is correct. Temporary custody of transfer for legal examination does not extinguish the mortgage. 5 is also true. Mortgage is lost if permanently the mortgagee is parting with the possession of the title deeds, right? Anyone else wants to try to answer this question? C. The rights of the mortgagee under equitable mortgage are inferior to those of the registered mortgage. This statement should be incorrect. Rest all the statements are true. Why? Because the equitable mortgage title deeds have been kept with the mortgagee, with the lender. So it is going to have priority over the registered mortgage. All right, in a simple registered mortgage, registration separately is necessary. In an equitable mortgage, registration is not necessary. It is considered as a superior mortgage. Priority of charge. Okay. Yes, so the mortgager will give the property title deeds, original title deeds to the mortgagee. That is why it is going to have priority. So the correct answer should be A. 1, 3, 4, and 5. The rights of the mortgagee under the equitable mortgage are not inferior to those under the registered mortgage. This statement is incorrect. They are not inferior. Okay? Clear? They are not inferior. Rest all the statements are true about the equitable mortgage. So when a person in any of the following towns, Kolkata, Chennai, Bombay, any other town which is specified by the state government, delivers to a creditor the document, original document of title to the immovable property, then it is known as an equitable mortgage, right? There should be a deed, original title deeds, notified town, the deposit will be made to create a security on the property, and the mortgagee will have the same rights under the equitable and registered mortgage. An equitable mortgage will not be inferior to the registered mortgage. Also, let's say an equitable mortgage was created in 2021, and then in 2022 a registered mortgage was created, simple mortgage was created, then also the equitable mortgage will have priority. The equitable mortgage will have priority over all the other subsequent registered mortgages. But if the mortgager parts with the possession of title deeds, then the mortgage will be lost. All right, the mortgagee, the lender. Consider the following statements about a simple registered mortgage. The mortgager binds himself personally to repay the mortgage money without transferring the possession. The mortgage deed must be registered within 4 months of execution, with the sub registrar having jurisdiction over the property. The mortgagee can sell the property directly without court intervention in the case of default. Ad valorem stamp duty and registration charges are applicable, making it a costlier proposition. Now, which of the following statements are correct about a simple registered mortgage? Simple registered mortgage. One of these statements is incorrect. Only one of these statement is incorrect. B, 1, 2, and 4. Yes. What happens in a simple mortgage? The mortgager, who is the borrower, without delivering possession of the mortgage property, binds himself personally to pay the mortgage money. And in the event of his failing to pay, in the event of default, then the mortgagee will have the right to cause the mortgage property to be sold with court intervention. They cannot sell the property without court intervention. All right? Ad valorem stamp, registration deed, all of these things are there within 4 months from the date of execution. It has to be registered with the registrar. So the correct answer is B. Okay. Mr. Rajan took a housing loan of rupees 40 lakh on 15th May 2019 for constructing a self-occupied house. Due to delays, the construction was completed only in December 2025. He paid rupees 3.5 lakh as interest during the pre-construction period. He now wishes to claim deduction under the section 24B for the financial year 2025-26. Evaluate the following statements and select the incorrect one. Evaluate the following statements and select the incorrect one. When we are talking about housing finance tax planning, section 24B, interest on the housing loan can be claimed as a deduction from the income from property, salary, business, profession, up to a maximum of 2 lakh rupees, right? If the loan is for the purchase or construction of a residential property. However, the construction should get completed within 5 years of raising the loan. This condition is there, right? And the deduction can be claimed only from the financial year when the purchase or the construction is completed. So here what is happening? After the construction was completed after 5 years. So what will be the situation? Since the construction was completed after 5 years from the end of the financial year, the maximum deduction allowed is 30,000 per year. True. Why? Because if the construction is not completed, then the amount will reduce from 2 lakh to 30,000. The tax benefit under section 24 is reduced from rupees 2 lakh to rupees 30,000 if the property is not acquired or the construction is not completed within 5 years from the end of financial year in which the loan was taken. So the first statement is correct. Pre-construction interest of 3.5 lakh can be claimed in equal installments starting from financial year 2025-26. Yes. The total deduction in any year for a self-occupied property cannot exceed 2 lakh rupees. This is also true. Mr. Rajan can claim 70,000 per year as pre-construction interest deduction for 5 years. No, 30,000. So the correct answer should be fourth statement is incorrect. All right. The construction was completed after 5 years, so the deduction which is allowed will be 30,000, not 70,000. All right, you need to select the incorrect statement. All right, clear everyone? I know you'll have to revise once. You need to revise all the sections and then you'll be able to answer it. Okay. Mr. Iqbal owns a second flat in Mumbai which is rented out. He pays 3.2 lakh interest annually on the housing loan taken for this property. The construction was completed in 2022. He wants to claim deduction under section 24B for the financial year 2025-26. Again, this is regarding the section 24B. Since the property is rented, there is no upper limit on the interest deduction under section 24B. Deduction is allowed on accrual basis even if the interest is not paid during the year. Pre-construction interest, if any, must be claimed in 5 equal installments. The rupees 2 lakh cap applies only to the self-occupied properties. What should be correct? What should be the correct answer? What should be the correct answer? B, 3 and 4. 3 and 4. What are the conditions under section 24B? Do you remember? No, B is not correct. When the loan is taken for a property which is not self-occupied, it is rented, there is no maximum limit for the tax deduction, right? The taxpayer can take the deduction of the whole interest amount section 24 if it is a rented property. So the first statement is correct. Okay, it is rented, so there is no upper limit on the interest deduction. Deduction is allowed on the accrual basis even if the interest is not paid during the year. That is also correct, right? The home loan under section 24 is deductible on a payable basis, on an accrual basis, that it is to be paid. So the second statement is also correct. Pre-construction interest has to be claimed within in 5 equal installments. Yes, it is allowed to be claimed as a tax deducted in 5 equal yearly installments, and the total amount for a year is 2 lakh rupees. Okay, and the 2 lakh cap applies only to the self-occupied property. Yes, the correct answer should be D. All the above statements are correct. The 2 lakh applies only to the self-occupied property. If it is a rented property, then there's no upper cap, there's no upper limit. Okay. Mr. Mehta purchases a residential flat in the financial year 2025-26 without availing any housing loan. He pays 1.2 lakh as a stamp duty and 60,000 as the registration charges. He also invests 50,000 rupees in the PPF, 30,000 rupees in the life insurance premium, and he wishes to claim deduction under section 80C. Evaluate the following statements. Mr. Mehta can claim deduction for stamp duty and registration fee under section 80C even without a housing loan. The total deduction available to Mr. Mehta under section 80C is capped at 1.5 lakh. Deduction for stamp duty registration fee is allowed only in the year of payment. Mr. Mehta can carry forward the excess stamp duty deduction to the next year. Now you need to answer for the section 80C. Section 80C, tax benefit, which is given on the home loan principal. Yes, what should be the correct answer? Maximum deduction allowed is 1.5 lakh. True. Both for self-occupied and let out property. Maximum of 1.5 lakh every year from the taxable income. Right? This is a part of the various deductions which are allowed under section 80C. So if they're investing in the PPF account, tax saving fixed deposit, life insurance premium, NSC, senior citizen savings scheme, then also they can claim the deduction. It is inclusive of all the options. Right? Section 80C includes the principal payment along with all of these other options. Okay. So now, yes, the correct answer is A, 1, 2, and 3. Great. Right? Mr. Mehta cannot carry forward the excess stamp duty deduction to the next year. This statement is incorrect. Okay, they cannot. The amount, the tax deduction is available on a payment basis. It does not depend on the year for which the payment has been made. The amount paid as stamp duty registration fee is also allowed. Right? This deduction can be claimed whether the assessee has taken a loan or not. Okay, so only if the construction of the property is complete and the completion certificate is there, no deduction will be allowed for the repayment of principal during which the property was under construction. Once a completion certificate is received, only then the amount can be claimed. Deduction is also available whether the property is self-occupied or let out. and for more than one house property also. These are the conditions for the Section 80C. Okay. Mr. and Mrs. Sinha jointly purchase a residential flat worth rupees 48 lakh in the financial year 2025-26. The home loan sanctioned is 34 lakh rupees. Both contribute equally to the EMI payments. Neither of them owns any other property on the date of the loan sanction. The property is self-occupied. Each pays rupees 1.9 lakh as the interest during the year. So which of the following? Now we are talking about the Section 80EE deduction for the first time home buyers. So are they first time home buyers? Yes. Neither of them owns any property on the date of loan sanction. So 80EE is applicable. Okay, it is also applicable on the interest paid on home loan. So what should be the correct answer? What should be the correct answer? 1, 2, and 3, 3 and 4, 1, 3 and 4, or 2, 3 and 4. It is a joint loan. The most important factor of taking a joint loan is that both the parties can separately claim the benefit individually, right? So both of them are eligible to claim deduction. They can claim 50,000 each over and above the section 24B, correct? The property value and the loan amount satisfy the eligibility condition, correct? D is true. It can be a self-occupied property or it can be rented property. Under section 80EE, there's no such restriction. All right, there's no such restriction. The deduction will be available to both of them. The loan should be less than 50 lakh rupees. It is 34 lakh, so it is available. The property should be less than 50 lakh rupees. It is 48 lakh eligible. Loan should not exceed 35 lakh rupees. 34 lakh is given, again eligible. Tax benefit can be claimed till the time of the time repayment of the loan continues. Deduction is applicable for the home loan for the first time property buyers only, and the property can be either self occupied or non self occupied. It is applicable on a per person basis. Per person basis. Each of the partner can individually claim the deduction. All right. So that is the correct answer. Mr. Arjun took a home loan of rupees 33 lakh in April 2024 for a flat worth rupees 49 lakh. He refinanced the loan with another lender in the financial year 2025-26. He paid 2.2 lakh rupees interest during the year. He owns no other property and lives in the purchased flat. Again, this is related to section 80EE. Arjun is eligible under section 80EE since the original loan meets all the conditions. Refinancing does not qualify him for claiming deduction under section 80EE. He can claim 2 lakh rupees under section 24 and 550,000 under section 80EE. Deduction under section 80EE is allowed only for the first year of loan sanction. Which of these statements are correct? Which of these statements are correct? Yes, what should be the correct answer? Quickly. We just now saw that the section 80EE is allowed. The deductions can be claimed till we pay off the rent, till we pay off the interest, right? The property is 49 lakh, below 50 lakh, loan is 33 lakh, below 35. So the conditions are met. The tax benefit can be claimed till the time the repayment of the loan continues, not just for the first year. So the fourth statement will be incorrect. 1, 2, and 3 are correct. Right? A, 1, 2, and 3. 1, 2, and 3 is correct. Sharmila, yes, A is correct, not C. Deduction can be continued till the repayment continues. Okay. Mr. Sharma, who is a resident individual, sells his self-occupied residential house in June 2025 and earns a long-term capital gain of rupees 48 lakh. He intends to reinvest the amount in a combination of residential property and the NHAI bonds. He purchases a new residential house in Pune for 30 lakh rupees in September 2025 and invests 18 lakh in the NHAI bonds in December 2025. Evaluate the following statements. Mr. Sharma can claim exemption under Section 54 for the 30 lakh invested in the new house. He can simultaneously claim exemption under Section 54 EC for the 18 lakh invested in the NHAI bonds. The combined exemption of Section 54 and 54 EC is capped at rupees 50 lakh. The investment in the bonds must be made within 6 months from the date of transfer. So, which of these statements will be correct under the capital gain scheme? Capital gains. The various deductions. Section 54, long-term capital gain arising on property on the residential house property to be reinvested in the purchase or construction of one residential house, right? So first statement is correct. Second statement, 54 EC, section 54 EC talks about the NHAI or the Rural Electrification Corporation Limited, right? Reinvesting in the bonds. This is also true. The maximum which is allowed for investment together. Okay, so this is also true. Combined is at 50 lakh rupees. Again, correct. And it has to be made within 6 months. Did he make the investment within 6 months? December and June. Yes. So the correct answer should be D. All the above statements are correct. Okay. Okay. A firm sells its agricultural land which was held for 3 years in a rural area and earns a long-term capital gain of rupees 20 lakh. It reinvests the entire gain in purchasing a new agricultural land within 2 months. Separately, the firm also sells a building used in its industrial unit located in an urban area and uses the proceeds to shift the unit to a notified specially economic zone. Special economic zone. Acquiring new plant and machinery. Assess the following statements. The gain from the agriculture land qualifies for exemption under Section 54B. The reinvestment in the SEZ related assets qualifies for exemption under Section 54GA. The Section 54B applies only to individuals and HUFs, not to the firms. The Section 54GA allows exemption only if the industrial undertaking is shifted from an urban area to a rural area. What should be the correct answer? 1 and 2, 3 and 4, 2 and 4, or 1 and 4? What should be the correct answer? C, 2 and 4. GA allows exemption? No. Recall what we have studied. The question is asking about section 54B and section 64GA. Section 54B, long-term or short-term capital gain arising of transfer of agricultural land to be reinvested in the purchase of another agricultural land. True, right? And section 64GA, gain arising on transfer of land, building, plant, or machinery in order to shift an industrial undertaking to a special economic zone. It should be reinvested in acquiring land, building, machinery in order to shift in the special economic zone. So the correct answer should be A, 1 and 2 only. 1 and 2 only. Okay. GA is not shifting the industrial undertaking from urban area to rural area. No, we are shifting the undertaking to the special economic zone. Undertaking from an urban area to a special economic zone, not a rural area. All right, special economic zone. That is why only 1 and 2 is correct. 1 and 2 is correct. Mr. Arvind sells a plot of land in February 2017 and earns a long-term capital gain of 40 lakh rupees. He invests the entire sale consideration in equity shares of an eligible startup company in April 2017. The startup uses the funds to purchase new plant and machinery within the prescribed time. Mr. Arvind holds no other residential property on the date of investment. Evaluate the following statements. The exemption under section 54GB is available even if the capital gain arises from a commercial property. Mr. Arvind is eligible for exemption under section 654GB. Exemption is valid since the investment was made before the sunset date of 31st March 2019. The exemption is available only if the startup qualifies as an eligible company under the Act. What is the section 654GB? If we have a long term capital gain arising on transfer of residential property, not commercial property. Residential property can be a house or it can be a plot of land. So it is a plot of land. Correct. Okay. The transfer should take place during 1st April 2012 and 31st March 2017, right? However, if they are investing in the eligible startup, then it is 31st March 2019. Okay, and they invested accordingly. So, what should be the correct answer? The net sale consideration should be utilized to subscribe in the equity shares of an eligible company. All right, company which comes under the definition of the eligible company. So the correct answer is 2, 3 and 4. GB talks about only a residential property. It can be a house or it can be a plot of land. Commercial property is not allowed. All right, so C is correct. 2, 3 and 4 is correct. All right, all of these sections are very important. Okay. All right, now we are starting with a few numericals. How many numericals do we have? We have around 10 numericals. Okay, all numericals, we have 10. Let us start. Okay, first question. An investor earns 9% annual compound interest. Approximately how many years will it take for their investment to quadruple? Very simple, right? We have studied about the three rules, right? We have studied about the three rules. Do you remember the three rules? The rule of 72, 115 and 144. 72, 115, 144. If we want to see in how many years it will become two times, we will use the rule of 72. In how many years it will become three times, we will use the rule of 115. And in how many years it will become four times, we will use the rule of 144. Simply divide this number by the rate of interest, right? So here we need to check in how many years it will become four times. So 144 divided by 9. Do you remember? Please respond. Yes? Do you remember these three rules or not? Rule of 72, 115, and 144. Right? So 144 divided by 9 is 16 years. Yes, 16 years. If I wanted to see in how many years it will become double, so simply divide 72 by 9, it is 8 years. And if I want to see in how many years it will become 3 times, so 115 divided by 9, it will be around 12.5 years. Okay, and in 9 years it will become 4 times. Very simple. Okay, if 5,000 rupees grows to 10,000 rupees in 10 years at compound interest, what is the approximate rate of interest? The same concept is being used here, just the question is changed a bit. Okay, 5,000 rupees grows to 10,000 rupees in 10 years at compound interest. What is the approximate rate of interest? The approximate rate of interest. So they are saying that it is becoming 2 times in 10 years, right? So 72 divided by the rate of interest is what? The number of years in which it is becoming 2 times. Is it true or not? Everyone, please answer. Which rule should be used here? Yes. So these questions are very simple, right? You are easily able to solve these numerical questions. The correct answer is B. Correct. Just give me a second. Hmm. Okay. If 20,000 rupees is 20,000 rupees, no, 2 lakh rupees is invested at 8% per annum, compounded annually. What will be the future value after 3 years? So you need to get the future value. The current value is given. Huh, so we will convert it into the percentage 7.2. Okay. You need to calculate the future value. Use the future value formula and see what will be the value after 3 years. Tell me what is the correct answer. Future value, future value is equal to present value multiplied by 1 plus r raised to power n. This is the formula, right? So the present value is given 2 lakh rupees multiplied by 8% will be 0.08. So 1.08 raised to power 3. Use your calculators to calculate this value in the bracket. So 1.08. I will press multiplication button once and then twice I will press the is equal to 1 and 2. So 1.25, around 1.25. So 20 lakh multiplied by 1.25. It should be 2 lakh 52,000 around somewhere, right? So approximate 2 lakh 52,000 should be the correct answer. It's not 20 lakh, it's 2 lakhs, right? So wait, it is 25. So it should be B. It is more close to B, right? It is more close to B. Clear everyone? Huh. The exact value is 251942, somewhere there. Approximate. Just we need to remember the formula. Okay. So it was 2 lakh multiplied by 1.259, whatever came out to be the answer. Okay. 1 lakh rupees is invested at 10% per annum compounded half yearly for 2 years. Now here it is given half yearly. Keep in mind and then solve the question half yearly. We are half yearly compounding it. So if the rate of interest is 10%, half yearly compounding, the rate of interest that we are going to use will become 5%. And n is given 2 years, but again half yearly, so n will be using 4. Okay, so it will be 1 lakh rupees multiplied by 1.05 raised to power 4. This will be the future value, right? This will be the future value. Calculate it. Multiplied by 1.05 multiplication 1, 2, 3, 1.215 multiplied by 1 lakh. So 12, 15, 1 lakh 21,500. I'm getting 1 lakh 21,500. 1 lakh 21,500. It should be D. Okay, the options are a bit. Okay. Yes, so it is 1 lakh 21,500. This one. Everyone's getting it? Yes. How 4? Because it is we are compounding it half yearly for 2 years. So 4 times. We are compounding it 4 times. N means how many times are we compounding it? That is why we are not using 2, we are using 4. How many times we are compounding it? Okay. Sharmila, how many times? Okay. Yes. An investor deposits 10,000 rupees annually for 5 years at 8% per annum compounded annually. What is the future value of the investment? Same question, right? Same question. How is it being done? What is the future value of the investment? Yes. Can we use the annuity formula here? Okay, let us use the annuity formula. Right? Ordinary annuity formula. Let us use the ordinary annuity formula so that we can practice those questions as well. So how do we calculate the ordinary annuity? Simply, it is A, the future value for calculating ordinary annuity A, 1 plus R raised to power n minus 1 divided by R. Right? This is the formula. So it is given 10,000 rupees multiplied by 1.08, 1.08 raised to power 5 minus 1 divided by 1.08. Simple. So 1.08 multiplied 1, 2, 3, 4, right? Minus 1, it is 1.46. So 0. Okay, yes. 0.4693, 0.4693 divided by 0.08, 5.86, 5.86625 multiplied by 10,000 rupees. It should be 5 lakh 86,000 somewhere. 5 lakh 86,600 and no 58,000 58,662.5. Are you getting this? Everyone? Are you getting this value? I am weak at maths, so that is why I have to use the calculators. If can do it without calculators, then you can do it. Repeat, all right. So 1.08, our rate of interest is zero point 0.08, right? In the numerator, 1 plus is given. You're not getting this answer. Why? Okay, I will write it down. See, the whole calculation is given in front of you. So 1.08, 1.08 multiplication once and then is equal to 4 times. So 1, 2, 3 and 4. I have 1.4693. It is 1.4693. Let me write it down once again. 1.4693. Okay? Yes. Divided by 0.08 divided by zero point zero 0.08 is giving me it is one minus, right? So 0.4693 divided by 0.08, it is 5.86625. Multiply it by 10,000, so it will be 58,662.5. Yes, so the correct answer should be A, 58,000. Why are you not getting this value? I'm sure I have included the solution also. Yes, A is the correct answer. Huh. See, so 10,000 multiplied by 1.08 raised to power 5 minus 1 divided by 0.08. So it is 1.4693 minus 1. Did you minus 1? Manohar. Huh, correct. Okay. Sharmila. 1.4693 minus 1 is also there and then divided by 0.08 and then multiplied by 10,000 rupees. So it is 5,000, 58,662. Okay, next. A person deposits 10,000 rupees monthly for 10 years at 10% per annum, compounded monthly. What is the future value? Same, right? Same formula we are going to use, but it is compounded monthly. Okay, it is compounded monthly. So we need to divide our rate of interest by 12. Our rate of interest will be 0.10, right? Because it is compounded monthly, so we will divide it by 12. So 0.10 divided by 12 is 0.0083. We will, and then it is going on. So this is 0.00833 because it is given, it is compounded monthly. And n will now become 120. N will become 120. Oh, it is a very long calculation. Very long calculation. Such question won't be asked. Okay. Where there is such long calculation, it won't be asked. But if you calculate it, then it will give you the answer. Logarithms and all will be used here. It won't be asked in your exam. Let us skip this question. Okay. Next, we have 5,000 rupees is deposited at the beginning of each year for 5 years at 10% per annum. What is the future value? When we are talking about beginning of each year, then it is what? It is the annuity due. Annuity due, right? Normally, investment at the end of year, ordinary annuity we are using, but here it is saying beginning of each year, so annuity due. What is the formula for calculating annuity due? It is simple. The same formula is used. A multiplied by 1 plus r raised to power n minus 1 divided by r. In r, here you also multiply it 1 by 1 multiplied by r. Right? This is the annuity due formula. Right? This is the annuity due formula. Not 1 multiplied by r, it is 1 plus r. 1 plus r. So put the values. 5,000 rupees multiplied by 1.10 raised to power 5 minus 1 divided by 1.10 multiplied by 1.10. Yes. So calculated. We have 1.10 multiply 1, 2, 3, 4, 1.610. So 5,000 multiplied by 0.6105 divided by 1.10. Sorry, zero point 0, zero point 0.10. Okay, I have this calculation right here. The correct answer is D. 5,000 multiplied by 1.10 raised to power 5 minus 1 divided by 1.10, multiply it by 1 plus r. This is the formula for annuity due. Ordinary annuity, you need not do this additional step. In annuity due, you have to multiply it by 1 plus r. Okay, so this will be the correct answer. Which of the following statements accurately reflect the nature of the bond market? It is a highly volatile and it is suitable for aggressive investors. It facilitates short-term capital access for the startups. It is a platform for trading debt securities with lower volatility. It exclusively deals with equity instruments. Good morning, Prabhakar. Good morning. Everyone, answer this question. So, we are starting with the unit 23, the different types of investment products, under which first we have a bond. What are bond? What is a bond? Bond is a fixed instrument, right? Fixed income instrument. The issuer of the bond is somewhat a borrower. The companies, government, private companies, large companies, all of them, they issue bonds. They are known as a borrower. And the investors, they are known as creditors. So a loan is forwarded by an investor to the borrower. And yes, when we are talking about the bond market, no, Krishna, bond market is for trading the debt securities with lower volatility. Highly volatile, suitable for aggressive investors. It is the equity market. Okay. Bond market is stable. The returns are stable. They do not vary much. And they are issued by the issuers for raising capital in the long term nature, not in the short term. All right, in the long term capital. So the correct answer should be C. It is a platform for trading debt securities with lower volatility. All right. Consider the following statements about tactical management in wealth management. So, what is wealth management? We have already seen. It is a combination of the financial services to address the needs of the affluent clients. It includes tax planning, estate planning, retirement planning, portfolio, financial services management, right? Which is provided to the business owners, corporates, or an individual for a higher fee. Now, it is of three types. We have asset allocation management, tactical management, and diversified management. Diversified management. So, which of the following are correct about the second one? It involves selecting appropriate tactics to achieve the financial strategies. It is primarily focused on income generation through fixed deposits. Why am I getting C as the answer? It emphasizes choosing the best alternatives for financial execution. It is a passive investment approach with minimal client interaction. You need to select the correct statements. Correct statements. Yes, the correct statements are B, 1 and 3. It is not focused on just fixed deposit. See, what is asset allocation? Asset allocation's primary goal is to focus on initiating income, to start income generation for the client, initiate it. And it is not that also is not focused on just one type of instrument, a balanced mix among the investment categories. Tactical appropriate ways to achieve the financial strategies, appropriate tactics, choosing the best alternatives. Diversification means flexible model, right? The investment management is flexible, that would help meet the client's needs. Okay, do not be quick to answer. Read the statements carefully and then answer, please. Otherwise, you will lose easy marks in your exam. Questions are not tough. All you need to do is read carefully. You have studied everything. All right, so the correct answer is B, 1 and 3. 2 and 4 are incorrect. Okay, consider the following statements about the regular convertible bonds. So we have studied about the convertible bonds. There's the option of converting the bond into equity shares of the issuer, either on maturity or at predetermined intervals at predetermined prices and rates. There are three types of convertible bonds. There's the regular convertible, mandatory convertible, and reverse convertible. So, which of the following statements are correct about regular convertible? They have a fixed maturity date and predetermined conversion price. They obligate the investor to convert into equity at maturity. They are commonly issued to the public. They offer higher interest rates than the mandatory convertible bonds. Which of the following statements are correct? Which of the following statements will be correct about the... No, not correct. You need to answer the incorrect statements. Which statements are incorrect? Incorrect statements. The question says you need to answer the incorrect statements. Sorry, I did not tell it before. Change your answer. What are the incorrect statement? Yes, correct, Krishna. Great. The incorrect statements are 2 and 4 only. They have a fixed maturity date and predetermined price. In the regular convertible bond, the investor has the right or the option to convert into the equity shares of the company. There's no obligation, it is not compulsory for them. So they are issued to the public. Generally, they are issued to the public. In mandatory convertible bond, the investor it is compulsory for them to get their bonds converted into equity shares of the company. And how there's a compulsion here, it is they're essentially forced to convert their bonds, thus it will be a higher price, a higher rate of interest. Reverse convertible bond, the investor does not have the right or the option, the issuing company, the issuer has the right to convert them into equity shares upon maturity at the predetermined conversion price. Okay, so the correct answer is C. Everyone has answered C. Yes. Evaluate the following statements about government bonds. They are considered extremely safe due to the sovereign backing. They are issued for tenures from 5 to 40 years. They are available only to the institutional investors. They form a significant portion of the Indian bond market. Which of the following statements are correct about government bonds? Government bonds. They're issued by central and state government to tide over liquidity crisis for development of infrastructure. They're usually long-term bonds, right? The different types of government bonds that we have studied about: Fixed rate, floating rate, sovereign gold bond, inflation indexed bond, zero coupon bond. So the correct answer, yes, the correct answer is A, 1, 2, and 4 only. They are available not only to the institutional investors, they are also issued to the commercial banks, individual investors, cooperative banks. Okay, so large as well as small investors can subscribe in the government bonds. So 1, 2, and 4 are correct. Regarding the reverse convertible bonds, consider the following statements. The issuer holds the right to convert the bond into equity. The investor is obligated to convert the bond at maturity. The conversion price is predetermined. These bonds are typically issued by the government entities. Which statements are correct about the reverse convertible bonds? Reverse convertible. What will be the correct answer about reverse convertible bonds? We have already discussed, right? So the first statement is correct. Issuer holds the right to convert and the conversion price is predetermined. Okay, the investor is obligated to convert is a feature of the mandatory convertible bond, and these bonds are not typically issued by the government entities. These are issued by all other types of entities as well, by the large companies, issuing companies. Okay, yes, the correct answer is D, 1 and 3. Which of the following statements best explain the risk associated with the long-term fixed rate bonds? They are subject to frequent interest rate resets. They offer no interest payment during tenure. They're vulnerable to inflation-induced value or erosion. They're auctioned at variable spreads. So the fixed rate bonds which are issued by the government, which of the following statements best explain the risk associated with it? The risk that is associated with it. Everyone who is present here, also please like the video. Like the video, everyone. Yes, the correct answer is C. Simple question. C. They're vulnerable to the inflation-induced value erosion. So when the fixed rate bond is of a longer term and inflation increases, this benefit will not be given to the bond. Okay, so even in a situation of a boom in the market, when the business cycle is in the boom, then also we won't have the benefit. Also, the inflation goes on increasing. So if the value is fixed, the comparing it to the inflation, the value of money will be low. Okay, so the correct answer is C. In the floating rate bonds, which component remains constant throughout the bond's tenor? The benchmark rate, spread determined via auction, reset frequency, or the total interest rate. So what happens in the fixed rate bond? They are applicable for the government bonds. It is fixed for the entire tenor, regardless of the fluctuating market rates. The lock-in period is 1 to 5 years. Premature withdrawal can also lead to penalties. In the floating rate bonds, however, there are variable interest rate, which are based on the periodic changes experienced by the rate of returns. And the intervals within which these changes occur are made clear prior to the bonds being issued. Right? So we split the rate of interest. The rate of interest is split into two. There is the base rate and then there is the spread, right? The base rate and the fixed spread. Okay, so when we are investing in the floating rate bond, we will consider what is the benchmark rate, the spread, the amount of shift in the rate over and above the benchmark, what is the recent frequency. No, the thing that remains the same or stable, the name itself tells us it is the spread which is determined via the auction. All right. There's the base rate which changes and the fixed spread. The spread is determined via auction and it remains stable right up to the maturity. So who answered B? Spread determined via auction is correct. All right. So when are we going to buy such floating rate bond? When the rates are low and they're expected to rise in the near future. All right. The change is dependent on the benchmark rate. So the benchmark rate is obviously going to change. The spread remains stable. Which of the following features is unique to the sovereign gold bonds? Physical delivery of gold at maturity, taxable interest income, redemption allowed anytime post issuance, nominal value based on the average gold price prior to issue. The sovereign gold bonds. Here I can invest in the digitized form of gold for an extended period of time without having to avail gold in its physical form. The interest rate, how is it tax free or is it taxed? How the nominal value is derived? Are there any limits imposed on what amount of sovereign gold bond an individual may hold? What is the liquidity and redemption? So which of the following is a unique feature? Unique feature, you know, we are not asking the correct statement. The feature which is unique only to the sovereign gold bond. B, no, the interest is not taxed, it is tax free. The interest which is generated in sovereign gold bonds is tax free. B is incorrect, tax free. Yes, the nominal value is based on the average gold price. So 99 purity, 99% purity, 3 days prior to the issuance of the bond in question. The Indian bullion, they determine what is the price of the sovereign gold bond. All right, so the correct answer is D. Regarding the retail bonds, consider the following statements. They are issued by the companies to raise capital. They are typically unlisted and illiquid. They are they offer fixed interest rate for a defined tenor. They can be traced during the regular market rates. Which of the following statements are correct about the retail bonds? The fourth category of bonds. Retail bonds. Is it to raise capital? Does the company issuing the retail bond, are they issuing it for raising capital? Yes, true. They are the retail bonds. If the company wants to raise additional capital, they have already issued bonds. Now for running their project, they need some additional extra fund. So they raise these additional capital by borrowing at a fixed rate from an investor for a specific length of time, right? To expand their business, to pay off their debt, or to fund a specific project. However, the retail bonds are typically listed on the stock exchange. They can be bought and sold during the regular market hours. They are not unlisted, they are not illiquid. The correct answer should be A, 1, 3, and 4. Okay, to raise additional capital, they are offered for fixed tenor and fixed interest rate. They can be traded during the regular market hours, so they are listed and they are liquid. They can be bought and sold on the exchange. Clear, everyone? The correct answer is A. Evaluate the following statements about the inflation index bond. They are typically issued for the retail investors. The returns are linked to the CPI or WPI. They offer fixed nominal interest regardless of inflation. They help preserve the purchasing power during the inflationary periods. Answer this question, very simple. Which statements are correct? 2 and 3, 1, 2 and 4, 1 and 3, or all of the above? Read the statements carefully and then answer. Yes, what will be the correct answer, everyone? The name itself tells us they are inflation index bond. So the returns will be linked to the consumer price index or the whole price index, right? Then they help preserve the purchasing power during the inflationary period. This is also true. It will be indexed to inflation. So if the inflation is rising, accordingly, the interest rate will also change. And they're typically issued for retail investors, but they do not offer fixed nominal interest rate regardless of inflation. Why? The name itself tells us it is inflation index. It is linked to the inflation, the current inflation in the economy. So if inflation increases or decreases, the bond coupon will also increase or decrease. The benchmark for determining the rate of interest is inflation, CPI or WPI. All right, so B should be correct. Why am I not getting answers? What happened? Tired already or what? Consider the following statements about the 7.75% Government of India savings bond. They replaced the 8% saving bond in 2018. The interest earned is exempt from income tax. They are issued in the multiples of rupees 1000. NRIs and minors are eligible to invest. Yes, what is the correct answer about this Government of India savings bond? 1 and 3, 2 and 4, 1, 2 and 3, or 1, 3 and 4? C, 1, 2 and 3. Is the interest earned exempt from income tax? When we were talking about the sovereign gold bond, there the interest was tax free. But when we are talking about the Government of India savings bond, the interest earned is taxable according to the investor's tax slab. Yes, the correct answer should be A, 1 and 3 only. NRIs and minors are not eligible, and they have replaced the 8% savings bond in 2018, and they can be issued in the multiples of rupees 1000. Okay, so who all are not eligible? NRIs, minors, HUFs are not eligible. Okay, so the correct answer is A. Hmm. Which of the following best characterizes the risk return symmetry in the sectoral mutual fund? So, what is a mutual fund? Wherein the pool is created by various investors. Then the asset manager, they will invest the money into the various bonds, stocks, or whatever is the scheme, and then the investors they get the units. So what is the risk returns asymmetry in sectoral mutual fund? Sectoral funds offer guaranteed returns if the sector outperforms the benchmark index. They exhibit low correlation with macroeconomic cycles due to sector insulation. They concentrate exposure, amplifying both upside potential and downside risk. The sectoral funds are mandated to diversify across unrelated sectors. So, what is the correct answer about the sectoral mutual fund? So, there are different types of mutual funds: equity mutual fund, investing in the stock market; debt in the debt instruments like treasury bills, government bonds; balanced partially into equity, partially into debt. Sectoral funds, yes, we invest as per the selected sector like IT or banks or the FMCG, pharma, and the manager will control the stock selection based on the selected sector preferences. The returns are based on the stock performance belonging to the specific sector only. So the correct answer is C. They concentrate the exposure. There is both the potential of higher returns or higher risk. Okay, so the correct answer will be C. Consider the following statements about the debt mutual fund. They're ideal for investors seeking capital preservation with predictable returns. They are immune to interest rate fluctuation due to the fixed coupon structures. They may include instruments like treasury bills, government securities, and corporate bonds. They are subject to credit risk and duration risk depending upon the portfolio composition. Which statements are correct? Debt mutual fund. Yes, here also C is true, 1, 3, and 4. They are not immune to the interest rate fluctuations. They are stable as compared to the equity mutual fund, stock mutual fund. They are stable relatively, but they're not completely immune. They're not completely risk free. Rest everything is correct. The instruments are T-bills, G-SECs, and corporate bonds. Okay. Regarding the retail mutual fund investors, consider the following. They may access the mutual funds via direct plans or distributor-led regular plans. They're eligible for the tax benefits only under the debt schemes with lock-in. Their investment decisions are often influenced by the past net asset performance and fund ratings. They're restricted from investing in the closed-ended funds due to liquidity constraints. So, retail mutual fund investors means individuals. Individuals. So, which of the following statements will be correct? Which of the following statements will be correct about the retail mutual fund investors? So they have the option. They can access the mutual funds directly or through the distributor-led regular plans, which will be managed by the fund manager, the asset manager. They are not eligible for the tax benefits only under the debt schemes with lock-in. No, they can also invest in the other areas without the lock-in period, which is also there. Then their investment decisions are often influenced by the past net asset value, and they can also invest in the closed-ended fund. So the correct answer should be A, 1, 3, 1 and 3. They are not restricted from investing in the closed-ended fund. Okay, there is no restriction there. So 1 and 3 is correct. Only 1 and 3. Consider the following statements about the SIP. SIP facilitates rupee cost averaging and disciplined investing. It mandates a fixed investment tenor and cannot be modified mid-cycle. They are made in pre-selected mutual fund schemes at defined intervals. The returns are guaranteed if invested in the debt-oriented schemes. Which statements are correct about the SIP? So SIP and SWP. Systematic investment plan, systematic withdrawal plan, which we have also studied under the mutual fund. So what is correct about the SIP? Rupee cost averaging, disciplined investing, yes. So the it is a disciplined way of investing offered by the mutual fund. If I am the investor, I can invest fixed amounts at regular frequency, every month, every quarter, whatever. So I can invest fixed sum of money at in the selected scheme of mutual fund at predetermined intervals like monthly, quarterly, etc. Okay, so one is true. It does not come with a fixed investment tenure, pre-selected mutual fund schemes, and the returns are not guaranteed. Returns are not guaranteed anywhere. Okay, if the question gives you that the returns are guaranteed or this much return is fixed, it is wrong. Investment means risk. The investment that I'm making today is clear. I know how much I'm sacrificing my present income, but the returns that I'm going to get in the future are unpredictable. Unpredictable. Okay, so the correct answer is A, 1 and 3. Theoretical class videos. We are having the theoretical revision on the Oliveboard platform. Tomorrow at 6 p.m. in the Maha Marathon, we'll be revising the theory again. We'll be doing it quickly because we need to cover all the 5 modules tomorrow and day after tomorrow. But we have 4 to 5 hours on a daily basis tomorrow and on Saturday as well. So we'll be doing the theory there. Okay, otherwise you can join the rapid revision batch where we are revising the modules. We have already revised almost all the modules. Okay? Okay. In the context of systematic withdrawal plans, which statement best reflects its operational mechanism? SWP withdrawal allows withdrawal of capital gains only, not principal. SWP mandates the fixed withdrawal frequency across all the schemes. SWP involves the redemption of the units of NAV and transfer of proceeds. It is restricted to equity mutual fund with the lock-in period. So what is correct about the systematic withdrawal plan? Which statement is correct about the systematic withdrawal plan? B. Fixed withdrawal frequency across all schemes. Is there a fixed withdrawal frequency across all schemes? Crash course capsule batch videos accessible for those batch. It should be there. Connect the team once. It should be there. Okay, let me get back to you. Let me get back to you. Let us do these questions and then let me see what can I do. Yes, so there is the SWP allows us to withdraw at fixed interval, true. But I can choose the amount and the frequency of withdrawal. All right, for all the customers, it is not same. For all the clients, it is not fixed. I have the flexibility to choose the amount and the frequency of withdrawal. And then on the set date, the units of my portfolio will be sold and the fund will be transferred to my account. So it is not fixed. It involves redemption of the units of the NAV and transfer of proceeds. All right. So the SWP for all the customers, the statement B says that it has a fixed withdrawal frequency across all schemes. No, it will be different for different schemes. It can be different for different customers. I can choose when I want to withdraw and how much I want to withdraw. Okay, and the third statement is correct. Regarding the real estate investment trusts, consider the following. It allows the small investors to access real estate income streams. It generates income primarily through the capital gains on property resale. They are required to distribute a majority of their income as dividends. The REITs are structured as pooled investment vehicles regulated by SEBI. Which statements are correct about the real estate investment trust? The real estate investment trust. Yes, what should be the correct answer? The first statement is correct, right? Investing in real estate is very expensive. I need crores to invest in land or house today. But the small investors, they can park their money. So real estate investment trust is sort of a mutual fund. Here also, a pool is created. These asset owners, the real estate owners, what they will do, they will give the asset on lease, on rent. Whatever rent is generated from that, the investors are paid. Not on the sale value, not on the property resale. Okay, so the first statement is correct. Small investors to access the real estate income streams, but primarily through capital gains on property resale, no. What they do, they give the property on lease, they give the property on rent, and from the rent or the leasing agreement, whatever is there, the payment is made of the dividends to the investors. Third statement is also correct. Required to distribute a majority of their income as dividend. They are a structured pool investment vehicle regulated by SEBI. So 1, 3, and 4 should be correct. Yes, Chaitanya, great. 1, 3, and 4. Okay, the second statement is incorrect. Property resale is not done. They manage the estate portfolios, mortgages, including leasing activities. They generate the rental income and the income so earned is then distributed among the investors as dividend. All right. The organization that owns and operates the real estate, they generate a regular flow of income. Which of the following best illustrates the inverse relationship between risk and safety in investment decision? What is investment? Revenue minus expenditure. Whatever is left is saving. That saving we are going to invest to generate returns in the future. So what is the relationship between risk and safety? Equity shares, they offer high safety due to market transparency. Government bonds offer high returns due to elevated risk. Real estate investments are highly liquid and low risk. Bank deposits offer low returns but high principal protection. So there are certain components of investment. There are certain components of investment. We have return, which is the primary objective of any type of investment, right? Expected return can be a regular income like interest, dividend, or rent, or it can be an increase in the value of investment like capital appreciation, difference between the selling price and buying side, right? Risk means variability in return because of loss of capital or non-payment of income. Safety means that the investors will get their original principal on maturity. There should be no loss in the value, there should be no hindrance in the original principal. Yes, the correct answer is D. Okay. Bank deposits, although they offer low returns, but the high principal protection is there. The principal of the investor is not lost in any manner. Regarding real versus financial assets, consider the following. Real assets are more liquid than financial assets. Real assets include tangible items like land, gold, and silver. Financial assets are intangible instruments representing contractual claims. Financial assets are more suitable for portfolio diversification and regulatory reporting. This is also easy question. Which statements are correct about the difference between real and financial assets? Between real and financial assets. Is it 2 and 3, 1 and 3, 2, 3 and 4, or 1, 2, 3 and 4? D. Real assets are more liquid than financial asset. What is the meaning of liquidity? Liquidity means how easily can an investor sell their investment in the market without incurring much cost or with less energy and less time. Real assets are land, gold, and silver. Is it easy? Can I sell? Can I decide that I'm going to sell my land today and tomorrow I'll be able to do it? Will I get my payment? And is it cost free? No. Real assets are not more liquid. Financial assets are more liquid. The correct answer is C. Okay? Real assets are tangible. It is difficult to sell them. That is the meaning of liquidity. Financial assets, the various types of equity, stock, share that I can buy and sell in the market. They are more suitable for portfolio diversification. All right, so C should be the correct answer. Yes, C. In investment theory, liquidity is best defined as, I already told you what is liquidity. The ability to earn regular income from an asset, the assurance of principal recovery at maturity, the capacity to hedge against inflation through asset appreciation, the ease of converting an asset into cash with minimum cost and delay. What is the best definition of liquidity? Yes, it is D. Ability to earn regular income from an asset is the returns factor. Principal recovery is the safety factor. Capacity to hedge against inflation could be risk, right? Hedging, and ease of converting is known as liquidity. How liquid it is. Okay. In the context of leveraged finance, investment banks primarily provide equity capital to the startups, lend funds to firms for asset acquisition using the high debt ratios, facilitate sovereign bond issuance for fiscal deficit management, offer insurance products to hedge against credit default. So we have studied about the difference between investment management and investment banking, right? So under leveraged finance, what do the investment banks primarily do? What do the investment banks primarily do? They they lend the funds to firms for asset acquisition using high debt ratio. Leverage means debt. Using leverage means using debt. Okay, so what is the difference between investment management and investment banking? Investment management means dealing with the clients who have surplus money, they want to get returns, they want to invest in the various asset allocation, financial system, statement analysis, stock selection. Investment banking, on the other hand, is to help those clients who are in a situation of deficit. They want to raise capital or mergers or acquisition. So, issuing securities on their behalf, managing the connecting the company with the investors, that is done by the investment banking. What distinguishes proprietary trading from other investment banking services? It involves trading on behalf of the institutional clients. It is regulated by SEBI under the Banking Regulation Act. It involves trading securities using the bank's own capital for profit. It is exclusive for the government owned investment banks. So, which statements are correct? How is proprietary trading different from other investment banking services? How is it different? How is it different? Proprietary trading would mean buying and selling securities, right? Simple. What do the investment banks do? They involve trading security using the bank's own capital for profit. The bank's own capital, it is used to create the various stocks, equity, whatever they want to issue. Right? So C. Same question. In a firm commitment underwriting, the investment bank. So there are three types of underwriting services: firm commitment, best efforts, all or none. So, what happens in the firm commitment? The investment bank acts as a broker and earns commission per share sold, guarantees full subscription by purchasing the entire issue, returns the unsold shares to the issuer without liability, cancels the deal if full subscription is not achieved. What should be the correct answer? Yes, it is B, right? Returns the unsold share without liability is best effort. Canceling the deal is all or none. So if 100 shares are issued, right, the entire 100 shares will be purchased by the underwriter, the investment bank. This is firm commitment. Out of 190 are sold, 10 will be returned back to the issuer without any liability. It is best effort. Out of 190 are sold, 10 are remaining. The complete 100 will be returned back to the issuer. All or none. The deal will be called off. Okay. Evaluate the following statements about the full service investment banks. They provide advisory services for mergers, acquisitions, corporate restructuring. They manage the institutional and individual portfolios under the asset management mandates. They conduct equity research to support trading and investor decision making. They are prohibited for trading in proprietary trading under the SEBI norms. So there are two types of investment banking. One is the investment banking division of the bank, right? And second is the investment bank, which is a full service investment bank. So, which of the following statements are correct about the full service investment bank? Yes, the correct answer is A, 1, 2, and 3. They are not prohibited from engaging in proprietary trading, right? So the full service investment bank, they offer a wide range of services: underwriting, mergers and acquisitions, sales and trading, equity research, asset management, commercial banking, retail banking. Investment banking typically covers two key areas: the mergers and acquisition advisory and underwriting only. The full service offers all of these services. Okay. Regarding the sales and trading operations, consider the following. They facilitate secondary market transactions for institutional and retail clients. They may execute trades using the firm's own capital to generate profit. They are restricted to the equity instruments and cannot trade fixed income securities. They support liquidity and price discovery in financial market. Which statement is incorrect? You need to pick out the incorrect statement about sales and trading operations. About sales and trading operations. Yes, what should be the correct answer? Which statement is incorrect? They may exercise trade using the firm's own capital. No, this is the main purpose of sales and trading. The main purpose of sales and trading operation is using the firm's own capital to conduct the trades. We had seen this in a previous question also, right? Distinguishing the proprietary trading from other investment banking services. It involves trading securities using the bank's own capital for profit. Yes. The incorrect statement is that it is restricted to equity instrument, cannot trade fixed income securities. No, they can sell both, they can trade both equity instrument as well as the fixed income securities. Okay, so you need to mark the incorrect statement. The incorrect statement is C. Regarding the investment bank office structures, consider the following. So, the organizational structure of the investment bank comprises the front office, middle office, and back office. So, consider the statements. Middle office is responsible for direct client acquisition and deal origination. Front office generates revenue through trading, advisory, and research. Middle office ensures financial control and strategic risk oversight. Back office handles the operations, settlements, and IT infrastructure. So, what is the role of the three offices? Front office, the revenue is generated. Three primary divisions are there in the front office: investment banking, sales and trading, and research. Right? Middle office has the control function to make sure that the investment bank doesn't engage in the activities that could be detrimental to the bank's health. So, risk management, financial control, corporate treasury, corporate strategy, and compliance. And back office provides the supporting activities like operations and technology. Yes, all your answers are correct. 2, 3, and 4. Okay. In the context of investment banking, what does the term market maker imply? A firm that guarantees IPO subscription, a firm that provides liquidity by quoting buy and sell prices, a firm that manages pension funds and retirement assets, a firm that regulates trading activities. So I told you in yesterday's revision session as well, this market maker concept is very important. Investment banking is known as market maker. Why? Why is investment banking known as market maker? Why is it known as market maker? What is the meaning of making market? It guarantees IPO subs. There's no guarantee. There's no guarantee ever in investment. Why? Why would it guarantee IPO subscription? I told you, whenever there's something a fixed promise that your IPO will be subscribed, or there will be a guaranteed return, it is incorrect. Market maker means, yes, a firm that provides liquidity by quoting buy and sell prices. Banhar, yes, okay. It provides liquidity. The investment bankers, they act as intermediaries between the issuer company, and the investors. The issuer company who wants to raise capital will approach the investor. This is known as the buy side. And then the investment bank will approach the investors on the sell side. So they're buying and selling the shares, the equity, whatever is raised by the issuing company. So buy and sell, creating liquidity in the market. That is why they are known as market makers. They make the market for the investment. Okay, so the correct answer is B. Which portfolio management strategy is most suitable for a client seeking index linked returns with minimal cost and volatility? So there are four types of portfolio management strategies. In which portfolio management there is index linked returns and minimal cost. Index linked returns and minimal cost. Yes, what should be the correct answer? It is the Yes, it is the passive portfolio management. What happens in the active portfolio management? We are trying to beat the index, take different position. So there is more churning, buying and selling. Discretionary means full powers to decide are given to the portfolio manager. They will decide what to buy, what to sell. Passive means mimic the index. Non-discretionary means the portfolio manager will only give advice. The final decision to buy or sell is with whom? It is with the client, it is with the investor. Okay, so C. Consider the following statements about mutual fund versus portfolio management. What is the difference between mutual fund and portfolio management services? PMS allows direct engagement with the portfolio manager, and the mutual fund engagement is limited to the periodic disclosures. Mutual fund investors retain ownership of the underlying securities and they have voting rights. The PMS offers higher customization aligned to the investor goals and risk profile. The mutual fund fee structures include profit sharing above the hurdle rate. What should be the correct answer, everyone? What should be the correct answer? It is A. Correct. So what is the difference between mutual fund and portfolio management? Which has more customization? Obviously, portfolio management. The strategy is tailored specifically to the goals of the investor. Mutual fund customization is to the extent of the classification and diversity of the fund, whether it is a debt mutual fund or it is a equity mutual fund. So the scheme engagement, obviously the portfolio manager is more engaged with the client as compared to the mutual fund manager. Fee structures, the mutual fund charges a fixed free fee, the entry and exit of investment and annual expenses. Portfolio manager, they also demand a share in the profit. Asset ownership, the investor retains the direct ownership in portfolio management, but in mutual fund, the investors, they only get the units. Okay, there's also important point. Minimum 50 lakh rupees should be there with you. Only then you can avail the portfolio management service. But in the mutual fund, there's no restriction. Any amount you can start investing in the mutual fund. Okay, so the correct answer should be A, 1 and 3. 1 and 3 only. All right. Regarding the non-discretionary portfolio management, consider the following. The portfolio manager executes the trades independently based on the market conditions. The investor retains the final decision making authority over trades. PMS acts in an advisory capacity without execution rights. It is suitable for investors with high market knowledge and time availability. Non discretionary. Discretion means independence to decide, freedom. Non discretionary means complete freedom is not there. So here the portfolio manager will only advise the client. They are in the advisory capacity. They cannot independently execute the trades without the investor's consent. The investor retains the final decision making, right? So what should be the correct answer? Keep answering. Drop down your answers in the comment box in the live chat. Keep answering. The correct answer should be C, 2, 3, and 4. The portfolio manager executes trade independently. This is the discretionary portfolio management services. Discretionary would be for those investors who have less time and less knowledge about the market. Non-discretionary would be for those who have time and they have market knowledge. They just want advice from the manager. Okay, so 2, 3, and 4 are correct, and statement 1 is incorrect. Under SEBI's revised portfolio management services regulations, what is the maximum permissible operational fee? 1% of the average asset under management per annum, 0.5%, 0.75% of the total portfolio value, 50,000 rupees annually as per the PMS account. So SEBI in 2020 has given a new set of regulations. Accordingly, what should be the maximum permissible operational fee? Yes, it is 0.5% of the client's average asset under management. Okay, no upfront fees will be charged. Keep in mind, no upfront fees will be charged, and the operational fees excluding brokerage cannot exceed 0.5% per annum of the client's average asset under management. Okay, so the maximum operational fees excluding brokerage cannot be more than 0.5%. Which of the following is mandatory in the monthly PMS performance report as per the SEBI? Now, the manager will also have to give the monthly report to their client. What information should be there? The gross returns before expenses and taxes, only equity holdings and the net asset value, net returns including cash and the liquid fund position, annualized returns based on the benchmark indices. What should be mandatorily included in this report? A monthly report is mandatory. Yes, the performance reported net of expenses and after tax. The statement 1 says gross returns before expenses and tax. No, it should be net of all the expenses and after the tax has been paid. What is left? Okay. Only equity holdings and NAV? No. It will include the net returns, including the cash and liquid fund position. Yes, the correct answer will be C. Okay. What all will be included in the report? Value of the portfolio, description of the securities and goods, cash balance, aggregate value of the portfolio. All of these things will be included in the performance report. The performance report which is given monthly to the client. Okay, C. What is the minimum net worth requirement for the portfolio managers under the SEBI's revised norms? What is the minimum net worth? 2 crores certified by the registered merchant banker, 10 crores certified by SEBI itself, 1 crore certified by the PMS operator, 5 crores certified by the chartered accountant. Only Prince is answering. Prince? Yes, Kamala. Yes, correct. 5 crores certified by the chartered accountant. Correct. A CA has to certify the minimum specified net worth of the portfolio managers of rupees 5 crores. All right, so before distributing the product, the service, this has to be certified. Which of the following statements best reflect the SEBI's stance on exit load structure? No exit load is permitted under any circumstance. Exit load must be flat across all years of investment. It reduces progressively over 3 years and is nil thereafter. Exit load is applicable only on equity oriented portfolio management services. What is the exit load? What is the meaning of exit load? Yes, the correct answer is C. Let's say I entered into the portfolio management services with a manager in 2020. I want to stop availing the services in 2021. So I will have to pay 3% penalty as the exit load, right? So it is less than 1 year. Then if I exit in 2022, then 2% exit load. In 2023, 1% exit load. After that, if I continue availing the services for 3 years and then exit the scheme, zero will be the exit load. There will be nil exit load. All right, no exit load is applicable after 3 years. All right. Consider the following statements about direct and indirect taxes. Also, there was another point. If the portfolio managers, they have to onboard the clients directly, avoiding the client engagement with intermediaries and distributors. However, if they are employing distributors, then only certified distributors who have the AMFI registration numbers or they have cleared the NISM services exam, only they should be employed. Okay. Which of the following statements are correct about direct and indirect taxes? Direct taxes are non-transferable, must be paid by the person on whom they are levied. Indirect taxes are levied on the income and profits of individuals and corporations. GST is a comprehensive indirect tax replacing multiple state and central levies. Corporate tax and income tax are examples of indirect taxes. So, what is a direct tax? Where there is no shifting, the incidence and impact of the tax falls on the same person. So, for the salaried individuals, income is taxed, and for the business clients, their profit is taxed. Indirect tax is not on the income or profit, it is on the sale of goods and services. The goods and services which are availed by the consumers and they can be shifted. Okay, the various indirect tax, VAT, ZAT, all of these have been now subsumed under the GST. So the correct answer should be B, 1 and 3. Now, fourth statement is incorrect. Corporate tax and income tax are examples of direct taxes, not indirect taxes. Okay, so the correct answer is B, 1 and 3 only. All right. Evaluate the following statements about financial year and assessment year. FY is also referred to as previous year for income tax purpose. AY is the year in which the income is earned and FY is the year in which it is assessed and taxed. No, AY is the year in which the income earned in the FY is assessed and taxed. Both financial year and assessment year begin on 1st April, end on 31st March of the following year. Income tax returns are filed during the financial year in which the income is earned. So let's say I have filed my taxes in 2025-26, right? So when I was filing my taxes, this I mentioned as the assessment year. When we opened the site, there was the option, right? Filing the ITR for assessment year 2025-26. So the year in which the ITR is filed is AS, the assessment year. Year in which I earned my income 2024-25, from 1st April 2024 to 31st March 2025, the income that I have earned in the financial year. I need to pay taxes on that income in the assessment year, right? And financial year for the income tax purpose is also known as previous year. So the calendar year in which the income is earned is financial or previous year. The calendar year in which the income is taxed is the assessment year following the financial year. So 1, 2, and 3 only are correct. Income tax returns are not filed during the financial year, they are filed in the assessment year. Why? Because the income cannot be taxed until it is paid. So only when I receive my full income during the financial year, only then the government will tax me on the income. All right, so the correct answer is A, 1, 2, and 3. Under the amended Income Tax Act, which of the following conditions would trigger the deemed residency for a citizen of India? So we have studied about the residential status. When would someone be known as a non-resident or a resident ordinarily resident? In that, there was a small point of deemed resident. So which of the following conditions would imply the deemed residency status? Income from the foreign sources exceeds 15 lakh rupees and tax liability exists abroad. Income from Indian sources exceeds 15 lakh rupees and no tax liability exists abroad. Stay in India for 60 days and the income is below 15 lakh rupees. Citizenship alone is sufficient for deemed residency. Yes, what is the correct answer? What will be the correct answer for the deemed residency of a citizen of India? Deemed residency means no. If there is no tax liability abroad, if there is tax liability, why would they pay tax to India again? If they're earning, yes, if they're earning rupees 50 lakhs or more, and there is no tax liability abroad, only then they will be required to pay taxes to our government. Then they will be known as a deemed resident of India. Deemed resident of India. Okay. Which of the following individuals would be classified as non-resident under the Indian law? A citizen who has stayed 185 days in India and has earned 20 lakh rupees from Indian sources. A foreign national who stayed 60 days in India and 400 days in the preceding 4 years. A person who stayed 150 days in India and has no tax liability abroad. A citizen who stayed 50 days in India and earned 10 lakh rupees from the foreign sources. So, what will be the correct answer here? What will be the correct answer? See, the residential status. How do we determine the residential status of an individual? If their stay in India is for more than 182 days, or in the immediately preceding 4 years, more than 365 days, and in the immediately preceding financial year, more than 60 days. If someone leaves India for more than this time period for taking up a job or run a business for a purpose, and we do not know when they're going to return, then they will lose their residential status. Does anyone want to answer this question about the non-resident? Which of the following would be a non-resident? So, a citizen of India who stayed 50 days only and earned 10 lakhs from foreign sources. So neither their stay in India is eligible nor they are earning anything. So they could be a traveler, right? They came in India to travel. They visited Agra, they saw the Taj Mahal. Then they visited Delhi, they saw the Red Fort. They visited maybe in the northeast, they went to the south, saw Rameshwaram, and they went back. Okay, so they are a traveler. They stayed in India for 50 days. They earned 10 lakh rupees from foreign sources only. Nothing they earned in India. So they are a non-resident Indian. Okay, a non-resident. All right, clear? The categorization of resident and non-resident is clear. Under the resident, you also need to check whether they are a ordinary resident or a not ordinary resident. Okay. Hmm. Consider the following statements about the resident classification. Under the Income Tax Act, the resident not ordinarily resident requires residency in at least 5 out of 10 preceding years. An individual staying in India for 182 days or more in the financial year qualifies as a resident. This is the most basic statement. So obviously this is correct. A citizen of India with income exceeding 15 lakh and no liability abroad is a deemed resident. Then a resident ordinary resident status requires both 2 out of 10 years and 730 days conditions to be satisfied. Do you want to answer this question? What should be the correct answer? Second statement is correct. Fourth statement is also correct. Yes. What is the condition for a resident not ordinarily resident? The condition for a resident not ordinarily resident. For a ordinarily resident, we will see whether they have been a resident of India in at least 2 out of 10 years or 730 days in the immediately preceding 7 years. Okay, if this is not there, then what will happen? They will be considered as a resident, non-ordinary resident, right? 5 out of the 10 preceding years. So this is also correct, right? This is correct. Only one statement is fulfilled, second statement is not fulfilled. Third statement says a citizen of India income exceeding 15 lakh with no tax liability abroad is a deemed resident. This should also be correct, right? So I think all the four statements should be true. All the four statements should be true. C, 1, 2, and 4. No, it should be D. All right. A citizen with income exceeding 15 lakh rupees and no tax liability abroad is a deemed resident. It should be D. Under section 194P, which of the following conditions must be satisfied for a senior citizen above 75 years to be exempt from filing an income tax return? Income must include capital gains and pension. Income must be from pension and interest from the same bank. Income must be below 5 lakh rupees and from any source. Income must be from foreign pension and domestic interest. So those citizens under section 194P, they are exempt from filing the ITR. When? When will they get this exemption? Resident senior citizen between the age group of 60 to 80 years. So those senior citizens aged 75 years who have a pension and interest income from the bank as their only source of income, right? So they are given a conditional relief. So the correct answer is B. Income must be from pension and interest income from the same bank. Yes, correct. Okay. So if they have income and pension from the bank, They are given conditional relief. Conditional relief means the banks will continue to deduct tax on the senior citizens as per the rules. Just the conditional relief is given to them. If if they're filing ITR and the pension and interest income is their only annual income source. Evaluate the following statements about surcharge and cess applicability. Health and education cess is levied at 4% of the total tax liability. Surcharge of 15% applies to income exceeding 1 crore but not exceeding 2 crores. Surcharge rates are uniform across all taxpayers under both regimes. Cess is waived for senior citizens under Section 194P. We just now discussed about the Section 194P. It is about the annual income from interest and pension only. So cess will not be waived. Okay. How do we apply the cess and health and education cess and surcharge? 4% health and education cess is there, true. Okay. And when we talk about the surcharge, earlier there were two slabs for it. 10% for 50 lakh to 1 crore, 15% from income exceeding 1 crore. Now, till here it is same. Till here it is same in the new tax regime as well. Beyond that, if the income is more than 2 crores, then 25% surcharge is there. And if it is more than 5 crores, then how much surcharge is there? 37% surcharge is there. Okay? And it is, no, this is also correct. The surcharge does not vary between the senior citizens or below senior citizens. Okay, so it should be A 1, 2, and 3. They are uniform across all the taxpayer categories under both regimes. They are uniform. Okay, surcharge and cess will be applied for all of the classes of citizens. There is no different slabs for it. Okay. Consider the following statements about the disallowed deductions under the new tax regime. Now, this is very important. Either I can choose the old regime, pay the higher taxes, but claim deduction, or I can go with the new regime where I can pay the lower taxes because the slabs are more and I'll have to forego the allowed deductions. So, which of the following are not allowed? Professional tax paid by the employee is deductible. Standard deduction on salary income is allowed. Leave travel allowance and house rent allowance are disallowed. Interest on housing loan under Section 24 is not permitted. Which of the following statements are correct? B. 2 and 3. Standard deduction on salary income is allowed in the new tax regime. Are you sure? No. In the new tax rate regime, those which are not allowed are leave travel allowance, house rent allowance, conveyance allowance, daily expenses in the course of employment, relocation allowance, helper allowance, children allowance, any special allowance. Standard deduction on salary is also not allowed. Professional tax, interest on housing loan, all of these are not allowed under the new tax regime. So the correct answer should be 3 and 4. Yes, the correct answer should be 3 and 4. Okay. These are allowed in the old regime, but they are not allowed in the new regime. Which of the following instruments under Section 80C offers the shortest lock-in period? There are, however, some deductions that are still allowed in the new tax regime. Some are still allowed, like the transport allowance for the specially abled people, conveyance allowance for expenditure incurred for traveling to work, The notified pension scheme investment is allowed. Employment of new employees is allowed. Okay. However, the previous were not. Which of the following instruments offers the shortest lock-in period under Section 80C? PPF, ELSS, tax saving fixed deposit, or the Sukanya Samriddhi Yojana? Yes, ELSS. Correct. Very simple question, right? The various tax saving schemes, the ELSS offers the shortest period. It means they have a lock-in period of 3 years. What else is given to us? The Public Provident Fund, 15 years. It cannot be withdrawn before 15 years without a penalty. Then the equity linked saving schemes we have discussed is 3 years. The tax saving fixed deposit will depend, right? Tenure of 5 years is there. It is 5 years. And Sukanya Samriddhi Yojana will be till the girl child gets to the age of 21. Okay, 21 years. So the correct answer will be B, ELSS. Yes, correct. Which of the following cannot be claimed as a deduction under Section 80C? Life insurance premium paid for spouse, investment in the National Savings Certificate, premium paid for parents' life insurance, contribution to the EPF. Which of the following is not claimed as a deduction under Section 80C? Under Section 80C. Again, this is simple. Yes, life insurance premium towards spouse, children, self is allowed. However, premium paid for parents, brothers, and sisters are not allowed as a deduction. Okay, so the correct answer will be premium paid for parents' life insurance. Regarding the investment planning under Section 80C, consider the following. PPF has a 15-year lock-in and qualifies for full 1.5 lakh deduction. EPF contributions by employees are eligible under 80C. National Savings Certificate interest is tax-free, fully exempt under Section 80C. ELSS offers market-linked returns with a 3-year lock-in period. Which statements are correct? 2 and 3, 1 and 3, 2, 3 and 4, or 1, 2 and 4. When we are talking about the National Savings Certificate, it is used to earn tax saving up to 1 lakh per year. But it is not tax free. We are only saving on the tax. It is not fully exempt. So the correct answer should be D. Yes, the correct answer is D, 1, 2 and 4. If you're answering it correctly, then it is clear, I hope. We have discussed about all of these EPF, ELSS, PFS. Yes. Which of the following statements is true regarding the section 54F? It applies only to the sale of residential house property. Only capital gains needs to be invested to claim exemption. Entire sale consideration must be reinvested in a new residential house. Exemption is available only if the new property is purchased within 6 months. Section 54F. Exemption on the capital gains on the sale of any asset other than a house property. 54 means I'm selling the house property, I'm using the proceeds to purchase another house property. 54F says capital gains are from the sale of a long-term asset other than a house property. The entire sale consideration will be invested to buy a new residential house property. Not just the capital gains, but the entire sale consideration. And the property has not to be purchased within 6 months, either 2 years after the sale of property, 2 years after sale, or 1 year before the sale of the capital asset. We can also invest it in the construction of the property, but the construction should be completed within 3 years from the date of sale. All right. So which statement is true? The entire sale consideration must be reinvested. Okay, must be reinvested. A few more questions are left. Please answer. Don't be passive. Try to answer the questions. Also, everyone who has newly joined the session, please like the video. Okay. Consider the following statements about the short-term capital assets. Listed equity shares held for 12 months or less are short-term asset. Unlisted shares are short-term if held for less than 24 months. Immovable property short-term if held for 24 months or less. Zero coupon bonds are short-term if held for less than 36 months. So the difference between short-term capital gain and the long-term capital gain. Various assets are there. Immovable asset like land, building, house property. Movable like vehicles. They're also intangible like patents and trademarks, equity and share. Right? For immovable property, less than 24 months is considered to be the short-term capital. Certain assets, the period is not 24 months, it is 12 months, like equity or preference shares listed on the stock exchange, securities on the stock exchange, units of UTI, zero coupon bonds, units of equity oriented mutual fund, whether quoted or not. Right? Yes, the correct answer is A. 1, 2, and 3. Zero coupon bonds are short term if held for less than 12 months. Okay. And any of these held for more than 20 24 months or 12 months will be classified as the long term capital gain. So I'm holding the liquid listed equity shares for less than 12 months and I'm selling it. So I purchased them in March 2025, and if I sell them before March 2026, then it will be a short term capital gain. Okay. For bonus shares, the holding period is counted from the date of purchase of original shares, the date of company incorporation, the date of dividend declaration, or the date of allotment of bonus shares. What should be correct? In case of bonus shares, how do we calculate the 12-month period? From the purchase of original shares or company incorporation or the date of dividend declaration or allocation? Yes, it is. It is the date of allocation. When I get the bonus shares allocated, DDS. Consider the following statements about mutual fund mobilization by banks. So questions from the last unit. These questions are from the last unit. When mutual fund business is carried out by banks, which of the following statements are correct? Abolition of entry loads, reduced upfront commission from 3.5% to 0.75%. Restrictions on bank investment in debt funds have impacted the institutional mobilization. Retail mobilization remains viable due to the bank's network and the customer base. Trail commissions are no longer permitted under the SEBI regulations. What should be the correct answer? The mutual fund business by banks. What should be the correct answer? Trail means what? Trail says the loyalty commission. Trail is the loyalty commission. So when the banks they offer mutual fund, first statement is true, right? Collection of entry loads for equity based schemes have been abolished. So the commissions which are offered have been reduced from 3 to 4% to now it is 0.75%. The debt side restrictions have been introduced on banks when they are investing in the debt fund, right? Upfront commission 75 to 100 basis point. I know we have not revised it. That is why I'm not getting the correct answers, right? The correct answer is A. Trail commissions have not been abolished by SEBI. They have been reduced. The trail commissions have been reduced, but they're not abolished. Okay, so 1, 2, and 3 is correct. Abolition of the entry loads has been done. Banks now they are restricted to invest in the debt market. Retail mobilization remains viable. But trail commissions are still permitted, just that SEBI has recommended some limits over it. Consider the following statements about endowment policies. Which statement is incorrect? They provide a lump sum payment on the maturity or death. They may include critical illness coverage depending on the issuer. They combine savings and insurance facilities. They are cheaper than the term insurance policy. So when we are talking about insurance policy, life insurance policy, we have endowment policies, term insurance policies, money back policies, and pension plan, right? Here it is asking about endowment policy. So it is contracted, it is designated to pay a lump sum after a specific term on the maturity or on death, like 10 years, 15 years, 20 years, right? So endowment policy includes a lump sum payment. Lump sum payment is made in the endowment policy. You need to mark the incorrect statement. Incorrect. Incorrect. You are telling me the correct answer. That is the main basis of endowment policy. Term insurance policy is only the amount is paid only on the death of the policy holder. The amount is paid to the nominees or the beneficiaries. That is the term insurance policy. Yes, the correct answer is D. They are not cheaper than the term insurance policy. Term insurance policies are cheaper. Why? Because if the policy holder survives, they do not die, they do not get anything in the term insurance policy. They only get some tax benefit. However, in the endowment policy, the lump sum is paid after the maturity of the term as well, not only on death. That is why term insurance policy is cheaper. Okay, the policy holder does not get any monetary benefit at the end of the policy term except for the tax benefit. Okay, only on their death the nominees they get the amount. Consider the following statements about insurance broking departmentally by the banks. So there are certain options. Banks can conduct the insurance business either departmentally or through setting up of a subsidiary or a joint venture. When they are doing it departmentally, they can do it without risk participation only. They cannot participate, they cannot contribute in the risk. So departmentally, what should be true? 50 lakh deposit must be held with the same bank offering the broking services. Board approved policy should be there covering distribution model, suitability, grievance redressal. The LDI license and annual fee are mandatory for the broking operations. Staff incentive must comply with the Banking Regulation Act of 1949. When we are talking about insurance business with the risk participation, it can be done only through the subsidiary, right? There, the net worth, minimum capital is required. Departmentally, it is not. The only requirement is that at the time of application, the bank has to pay a non-refundable deposit, right? They need to pay a non refundable deposit and they also need to pay annual fees. All right. This deposit of 50 lakh rupees, this deposit of 50 lakh rupees is to be maintained by an insurance broker with another scheduled commercial bank other than itself. Yes, the correct answer is B. 2, 3, and 4. The 50 lakh deposit will be held by some other scheduled commercial bank. They cannot keep it with themselves. And the deposit will be, there will be a lien on that deposit. IRDAI will have a lien over that deposit. Okay, so the correct answer will be B. Rest all the statements are correct. There is the requirement of the 50 lakh deposit, true, but it will not be kept by the bank with itself. They will keep it with another scheduled commercial bank. Keep this thing in mind. Who is going to have lien over it? IRDAI. All right. Rest the things, board approved policy, license from IRDAI. They will ensure customer appropriateness, a performance assessment, and incentive structure will be decided. Any restrictive policy should not be followed. Grievance redressal mechanism should be there. Evaluate the following statements about the subsidiary or the joint venture eligibility for insurance business. Net NPA must not exceed 3% as of 31st March of the previous year. The bank must have made net profit in the preceding 3 financial years. Bank must maintain prescribed capital, including capital conservation buffer after investment. The bank must have a net worth of rupees 500 crore before investing in the subsidiary. So if the bank wants to take insurance business with risk participation, they can do it only by setting up of a subsidiary or a joint venture, right? So which statements are correct for doing that? A, 1, 2, and 3. Correct. 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 When they are setting up a subsidiary, the net worth should be 1000 crores. 1000 crores. And once they invest in the subsidiary, then the net worth should not be less than 500 crores. All right. Before investing 1000, after investing 5000. Then minimum prescribed capital after the investment is required. Net NPA should not be more than 3%. Net profit in the preceding 3 financial year. A track record of the performance of its subsidiary should also be satisfactory. Now, if the bank want, they can also set up a subsidiary and act only as a broker. Then their net worth should not be less than 500 crores, right? If they want to set up a subsidiary or a joint venture, but they do not want to participate in the risk, they are only acting as a broker, then they should have the net worth of rupees 500 crores. Minimum prescribed capital, net NPA, profit, rest everything is same. Just the net capital differs. Which of the following best describes the dynamic group cover offered to the loan borrowers? When we are talking about insurance, group insurance is also offered. Which statement is correct about the dynamic group cover? Fixed sum assured for natural and accidental death, cover linked to the outstanding loan amount reducing over time, cover equal to the original loan amount throughout the tenor, cover that includes overdue amounts and penalties. What should be correct? Group insurance products are offered for identified groups that are homogeneous, right? Different group insurance covers to their customers as a value addition is also offered by the bank. Banks, like there are the different savings account holders, current account holders, loan borrowers, term deposit, recurring deposit holder. There is two types. There are two types of group covers. One is a simple fixed cover, right? What happens in a simple fixed cover? On the happening of the natural or accidental death, and the amount of cover is fixed. Let's say 1 lakh rupees for natural death and 2 lakh rupees for accidental death. However, the premium will be charged on the annual basis. Second is the dynamic cover, which is provided to the borrower accounts. It is provided to the borrower accounts on a reducing basis. So the retail loans, housing loans with mortgage backing, premium payment for the cover is a single premium mode, which is covering the repayment period of the loan, and it covers the death of the borrower during the repayment period. All right, it will not take care of the overdue amounts in the loan. All right, only the outstanding loan amount. Overdue loan amount penalties are not covered in this type of dynamic group cover. Okay, which of the following statements is true regarding the duplicate cover under the Pradhan Mantri Jeevan Jyoti Bima Yojana? Jeevan Jyoti Bima Yojana. Multiple policies are allowed if premiums are paid. Coverage is extended to 4 lakh rupees if two policies exist. Duplicate premiums are forfeited. Coverage is restricted to 2 lakh rupees only. Duplicate policies are merged for enhanced benefits. So these are the two social security insurance scheme. The Pradhan Mantri Jeevan Jyoti Bima Yojana and the Pradhan Mantri Suraksha Bima Yojana. Jeevan Jyoti Bima Yojana is a life insurance cover for death due to any reason, right? Who all are eligible? Participating banks, they hold the bank account of these individuals in the age group of 18 to 50 years. In case of multiple bank account, they can join the scheme through one account only. And in case the member is covered by with more than one account, then the insurance cover will happen what? It will be forfeited. Okay, they will get the benefit from one account only. This will lead to termination. All right, what else can lead to termination of the account? On attaining 55 years of age, closure of the account or insufficient funds are there in the bank account for auto debit. If the member is covered with LIC or any other insurance company, or they have more than one account through which they have subscribed. Okay, then evaluate the following statements about the premium appropriation under the Jeevan Jyoti Bima Yojana. The premium is 436 per member. 436 per member. How is it distributed? 239 rupees is paid to the insurance company per member. 30 rupees is reimbursed to the business correspondent micro corporate agent per member. 11 rupees is reimbursed to the participating bank per member. 106 rupees is retained by the government for administrative purposes. Which statements are correct? 1, 2, and 3, 2 and 4, 1 and 4, or 1, 2, 3, and 4? All of the above. Which statement is correct? Which statements are correct? The correct answer is not D. The correct answer is A. 1, 2, and 3. 106 rupees. Government is not retaining anything. If anything is remaining, it will be used for the administrative expenses by the participating bank. All right, not by the government. Government is not retaining a part of the premium. All right, insurance premium to the LIC is 289 rupees, correct? The agents get 30 rupees and administrative expenses is given to the participating bank of 11 rupees per member per annum. Evaluate the following statements about the benefits under the Pradhan Mantri Suraksha Bima Yojana. 2 lakh rupees is payable for natural death. 2 lakh is payable for death due to accident. 2 lakh is payable for the total and irrecoverable loss of both eyes or both limbs. 1 lakh rupees is payable for loss of sight in one eye or use of one limb. Which statement is correct? Which statement is correct? The correct answer is D. Yes. The Suraksha Bima Yojana, it covers accidental death and disability cover. Right? So in the case of death due to any accident, 2 lakh rupees is paid. Total and irrecoverable loss of both eyes, both hand, feet, 2 lakh rupees. Total and irrecoverable loss of sight of one eye or one hand or foot, 1 lakh rupees. All right. So the correct answer is D, 2, 3, and 4. Okay. What does it mean when dematerialized shares are described as fungible? What is the meaning of dematerialization? When the physical securities are converted into the electronic form and they are kept in the demat accounts. The depository participants, banks are the depository participant, right? So, what is the meaning of those being fungible, the securities being fungible? They are non-transferable and logged in for a period. They carry unique certificate numbers for each investor. They are identical and interchangeable across holdings. They can be converted into the mutual fund unit. What is the meaning? What is the meaning of dematerialization? We have already seen there are two depositories, NSDL and CDSL, the National Securities Depository Limited and the Central Depository Services Limited, right? So they provide the facility of holding and transacting securities in the book entry form. Physical securities converted into the book entry form, electronic form, dematerialization, reconversion into the physical form, rematerialization. All types of equity, debt, preference shares, everything can be dematerialized. Depository participants are those banks who are registered with SEBI. Financial institutions, banks, custodians, stockbrokers, intermediaries, everyone. Right? So they can. D? No. Fungible means they are identical, and how can you convert your securities? How can you convert your stocks into mutual fund units? No, they are interchangeable. They are interchangeable across holdings. Okay, they are interchangeable. Okay, let us go through it. So, how do you open a demat account? You will choose a depository participant. You will fill up the account opening form, comply with the KYC requirement, provide a copy of the agreement. Okay, the beneficiary owner identification number is given. It is a unique account number. Unique account number is given. I can open more than one demat account as well, and there's no stipulated minimum balance. It can be opened only in the one person ownership, right? And the demat account will be opened in the same ownership in which the physical securities are there, not in the either or survivor basis. No. If the jointly security is held, then jointly the account will be opened, or maybe the demat securities will be kept, right? Then if you want to make any change, you have to open a completely new account. You cannot change it. Dematerialized securities are fungible. They are interchangeable. They are identical. They can be converted back into the physical form. All right. So these are the features of dematerialization. Which of the following statements is true regarding the ownership pattern in the demat account? Investors can open a single demat account for all shareholding patterns. Demat accounts can be opened in either or survivor basis like the bank account. Joint holders can change names in the existing demat account. Separate demat account must be opened for different ownership patterns. Yes. Which statement is correct about the ownership pattern? One statement I've already told you, demat accounts cannot be opened on the either or survivor basis, right? Joint holders, they cannot change names. They have to open new demat account if they have to make any change. Now between A and D, only one can be correct, and yes, the correct answer is D. The ownership pattern of the security will determine the ownership pattern of the demat account. The demat account in the same ownership pattern in which the physical securities are held. So let's say if I hold two share certificate, one is in my individual name and another I am holding with, let's say, my mother. Okay, so in this case I will have to open two different accounts in the respective ownership. One account will be in my ownership, single individual, and the second account will be in the joint ownership in which the physical securities were originally held. All right. What is the minimum balance requirement for securities in a demat account? No minimum balance. 10,000 rupees worth of securities, at least one listed share should be there. Minimum 100 units of any security should be there. What is the minimum balance requirement in the demat account? Yes, this also I've told you, even if I'm not holding any security, I have zero securities, then also I can open a demat account. And when I'm going to purchase the security, then I will get it dematerialized and put it in my account. Okay, so the correct answer will be A. There is no minimum balance requirement. As per the RBI guidelines, the aggregate equity investment in a bank by a bank in factoring subsidiaries must not exceed. Banks, they also provide factoring services. They can either do it departmentally or they can do it through a subsidiary. When they are doing it through a subsidiary, they will invest in the factoring subsidiaries. What is the maximum of their paid up capital? 5% of paid up capital and reserves, 10% of paid up capital and reserves, 15% of the tier 1 capital, 20% of the net owned funds. No, not C. C is not correct. It is a part of their paid up capital and reserves. No, not C. The aggregate equity investment in the factoring services, factoring subsidiaries, and factoring companies shall not exceed 10% of the paid up capital and reserves. 10%. All right, remember, it will not exceed 10% of the paid up capital and reserves. Evaluate the following statements about exposure classification in factoring. There are two types, three types: with recourse, without recourse, and limited recourse. International factoring is also there. All right. With with recourse factoring, exposure is booked on the assigner. In without recourse factoring, exposure is booked on the debtor. In international factoring, exposure is booked on the import factor. In limited recourse factoring, exposure is always booked on the assigner. The factoring services can be provided on with recourse or without recourse or limited recourse, right? Without or limited recourse should be with the board approved policy. Credit appraisal of the debtor should be carried out. It will be treated on par with the loans and advances. Also, banks will avoid double financing. All right. When we are talking about with recourse, the exposure will be reckoned on the assigner. Without recourse, the exposure will be reckoned on the debtor, right? And in case of international refactoring, on the import factor. But in case of limited recourse basing, it depends upon the terms of agreement. It shall be reckoned on the assigner or the debtor or the import factor. Terms of agreement between the bank and the customer. So yes, A is correct. In limited recourse, it is not always booked on the assigner. It can be booked on any of them depending upon the agreement. How many questions are left? Just four questions more. Okay. What is the minimum and the maximum investment limit for individuals in the sovereign gold bonds per fiscal year? For individuals, 1 gram minimum, 2 kg maximum, 5 grams minimum, 10 kg maximum, 1 gram minimum, 4 kg maximum, and 10 grams minimum, 5 kg maximum. When we are talking about the sovereign gold bond, let me just tell you everything about it. They are securities denominated in grams of gold, substitutes for holding physical gold. Investors have to pay the issue price in cash, and the bonds will be redeemed in cash on maturity. The quantity is protected. If we talk about the maximum and the minimum, for individuals, 1 gram is minimum and maximum is 4 kg. For HUS also 4 kg. For trusts and entities other than the individuals in HUS, it is 20 kg. So the correct answer will be C. Minimum 1 gram, maximum 4 kg. Yes, correct answer is C. What is the tax treatment of the capital gains on the redemption of the sovereign gold bond? Fully taxable, tax free with no indexation, subject to TDS at 10%, exempt from capital gains tax. How is the taxation done? Taxation. Interest on the bonds will be taxable, right? Interest is taxable, but the capital gains which are arising on the redemption of the sovereign gold bond to an individual has been exempted. Yes, it is exempt from the capital gains tax. Okay. Indexation benefits are also provided to the long term capital gains. All right. So that is the correct answer. Consider the following statements about the Atal Pension Yojana. It is voluntary contribution based pension scheme. Pension is paid monthly after the subscriber turns 60. Spouse receives the same pension after the subscriber's death. Nominee receives monthly pension after the spouse's death. Which statement is correct about the Atal Pension Yojana? So what happens in the Atal Pension Yojana? The name itself tells us it is open to all citizens of India who have a savings bank account, minimum 18 years of age, maximum 40. Voluntary periodic contribution based pension system. The government guarantees a minimum pension amount 1000, 2000, whatever, depending upon the contribution made by each subscriber. After the death of the subscriber, after the subscriber's death, the spouse will be entitled to receive the same pension amount, right? Until the death of the spouse. And when the spouse also dies, then the nominee will get the lump sum amount. Whatever has been accumulated as the pension wealth will be given to the nominee. They will not be getting the same pension as the subscriber and the spouse. Okay. Nominee will only get the pension wealth. Last question. Which organization is authorized to manufacture and distribute the India gold coins? What are India gold coins? Under the government's vision of Make in India gold monetization scheme, 24 carat purity, 999 fineness assuring absolute purity to the customers, the India gold coins are issued. Right? They are minted in India. Okay, they will be mobilized domestically only under the existing gold deposit and the gold monetization scheme. Which authority is minting these gold coins? It is MMTC. Correct. All right, it has been authorized by the central government to manufacture the India gold coins, and it will have on it the Ashok Chakra. This is also important. Okay, it will have on it the Ashok Chakra. All right.